Good morning, everyone. So last class we had the discussion related to 50 questions, few questions, and even we have completed the major portion. We are left with few topics. We'll quickly complete that. So please look into validity, this e-way bill provisions, page number 176. We completed accounts and records, and now we need to discuss e-way bill. So what is e-way bill? That is usually a document needs to be generated for the purpose of movement of goods from one location to another location. Whenever you are moving goods from one location to another location, that is taxable goods from one location to another location, you need to intimate the department what goods you are moving, from which location to which location you are moving, you need to intimate. And officer may intercept the vehicle anywhere and they will be checking whether this vehicle carries the goods which are reported in the e-way bill. Suppose if the goods are not reported in e-way bill, or if there is any breach of this provision, then the conveyance as well as goods will be liable for confiscation. That is, they will seize those goods. So that's the reason why e-way bill is a very important document, and a huge penalty is also being levied if the goods are not transported under a proper e-way bill. So see there, when the e-way bill has to be generated, it has to be generated before movement of goods. So before commencing the movement of goods, e-way bill is required. And is it applicable for taxable goods or exempted goods, or both? Only for taxable goods. It is not applicable for exempted goods. Also, it is not applicable if the value of the goods does not exceed 50,000 rupees. While counting the 50,000 rupees, we need to add GST. Usually value excludes GST, but this is the place where value is inclusive of GST. However, in case of two products, that is goods sent on job work and handicrafts, even if the value does not exceed 50,000, e-way bill is mandatorily required. So in case of job work and handicrafts, it is always required, and it has two parts. Usually e-way bill is required if the value exceeds 50,000. But what are the exceptions to it? Job work and handicrafts. Then every e-way bill generated will have two parts. Part A will contain the basic details of invoice, like consignor, that is seller, buyer, and what are the goods, HSN related to the goods, and then value of the goods. Like that, the basic details of invoice will be there in part A. In part B, there will be vehicle details, like in which vehicle they are transporting, who is the transporter, or if the mode of transport is by waterways or airways. All those will be there in part B. So it has two parts. Part A comprises of GST and details of supplier and recipient, document number and reason for transportation, and part B comprises of transportation details. And validity of e-way bill. Every e-way bill generated will have a validity which is 1 day for every 200 kilometers or part thereof, depending upon the distance traveled. For example, if the distance is somewhere like 420 kilometers, means first 200 kilometers 1 day, next 200 kilometers 1 day, and the remaining 20 kilometers 1 day. So therefore the validity will be counted as 3 days. 1 day for every 200 kilometers or part thereof. However, if it is a over-dimensional cargo, means the tail of the cargo is very big, or like big vehicles you would have seen in highways, which is parked in the highway, which will not be transporting. Usually night times only they do transportation, because they will cause too much of traffic. So that's why this over-dimensional cargo and multi-mode transportation. Multi-mode transportation means what? Up to one leg of the journey is by waterways, and thereafter by roadways, and again by railways, like the different modes, because we may not have the road facility throughout every place. So up to some distance road will be there, thereafter a stretch will be in waterways, and again it will be in roadways. So seeing last 3 days in Chennai, so maybe in Chennai also that situation may arise. So therefore up to some distance roadways, thereafter we need a boat to travel, then again we need vehicle to travel, like that. So that is called as multi-mode transportation. A leg of the journey is by waterways, then it will be coming under 1 day for every 20 kilometers for part thereof. For example, the same 420 kilometers you take. So 420 kilometers divided by 20. So that will be 21 days. So 21 days will be taken as the validity of the e-way bill. Which e-way bill? If it is over dimensional cargo or multi-mode transportation in which one leg is by ship. 1 day for every 20 kilometers or part thereof. In all other cases, 1 day for every 200 kilometers or part thereof. So this usually will be tested for MCQs, okay. And in one attempt they have made a question also based on this. For 3 marks they have asked one question. And usually the validity of e-way bill will be counted from the midnight of the day it is generated to the midnight of the next day as 1 day. For example, today morning e-way bill is generated, so today midnight only it will start, and today afternoon the e-way bill is generated, then also today midnight only the e-way bill validity will start. Today night 10 PM the e-way bill is generated, then also it will start from the midnight. It does not mean that the vehicle should start at the time only. No, the vehicle can start any time during the day, but the validity will be counted from today's midnight to tomorrow's midnight as 1 day, midnight to midnight. For example, when you go to hotel accommodation and all, 12 to 12 is the check-in time, check-out time, like that logic. So today midnight to tomorrow midnight will be 1 day, and always the e-way bill will be expired by when? Midnight. So because the validity will end by midnight, and next day by 8 AM the e-way bill has to be generated. Means what is the time limit? 8 hours. Within 8 hours from the expiry of e-way bill, the e-way bill can be extended, but we need to mention the reason why we could not reach, because the duration they have given is actually huge, 200 kilometers. What is the average speed of a lorry? 40 kilometers you take, 40 kilometers, worst come scenario 40 kilometers. And how many hours in a day they will do journey? 40 into 10 hours minimum in a day, 24 hours. Can't they do 10 hours journey? So 10 hours into 40, 400 kilometers they can travel in 1 day, but they have given only 200 kilometers. If the driver get down and if we start pushing the lorry and if we go also, he can go in 200 kilometers 1 day. So then why you are not able to complete your journey? There might be some genuine reason, and they need to highlight that reason, and then only the e-way bill gets extended. The validity of e-way bill may be extended within 8 hours from the time of its expiry, and validity will be counted from when to when? Midnight of the day when e-way bill is generated. And look into this FAQs on e-way bill. When e-way bill is not required, again this will be useful for MCQ purpose. They will give in which of the following cases e-way bill is not applicable, like that they will be asking one question. So first you remember non-motorized vehicle. Non-motorized vehicle means what? Bullock cart, horse cart, etc. Okay, so bullock cart, horse cart, definitely it will not make bigger journeys and all, na, hardly smaller distance only. That's why non-motorized vehicle e-way bill is not required. And goods transported between customs places. Okay, customs places means what? Like customs port, airport, land customs station, container freight station, etc. Or goods transported under customs supervision or customs seal. So in that case also e-way bill is not applicable. I mean, like anyhow the goods are moving under the control of customs, means customs authorities will have a control over the goods. These goods will not be manipulated. So that's the reason why e-way bill is not applicable when the movement of goods is under the control of customs. Then fourth point, transit cargo transported to or from Nepal or Bhutan. So goods are unloaded in India, and from India it will go to Nepal and Bhutan. So in that case it is called as transit cargo to Nepal and Bhutan, and that particular case e-way bill is not applicable. And next, movement of goods under Ministry of Defence. Why? Because if Ministry of Defence goods and all are transported and e-way bill generated, everyone will know what weapons they are transporting and what RDX or other things that they are transporting. It is a national threat. Due to that reason e-way bill not required when the goods belonging to Ministry of Defence is being transported. And empty cargo containers are being transported. There is nothing inside. It is just a container which don't have anything. So that's why e-way bill is not applicable in that case. Then consignor transporting goods to or from between place of business and a weighbridge. So say some goods are required to be loaded in a truck, and these goods are in loose form, like say metal scrap, iron scrap, etc. and all. So what they will do, first they will take the lorry to the weighbridge and they will see what is the weight of the lorry without goods, and again the lorry will go to the factory, they will load the metal scrap, etc. and all, and again that lorry will go to the weighbridge, and now they will take what is the weight of the lorry with goods. Weight of lorry with goods minus weight of lorry without goods, that will be taken as the weight of the goods, and accordingly the bill will be generated. So now from the factory gate to the weighbridge they are taking the lorry. In that lorry there are goods. Whether e-way bill is required or not required, in this case not required, provided the distance is within 20 kilometers. What if the distance is beyond 20 kilometers? definitely e-way-bill is required. So say this, consignor transporting goods to or from between place of business of a and a weigh bridge for a weighment at a distance of 20 kilometers accompanied by a delivery challan. Then point number 8, goods being transported by rail where the concern of goods is the central government, state government or local authority. What is the difference between 8th point and 5th point? 5th point, defense goods, any mode e-way-bill is not required. But 8th point is government goods transported by rail. Any department of central government, state government, local authority, if transported by rail, then e-way-bill not applicable. Then goods specified as exempt from e-way-bill requirement in the respective state or union territory. That is, there are some goods which are exempted as per the state specific provisions. Not that the goods are exempted. The e-way-bill is not required. For example, in this, in Gujarat, this millets and all will not be subject to any e-way-bill. Transportation of millets like this foxtail millet, varagarsi, kambu, etc. So these do not require e-way-bill like that. There is a provision like that, state specific. So Tamil Nadu also definitely can have this, like transportation of paddy, e-way-bill not required. Like that they can create some state specific exemptions for e-way-bill. And next, there are some goods given in the rules for which e-way-bill not applicable. LPG for supply to household and non-domestic exempted category customers. So which color cylinders? That red color cylinders are there, na? That transportation do not require e-way-bill. And the blue color ones, which is a commercial cylinders, that requires e-way-bill. And dealer of cylinders, whether it is red color or blue color cylinders, if the dealer is transporting the cylinders, that definitely requires e-way-bill. Others, if they are transporting other than the dealer, means consumer will take the delivery of the cylinder at that time. So for red color cylinders, e-way-bill not required, but for other cylinders, definitely, blue color cylinders, e-way-bill is required. That is from the consumer point of view. Whereas for dealer, when he is moving from one place to another place, whatever may be the case, for LPG, definitely e-way-bill is required. Okay, for dealer. Only for consumer they have given this relaxation. Keep that in mind. And first of all, is LPG coming under taxable goods? Yes, LPG is taxable goods because we have 5 petroleum products: crude oil, petrol, high speed diesel, and aviation turbine fuel and natural gas. But LPG is not there in that list, so which means LPG is subtracting GST. And kerosene oil is also taxable, but kerosene oil sold under public distribution system. Public distribution system means ration shops. In that case, e-way-bill is not required. Then postal baggage, like postal articles, then natural or cultured pearls, jewelry, goldsmith and silversmith wares. That is, these are all actually high value things for which e-way-bill is not applicable. Otherwise, if e-way-bill is generated, then it will become money heist. Okay, so anyone can steal that. That's the reason why for that e-way-bill not required. However, imitation jewelry is not jewelry. Imitation jewelry is cheaper, so not that much costly. E-way-bill is applicable. Jewelry other than imitation jewelry means gold jewelry, silver jewelry, etc. And used personal effects and household goods. Say for example, you are relocating from one place to another place. Say from Chennai to Bengaluru, you are relocating. The entire house needs to be shifted. All fridge, washing machine and cot, etc. and all. For that, you book a packer and mover. And these packers and movers will transport from one location to another location. Whether e-way-bill is applicable in that case? No. So because it is used personal and household effects. These are the cases where e-way-bill is not applicable. Then whether e-way-bill is required if the movement of goods is not a supply. Whether it is supply or not a supply, if it is taxable goods, definitely e-way-bill is required. It may be covered under supply or it may not be covered under supply. Example, goods sent on job work is not a supply because that goods we are going to receive it back. From head office to branch office, when we are sending the goods within the same state for which separate registration not obtained, it is not a supply. But even then we are moving the taxable goods. Sale on approval or return basis, today it is not a supply, in future it may become supply. But even then there is a movement of goods which is not covered under supply, so e-way-bill is applicable. Then in that case, what is the document? Delivery challan. Whenever there is movement of goods without involving supply, the document name will be delivery challan. Whenever it is under supply, the document name is tax invoice. But e-way-bill is always required in case of taxable goods if the value of goods exceeds 50,000 rupees. And Next, whether the 50,000 limit is for taxable goods or exempted goods? Definitely taxable goods. What if in the document there is both taxable goods and exempted goods in a single bill or invoice? There is both taxable and exempted. Take out the exempted, see the taxable, add the GST, and now see the value. If the value is more than 50,000, e-way bill required. What if in that goods sent on job work handicrafts is there? No need to do any computation. Always e-way bill is required. While computing invoice value, whether GST to be included or not, GST to be included. And who will generate e-way bill? Concentrate. If I am the supplier, you are the recipient. If I am registered, I will generate e-way bill. Suppose if I am unregistered and you are registered, then you will generate e-way bill. What if we both are unregistered but the goods are taxable goods? Then the transporter has to generate e-way bill. But what if the transporter is uneducated, he don't know how to generate e-way bill? Either supplier or recipient by getting unique enrollment number can generate e-way bill. Is it clear or not? First priority, supplier, registered supplier. Second priority, registered recipient. If the supplier is unregistered, registered recipient. Third priority, transporter. Transporter, definitely they will have a UEN. Definitely transporter. If they are registered, they will have a GSTIN. If they are unregistered, they will have a UEN. Using that, they can generate. What if they are not generating because they don't have any idea about this and all? Then the supplier or recipient, by getting a unique enrollment number, has to generate e-way bill. Okay, and e-way bill is mandatory document. Someone has to generate. Otherwise, our goods is only in risk. We will tell, okay, let the transporter generate, but that idiot also not generated. What will happen? Our goods will be at risk and the goods will be seized. That's where many transporters will have this risk. They will transport, and when the goods get seized, they will pay bribe, etc. and all, and they will come and complain to us. Sir, one officer stopped, sir, and they have taken, etc. What should I do? Idiot, you should have generated the e-way bill. You know that now. You have not generated e-way bill. So don't come and complain to me. You suffer and don't touch my goods because of this. Got it? So therefore, definitely this consequence. Tomorrow, what the driver will tell, okay, I will also not pay any amount. Then the goods will be seized. Our goods will be confiscated and seized. That's the reason why e-way bill is always required, whether it is like under supply or without supply, provided it is taxable goods. Okay, and registered person, unregistered person, or transporter will generate e-way bill. Now listen to this. Suppose if the value of each consignment does not exceed 50,000 rupees, say there are 10 consignors who are sending their goods in a single lorry, and these 10 consignors value of the goods does not exceed 50,000. Now all these goods are handed over to the transporter. You are the transporter, you are transporting it in a single lorry. Even though individually each consignment value does not exceed 50,000, but cumulatively if you see the value exceeds 50,000, then what is the implication on you? You have to generate individually for every consignment one e-way bill, plus your transporter. Separately for these 10 consignments you need to generate separate e-way bill, plus one consolidated e-way bill also to be generated. Consolidated e-way bill is for in a particular lorry, if they are transporting goods belonging to multiple persons, means multiple consignments, all these consignments or all these e-way bills put together, one consolidated e-way bill should be generated by the transporter. Suppose if the supplier has not generated, that individual e-way bill also transporter only should generate. Read that. Transporter should generate the e-way bill as form EWB1 or EWB2, where all the consignments in the conveyance individually, that is each invoice or delivery challan, is less than or equals to 50,000. That is individually each consignment value does not exceed 50,000. But in aggregate, in total, all documents put together exceeds 50,000 rupees. Then blocking of e-way bill. So e-way bill cannot be generated. Already we discussed the two places where e-way bill cannot be generated. Where number 1, 88C and 88D. That is your liability in one is greater than 3B and they gave an intimation and you did not pay it within 7 days. So till the time you make the payment, you cannot generate GSTR1 and GSTR3B continuously for 2 periods, then e-way bill will be blocked. Same way, ITZ also. You have availed the ITZ in GSTR3B more than 2B and a notice has been given and still you have not made the payment. 1 and 3B cannot be generated continuously 2 months. So e-way bill will be blocked. So what you need to remember, GSTR1 not filed for 2 consecutive periods. GSTR 3B not filed for 2 consecutive periods. Or composition scheme, that CMP 8 is there na, that is not filed for 2 consecutive periods. Or if your registration is suspended, in these cases you cannot generate e-way bill for what? Outward supplies or inward supplies? Outward supplies. Not only you but also your recipient but or any other person, for your outward supplies e-way bill cannot be generated. The restriction is only for outward movement. Now I did not file return for consecutive 2 months. My e-way bill is blocked. Now I am making some purchases. For that purchases, is e-way bill possible? Yes. That is inward supply. For that it is possible. Read that. E-way bill cannot be generated if the return, which return? Either GSTR 1 or 3B or CMP 8 is not filed for 2 consecutive tax periods. And e-way bill generation facility is blocked only with respect to outward movement of goods by a registered person who has not filed returns above. However, e-way bill can be generated in respect of inward supplies of the said registered person. Then next, other points, in case of bill to ship to transactions. So usually in bill to ship to transaction there will be 2 supplies. How there will be 2 supplies? From the supplier to the billing address is number 1, and from billing address to shipping address will be number 2. Even though there are 2 separate movements, 2 separate supplies, but there is only one e-way bill that is required. So in that e-way bill itself they need to mention bill to ship to address, both the address. So in case of bill to ship to transaction, one e-way bill is sufficient and it can be generated either by consignor or consignee. Then multi-vehicle updation is possible in e-way bill. That is, once the e-way bill is generated, in part B what details will be there? Vehicle details will be there, and that vehicle details can be updated, because if there is a breakdown of the vehicle, another vehicle will come. In that another vehicle we load the goods and we will be taking that another vehicle. Now in that case, in e-way bill old vehicle only will be there. Can we update that vehicle number? Yes, definitely part B can be updated. That is called as multi-vehicle updation. It is easy to be done. You don't have to generate a new e-way bill. Second, what is the validity of the e-way bill? I mean part B. What is the time limit within which the part B has to be entered? That is, part A details we entered and that is completed. Means part B should be done within 15 days. So which means that once the invoice is generated and invoice details are entered for e-way bill, the movement should commence within 15 days. Means part B contains what? Vehicle details, that has to be updated within 15 days. See there. So updation, part B should be updated within 15 days from the updation of part A. And every e-way bill, once part B is also entered, then it is called as e-way bill generated. First part A details they need to enter, within 15 days they need to enter part B details. After entering part B details also, then it will be called as generation of e-way bill. Once e-way bill is generated, it will be intimated to the recipient also, because the recipient GST will be mentioned, and the recipient should accept that e-way bill. What is the time limit within which they need to accept? Within 72 hours from the time it is generated or the date of delivery, whichever is earlier. See there, e-way bill should be accepted by recipient within 72 hours from generation or delivery of goods, whichever is earlier. And part B, who can update? Either supplier can update part B, or recipient can update part B, or transporter can update part B. If it is own vehicle, my own vehicle, definitely I will update the part B. If it is your own vehicle, you will update. So it is not our vehicle, one third party transporter vehicle, then the transporter will enter the part B details. Part B may be updated by supplier, recipient or transporter. See this, what are the documents required in case of movement of goods? Whenever there is movement of goods, and if it is taxable goods and that is covered under supply, what is the type of the document? Tax invoice plus e-way bill. And suppose if it is without supply, then delivery challan plus e-way bill. If it is exempted goods, then under supply it is bill of supply, and without supply it will be called as delivery challan. So definitely some document should be there under the movement of goods, otherwise the goods will be seized. And e-way bill can be cancelled, yes. Within 24 hours of its generation, e-way bill can be cancelled, not a problem. But it should not be verified by the proper officer, because what will happen? So the goods are sent and the goods would have been verified by the proper officer, and we will try to cancel it here. If we try to cancel it here, the e-way bill portal will spit on our face, stating that already the officer has verified it. Why are you cancelling it? So you cannot cancel it. So you cannot manipulate by doing this. So genuine cases, you can definitely cancel the e-way bill within 24 hours. For example, you send the goods, you started sending the goods, and what happened? The customer has cancelled the order. When the customer has cancelled the order, now you will drop sending the goods, but already invoice would have been prepared. So now can the e-way bill be cancelled? Yes. Cancel the e-way bill as invoice is already prepared. Raise a credit note so that you can cancel the particular invoice. So that is about this. And next, look into registration chapter. So these are all the points we have in e-way bill. In registration chapter, already we discussed about threshold limit, etc. and all. So section 22 talks about threshold limit for registration. That is, whenever aggregate turnover in a particular financial year exceed the threshold limit which we discussed previously. What is that threshold limit? So take page number 137. We discussed now 10 lakhs threshold limit, 20 lakhs threshold limit and 40 lakhs threshold limit. Whenever aggregate turnover exceed the threshold limit, so definitely that person is required to get registered. And 23 talks about exemption from registration. 3 cases there is exemption from registration. Also this point we discussed, that is aggregate turnover during current year does not exceed threshold limit, and making supply through e-commerce operator, if they obtain UEN only intra-state supplies, that point already discussed. And compulsory registration under 24 also we discussed yesterday. Look into compulsory registration under 22. Under 22 also there is one compulsory registration. If you are already registered under the earlier indirect tax law, you are also required to get registered under GST. Also, second case, whenever there is a transfer of business, the transferee has to obtain the registration. Whenever there is amalgamation, merger or demerger in pursuance of court or tribunal, that is NCLT or High Court, then the new company gets formed now. They get a ROC, registration, like ROC will give certificate of incorporation. From that date, they have to get registered. Who? The new company which is formed after amalgamation, demerger, etc. So these 3 cases, registered under earlier indirect tax regime, transfer of business, or transfer pursuant to scheme of amalgamation or merger. And what is the difference between this compulsory registration under 22 versus compulsory registration which we discussed I formats? What is the difference between these two? In case of this compulsory registration, section 24, that is I formats, they have to register and they cannot make application for cancellation of registration. Whereas in case of section 22 compulsory registration, they have to register, but they can make application for cancellation if their turnover falls below threshold limit. They can make application for cancellation of registration if their aggregate turnover falls below threshold limit, but that facility is not there. For 24, irrespective of threshold limit, a person is definitely required to get registered. And what we discussed is section 23 overrides section 24, correct? Because once a person is exempted from registration, they are exempted from registration and they are not at all required to get registered even though covered under 24. For that we discussed one example also. There is an advocate. That advocate outward supply is fully covered under RCM. So therefore he is exempted from registration. That advocate will make some import of services. Even though on import of service they need to pay GST under RCM, and every person liable to pay GST under RCM is compulsorily required to get registered, but that registration is not applicable for them because section 23 is applicable to them. Section 23 says if you are exempted from registration, you are not at all required to get registered. So these 3 we discussed last class. And look into section 25. Section 25 talks about procedure for registration. Procedure for registration, that is, you have to just remember the dates, etc. here, because for MCQ only it will be useful. So total we have 6 forms per 1, 2, 3, 4, 5, 6. 1 is for what? Application. 2 is for what? Acknowledgement. Once you make application, you will get a acknowledgement, and thereafter you will get a notice, REG 3. And after notice, you have to give reply to the notice, and after reply, they have to either accept the application and grant you registration, otherwise they need to reject the application. But always here the time limit is 7 working days. Means once you make application, you will get the acknowledgement immediately, and after that within 7 working days, either you need to receive the notice or you need to receive the certificate of registration. So see there, REG 12, REG 3 or REG 6. What is the time limit? 7 working days. So which means once we make application, within 7 working days, either we need to get a notice or we need to get certificate of registration, REG1 to REG3 or REG1 to REG6, 7 working days. Same way, say we got a notice, we need to give reply to the notice. What is the time limit within which we need to give reply to the notice? 7 working days. Again, when we gave reply to the notice, what is the time limit within which either they will reject the application or pass the certificate of registration? Again 7 working days. So REG3 to REG4, 7 working days. REG4 to REG5 or REG6 is 7 working days. Is it clear? Then next one, we have to furnish the bank details. So at the time of registration also we can furnish the bank details, or at a later point of time also we can furnish the bank details. What is the time limit within which we need to furnish bank details after registration? Within 30 days. From when? From the date you got the registration certificate. See, this 30 days is not great to remember. So, but from which date you need to remember, because in exam they will be giving 2-3 dates, and from which date you need to start is very important. So 30 days from the date you got the certificate of registration, or the date on which you are filing first return, GSTR1, whichever is earlier or whichever is later, whichever is earlier. Okay, and this point already tested. So in the past exam also once. So it is a very important point. What is the time limit within which the bank details needs to be furnished? Number 1, A, that is date of registration, certificate of registration plus 30 days, or B, that is date of filing, due date of filing or date of filing first return, date of filing first return, whichever is earlier. Which first return? GSTR1. And this provision is not applicable in case of TDS and TCS. So those who are required to deduct TDS and TCS, this provision is not applicable, which means that they need to submit the bank details at the time of registration itself. And above procedure for registration is not applicable to. So whatever we discuss, this REG1 to REG6, all these things is not applicable to not you. Okay, not applicable to not you. See this procedure and tell not you. So who is that? NRTP. O for OIDR supplier or OMG supplier. OMG means online money gaming, and T for TDS TCS deductor. U for UIN holder. Yesterday we discussed now unique identification number holder. For these 4 people, this procedure for registration is not applicable. Then there are some times physical verification will be conducted, then only registration will be granted. Usually for registration, physical verification is not mandatory. By default they will be giving the registration, but in few cases they will grant the registration certificate only after conducting physical verification. What are those cases? Number 1, you made the application. Please concentrate, it is a very important theory question. So when you will be required to undergo physical verification, number 1, you made an application without selecting Aadhaar authentication. Usually at the time of making application for registration, Aadhaar authentication is an option which can be selected or may not be selected. Suppose if you make application without Aadhaar authentication, which means they will do physical verification and then only they will grant registration. Number 2, you made the application with Aadhaar authentication, and that particular application is forwarded to the officer, and officer feels like, that is, you made application with authentication and you completed the authentication also, but officer feels like, based on risk parameters, you are living in a area, locality which is prone for tax evasion. For example, you are located in Saukarpet, or you are located in Pursevakam, or you are located somewhere in T Nagar, Pondi Bazaar. These are all some areas which are prone for evasion. Reason, so there definitely you cannot identify who is the trader, which person is in which place, etc. and all. So that's the reason why in that case they will tell, okay, even though you did the authentication, but you are living in an area which is prone for evasion, I will visit that place, check your office, and then only I will grant the registration certificate. So that is physical verification based on risk parameter basis. Number 3, you made the application with authentication, but you have to complete the authentication within 15 days. You have not completed within 15 days. Then also it will lead to registration subject to physical verification. Is it clear? So what are the 3 cases, pa? You made the application without authentication. Number 2, application with authentication but not completed within 15 days. Third, you made application with authentication and it is completed, but officer requires physical verification based on risk parameter basis. So in all these 3 cases, physical verification of place of business, will be conducted. However, in this case, in these 3 cases, it should be conducted before granting registration. In other cases, they can do even after registration. See, these 3 cases mandatorily without doing physical verification, they will not grant registration. In other cases, they will grant registration certificate, and at a later point of time also randomly they can come and inspect your premises. Physical verification can be done even afterwards also possible. Got it? But these 3 cases mandatorily before granting the registration. Now, what is the time limit within which the physical verification should be completed? Listen, suppose if they are doing the physical verification before grant of registration, means in these 3 cases, what is the time limit within which they need to complete physical verification and grant registration? 30 days from the date of application. So today you make application, within 30 days they need to complete the physical verification and grant registration. Now in the 30 days, at least 5 working days before, they need to give you the report of physical verification, upload the report of physical verification. Example, say this, on 1st of October, you made the application. What is the time limit within which they need to do the physical verification and grant registration? 31st October, within 30 days. Now at least 5 working days before, they should have completed the physical verification and uploaded the report of the physical verification. At least how many days before this 30 days? 5 working days before they should have done the physical verification and uploaded the report of physical verification. Say this, where the physical verification of place of business of a person is required before the grant of registration, the proper officer shall get such verification done, and the verification report along with the other documents including photographs shall be uploaded at least how many days? At least 5 working days prior to the completion of the time period specified, that is 30 days from the date of application. So what is the overall time limit? 30 days. In that 30 days, at least 5 working days before the overall time limit, they should have uploaded the details. Suppose if they granted the registration, and after granting registration, if they want to do physical verification, then they granted the registration. After granting registration, if they want to do physical verification, then what is the time limit? 15 working days from the date when they do the physical verification. They need to upload the report of physical verification. Why this report and all should be updated? Otherwise, how do we know whether they visited our premises and whether they have, like really visited? Just like that they can tell, na, I went there, sir, but the person was not there, like that. So they have to visit, they need to take photographs, etc. and all, and they need to upload it. Where the proper officer is satisfied that physical verification of place of business is required after the grant of registration, he may get such verification of place of business done, and the verification report along with other documents shall be uploaded within 15 working days following the date of such verification. Mostly this will be required to write. So usually they will ask a question like this. So write a brief note on registration subject to physical verification and what is the time limit within which the details of physical verification needs to be uploaded in the portal, like that they will ask. So first you need to write these 3 points when physical verification is required and these 2 time limits. What is the time limit within which the report has to be uploaded, the physical verification report has to be uploaded. Then look into this Aadhaar authentication in the next page. As I already told you, at the time when you make application for registration, you have 2 options. Option 1, either you need to get the Aadhaar authentication done or you can make application without Aadhaar authentication. Suppose you have selected Aadhaar authentication, then what will happen? As soon as you select this option, after submission of REG1, that is form when you submit, you will get a link in your mobile number and email. You click on that link, you need to enter the OTP, and now there is something called as biometric Aadhaar authentication. Biometric Aadhaar authentication means that even your fingerprint scanning and retina scanning is also required for the purpose of granting the registration. That is called as biometric Aadhaar authentication. Biometric Aadhaar authentication is now extended to all states and union territories for the purpose of completion of registration application. Okay, so once you make the application by selecting Aadhaar authentication, you will get a link in your mobile number and email and you need to complete the Aadhaar OTP. So in mobile you need to click and it will go to one window, and in that window your camera will be open, and in your camera you have to just keep your mobile like this, and it will scan your retina, and it will do the authentication from the Aadhaar database. Okay, that is this. And what is the time limit within which it should be done? This other authentication has to be done within 15 days from the date you submitted the application. Say you completed the authentication, that is the date on which you really submitted the application. The date of authentication is the date of application. From there, within 7 working days, they have to grant registration to you. Got it? Usually, what is the time limit within which registration should be granted? Within 7 working days from the date of application, the registration should be granted. But what is the date of application? The date of authentication is the date of application. Registration certificate to be granted within 7 working days of authentication, otherwise deemed to be registered. And in this case, whether site verification required or not required? Not required. Why? Because you completed the other authentication, that's why site verification not required. Suppose if you fail to authenticate within 15 days from the date of application, then on expiry of 15 days, it is deemed that you made application without authentication. Because what is the statutory time limit to do the authentication? 15 days. Thereafter, it will be like you made application without authentication. So, when you make application without authentication, when you made application without authentication, or you made application with authentication but not completed within 15 days, or you completed but based on risk parameters, in all these 3 cases, officer will conduct physical verification and grant the registration. Officer will conduct physical verification of place of business within 30 days of application, and they will be granting the registration in this case. Is it clear, pa? Understood? And whenever you have submitted application without authentication, after submission of the application, you need to visit the nearest facilitation center for the purpose of giving your other details. See, you did not do other authentication, but at least your permanent account number and your ration card and other address proofs you have to submit. So that you need to visit the facilitation center where verification of photograph and verification of original copy of documents is completed. This is also an amendment. Then what is the time limit within which they need to do physical verification and grant registration? Within 30 days. Within 30 days they need to grant registration after physical verification. And after physical verification of place of business, registration certificate will be granted. At least they should have given notice within 30 days. What is that? We visited your premises and there was no one. This premises we could not identify. So at least they should have given notice, or they should have given the certificate. Proper officer failed to issue notice within 30 days. Application is then deemed registration will be done. So we have some places where we have deemed registration. This can be asked as a theory question. So what are the cases where registration is deemed to be granted like that? Okay, you tell me, pa, based on the discussion what we have made so far, you tell me. So what are the 3 places where there is physical verification? Application without other authentication. Number 2, application with authentication but not completed within 15 days. Then application with authentication and completed but based on risk parameters requires site verification. In these 3 places, what is the time limit within which they need to grant registration? 30 days from the date of application. And for that 15 days point, the 30 days will count after 15 days. First 15 days there is a time limit for authentication. After that only 30 days will count. So 30 days from the date of application, correct? Huh? Within 30 days from the date of application, if the registration is not granted, then deemed registration. Okay, wow. So the same information you can write in both the places. If you get a question, what are the situations that leads to physical verification? Write these 3. What are the cases where registration deemed to be granted? These 3, if the registration is not granted within 30 days. See this. You made application without authentication, registration not completed within 30 days. You made application with authentication but not completed within 15 days. Then also within 30 days on expiry of 15 days if registration not granted, deemed registration. You made application with authentication, completed within 15 days, based on risk parameters require site verification, and then the registration not granted within 30 days, then also deemed registration. Okay, va? 3 points easily you can write. Then next, normally what is the time limit within which registration should be granted? 7 working days from application. If not granted, then also deemed registration. So you made application with authentication completed, and normally they have to grant within 7 working days, otherwise it will be deemed registration. Say you made application, within 7 working days they gave a notice and you gave a reply to the notice. Thereafter, what is the time limit within which they need to grant? 7 working days. If not, deemed registration. So they gave a notice and you gave a reply within 7 working days if the registration is not granted. You understood these 5 points? So these 5 points you need to write, that when registration is deemed to be granted. Okay, Vapa? Then what will be considered as the date of application? What will be considered as the date of application? The date on which you did the Aadhaar authentication, or 15 days, whichever is earlier. So date of authentication or 15 days from submission of part B, whichever is earlier, shall be deemed to be the date of submission of application. Physical verification shall be conducted within 30 days from submission of application, and that is 15 days from REG1 if authentication is not done. So the 30 days will be counted after 15 days. And next, who are required to undergo authentication and who are not required to undergo authentication? Easily try to remember. If you are an individual, every individual should undergo authentication. But if you are not a citizen of India, authentication not applicable because you don't have an Aadhaar card. Foreigner, non-resident is not having an Aadhaar card, but they may register na. Example, NRTP, they may register non-resident. So therefore, in that case, Aadhaar authentication is not applicable. What's the first point? Individual who is not a citizen of India. This is another important theory question. When Aadhaar authentication is not applicable, number 1, individual who is not a citizen of India. Then in case of HUF, who should undergo? Karta. Then who is not required to undergo? So therefore, members or co-partners other than Karta of a HUF. Next, third, in case of partnership firm, who should undergo? Which partner? Managing partner. But who is not required to undergo? Other partners. Partners other than managing or whole-time partner not required to undergo authentication. Number 4, in case of company, body corporate, trust, etc., who should undergo authentication? Authorized signatory. What about others? Not required to undergo authentication. So therefore, members other than authorized signatory. Okay, Vapa? So tell me first 4 points. Individual who is not a citizen of India, members other than Karta of HUF, partners other than managing or whole-time partner, then members other than authorized signatory of a company, body corporate, etc. Then next to 4, government and its family members. Central government, state government department, then local authority, statutory body, PSU. Statutory body means government authority, government entity. Then PSU. 4, CGST department, local authority, PSU, statutory body. Last, UIN holder. Okay, these people are not required to undergo authentication. Whether they are required to undergo authentication at a later point of time? No. Before registration also not required. After registration also not required. The above persons are not required to undergo authentication even though they have already registered. But others, initially if they have not went for authentication, but after registration they need to do the authentication. So, but other than above, if they have already registered, should undergo authentication. Then next, what is the time limit for making application for registration? Generally, what is the time limit, Pa? What is the time limit within which we need to make application for registration? 30 days from the date you are liable to register. But in case of CTP and NRTP, at least 5 days before commencement of business. Ayya, not 5 working days, it is 5 days. See, we have come across 7 working days, then 30 days, and next 5 working days, 15 working days. What is all these things? You should remember. Mainly in registration chapter, there are a lot of time limits. You need to just create a page, and in that you need to write all those time limits. First, So for registration, 7 working days, and registration subject to physical verification, 30 days, and physical verification before registration, at least 5 working days before. Registration, that is physical verification after registration, 15 working days from the date of physical verification. And next we have to see time limit for application within 30 days from the date you are liable. And next, in case of CTP and NRTP, time limit for application 5 days before commencement of business. Like this, all these points you have to write and keep it so that it will be easy for you, will not get confused. Okay. Then, so what is the usual time limit for making application for registration? 30 days from the date they are liable to get registered. But in case of CTP and NRTP, at least 5 days before starting the business. Then look into next one, section 26, deemed registration. So far what we have seen is only one section, that is 25. The entire procedure for registration is in 25. Mostly in 25 they will be asking 3 theory questions, any of these 3 theory questions. What are the cases where physical verification is required, who are not required to undergo authentication? What are the cases where registration is deemed to be granted? If these 3 questions they are not touching, they will be asking question on time limits in MCQs. Then section 26 is a simple section. If you are registered under CGST Act, you are deemed to be registered under SGST Act and vice versa. Then next, section 27, special provision for CTP and NRTP. Who is CTP and NRTP? Casual taxable person, non-resident taxable person. Are they compulsorily required to get registered? Yes, yes. In compulsory registration visa, in that I creations, C for casual taxable person other than handicrafts, N for non-resident taxable person, we discussed, which means they are compulsorily required to get registered. And just now we saw what is the time limit within which they need to make application for registration? At least 5 days before commencement of business. Whether the registration granted to them is permanent registration or temporary registration? Temporary registration. What is the maximum period for which registration is granted to them? 90 days, which means number of days they are requesting or 90 days, whichever is earlier. What if 90 days over, but still they wanted to continue? Then they can make application for extension. What is the extension? For a further period not exceeding 90 days. Means overall what is the maximum time limit? 180 days. But in MCQ, if they ask what is the time limit, like what is the expiry of registration for CTP or NRTP, you select the option as 90 days. With extension like that if they give, then only you select the option as 180 days. Be careful, they will give both. 90 days also they will give, 180 days also they will give. Registration validity maximum 90 days, plus it can be extended for a further period of 90 days. Wherever I use these words plus and all, don't write in exam plus. You write in exam 90 days which can be extended for a further period of 90 days, like that. This plus and all for you to easily remember I gave you, but you should not write that in exam because they will not understand what is that plus, minus, etc. and all. Next, on sufficient cause being shown by the said registered person, proper officer may extend the said period of 90 days by a further period not exceeding 90 days. And remember, during this period, you have to deposit advance tax. Why? Because CTP and NRTP don't have a physical place of business, which means they will enter the state, they do the business and they will leave. Then in that case, GST liability is missing now. Due to that reason, they have to deposit advance tax based on their estimated tax liability. So they have to estimate how much is their tax liability. So say for example, they are doing business for some 40 days. How much could be their sales into GST minus what is the ITC, estimated ITC. That estimated tax liability they need to deposit as advance tax. And their actual liability, advance tax will be taken. Still if there is any balance, they can claim refund. Suppose if there is any shortfall, their liability is 10 lakhs, but they have deposited 4 lakhs, means that 6 lakhs they have to pay. Say this, at the time of submission of application for registration, CTP and NRTP make an advance deposit of tax for an amount equal to estimated tax liability. Is it estimated gross liability or estimated net liability? Estimated net liability. That is after adjustment of estimated ITC for the period for which registration is sought. Suppose if they are going for extension, even for extended period, again they need to make the advance deposit of tax. And where this advance tax will be deposited? Electronic cash ledger. Electronic cash ledger, which shall be adjusted against the final liability. Suppose if there is any excess balance in the cash ledger, can they get refund? Yes, they can claim refund and no time limit to claim such refund. And this refund is not subject to unjust enrichment. Unjust enrichment means they don't have to prove that they have transferred the burden to next person. Means no need to prove any documents. Got it? No need to submit documents. By default they will get. It is their money. They will always get. What if there is a shortfall? That anyhow they need to pay that. Then say this. This may be tested. See, whatever we have seen here, MCQ purpose. Or they can create a question about computation of estimated tax liability. And here, distinguish between CTP and NRTP, like that they can make a theory question. So, distinguish between CTP and NRTP. What is that? CTP? Adu I know. Who is that? Person who is occasionally undertaking transactions involving what? Supply of goods or services in the course or furtherance of business, whether as a principal or agent in a state or union territory where he has no fixed place of business. Is a NRTP? Occasionally undertakes transactions, and in India where they don't have fixed place of business or residence in India. CTP undertakes transaction in the course or furtherance of business, but that is not given here, no such requirement. And casual taxable, for example, during this Ambani's wedding, lot of people came from outside India, and that people who came from outside India did the performances. John Cena came, and even one pop singer also, Justin Bieber, then one female also is there, Rihanna. So all these people came. What? For what? Wishing the couple a happy married life. No, they come here for performance. They'll perform and they'll take money and go. And is it in the course or furtherance of business? No. No, not that it is not in the course or furtherance of business, but they came, they participated in the wedding and they took the money and went. Are they required to pay GST? Yes, they have to. They have to definitely get an NRTP registration and they need to pay GST on that. They would have paid GST, sir. I don't know that. Maybe we have to apply RT and we need to get it. But I think definitely they would have paid. So they have to pay even though it is not in the course or furtherance of business. They are example of NRTP. Then CTP has a permanent account number, but NRTP no permanent account number. Then how sir they will register? Using their passport. They are coming from outside India to India na. Without passport how they will come? So they will have a passport. Using their passport they will do the registration and pay GST. And CTP application for registration in REG 1, but NRTP REG 9. I told you the regular procedure is not applicable for not you. In that N is NRTP. And what is the returns to be filed by CTP? Regular returns 1 and 3B. But NRTP is required to file GSTR 5. These are the points that you need to write if you get a question, theory question, distinguish between CTP and NRTP. Then look into the next section, that is section 28. Section 28, 29 and 30. 28 talks about amendment in registration, 29 cancellation of registration, and 30 revocation of cancellation of registration. Okay, and definitely you would have avoided reading this when you have read it for exam. So please listen, concentrate, we will learn it. Worst come scenario, at least if you are getting a question on this, you should be able to write. That's why, because this is an untapped area. These three sections 28, 29, 30 is untapped area. If at all they wanted to ask, definitely they can make questions on this. That's why 28 is what? Amendment in registration. Initially you would have submitted some details and there is change in those details, then it will be amendment in registration. So you have to make an intimation to the department what changes in details could happen. Change in name of business, change in address of the business, or change in the top management like authorized signatory, etc. Change in mobile number, change in email ID, change in bank details, or change in the goods or services that you deal with. There are many changes. All these changes needs to be intimated, and these changes are divided into 3. If there is a change that leads to change in permanent account number itself, then don't go for amendment in registration, go for new registration and cancel the old registration. Why will there be change in permanent account number? When you change the name of the business, usually in the permanent account number, so this 5th alphabet is nothing but the name of the company. Name of the company, first alphabet will be there. Suppose if you change that name, then automatically the permanent account number will change. Okay. So for example, our company name is THARUN'S Brainery Private Limited, and therefore suppose this THARUN'S Brainery, it's like individual is there. So why THARUN should be there? And if it is a entity, so THARUN should not be there. So Brainery Private Limited, like that we modified. Then T will change to B. Then permanent account number will change. Everything same, just the name of the company we changed. Even then we need to get a new permanent account number and cancel the old registration, and new registration needs to be obtained. Is it clear? Whether we need to cancel the old registration and get new registration, or get new registration and then cancel the old registration? Get the new registration and then cancel the old registration, because ITC should be transferred now. Cancellation of registration, ITC should be transferred. So transfer of business. Otherwise what will happen? The ITC will be lapsed. So therefore I will transfer the ITC to new registration and then I will cancel the old registration. You understood? Or change in constitution of the business. Say so far partnership firm. So in permanent account number, the 4th alphabet will be F, and now the firm will become company. Then it will change to C. Then also we can make an application for new registration, not amendment in registration, because the permanent account number will change. Then next one, if there is a change that is not leading to change in permanent account number, but it is change in core fields. What are core fields? Change in name, change in address, change in top management. These 3 core fields, if there is a change, then it is subject to approval by the proper officer. Without approval of proper officer, the change cannot take place. But any other change means what? Change in mobile number, email ID, bank account, automatically it will get updated in the portal when you make the amendment in registration. Approval of the officer is not required. See this. Non-core field, submission of application for amendment on the common portal, deemed approval, whereas core field, name, address, top management, approval of proper officer is required. Such amendment shall take effect from the date of occurrence of event warranting such amendment. If there is any change in constitution of business that requires change in permanent account number, amendment is not possible and they need to obtain a fresh registration. And next, whether the amendment in registration is prospective or retrospective? Prospective. Whenever the change happened, that date only whenever the change happened, that date only it will be applicable. However, if you want retrospective amendment, it is subject to approval of the commissioner. Retrospective amendment in registration is possible only with the order of the commissioner. Is it clear? Usually prospective. Retrospective means backdated amendment. If you need, commissioner should approve. What is the procedure for amendment in registration? First you need to make a application for amendment in registration. This form number is not required, you don't have to remember. I have given, but you don't have to remember. Just remember, you need to make an application for amendment. What is the time limit within which you need to make application for amendment? That you need to remember, within 15 days from the date of change. Whenever the change happened, within 15 days you need to make the application. Once you make application, within 15 working days, either they will be doing the amendment or will give the notice. Why are you changing? Like that they may give a notice, or they will do the amendment registration. What is that time limit? 15 working days. For you, all days are working days, but they will not work like that. So therefore for them, for you, whether it is raining or tsunami or flood, whatever it may be, you have to prepare, correct? Last 3 days, what have you achieved? I tell you, that everyone was enjoying the 3 days, but you sat here and you were preparing for your exam. And imagine, have you not attended this class, what would have happened? Definitely in 4 days you would not have completed the GST revision. That 3 days would have been wasted. You got it? So sometimes against all odds you need to prepare, and that's why I did not cancel. So many people were asking, my staff and all were telling, sir, raining sir like this, why are you conducting class? It's okay, because if I take class only, you will sit and attend. And even in YouTube also continuously around some 200-250 students were watching the lecture. So therefore it is a dedication that it's anyhow time waste, because rain, what you will do? You will go and stop the rain, huh? No, right? So you will enjoy that, but the problem is that the time is wasted. Got it? So like that you will work like donkeys and pigs daily. For you no working day, but department is not like that, government. So therefore 15 working days, not 15 days, 15 working days. So when the taxpayer is making application, 15 days. Now within 15 working days, what they should do? They need to give a notice. Within a period of 15 working days of submission of REG 14, that is application, they need to give a notice. And always when the notice is given, what is the time limit for reply to the notice? 7 working days. So we need to give reply within 7 working days. Thereafter, within 7 working days, either they need to do the amendment or reject our application. Okay, va? So within 7 working days of receipt of submission of the assessee, that is, they need to either reject the application or they need to pass the order. So what is the time limit within which they will pass order? First, from application date within 15 working days, or from reply date within 7 working days, else deemed to be amended. If they have not taken any action, deemed to be amended. And in case of amendment in non-core fields, after submission of application, amendment shall take place in portal subject to OTP verification. So we completed this. Now cancellation of registration. This entire page you don't have to read, because I simplified that in the next page. What are the reasons that leads to cancellation of registration? What are the reasons that leads to cancellation of registration? Remember this mnemonic: frantic violation of bailer. Frantic violation of bailer. So mostly in theory question it will be asked, what are the situations that leads to cancellation of registration? Because in your MTPs also, 2-3 MTPs they have asked this question. What are the reasons that leads to cancellation of registration, like that? First, frantic violation of bailer. F. F for fraudulently obtaining registration. Means what? You have given fake details, all fakes like address, Aadhaar card, etc. and you got the registration. That is fraudulently obtaining registration. Number 2. R for returns. Returns not filed for continuous 6 months or 2 quarters. Okay, 6 months, which is nothing but 2 quarters or 2 quarters. Then F or A for annual return. Who? Composition scheme. Annual return of a composition scheme dealer not filed within 3 months after due date. What is the due date for them to file? June 30th. Next year, June 30th. Thereafter, within 3 months, if they are not filing, then also their registration will be cancelled. Correct? Annual return not filed within 3 months from the due date for a person opting for composition scheme. F or A. N. N for no longer liable to be registered. No longer liable to be registered means what? Your aggregate turnover falls below the threshold limit. Okay. Then NT. Transfer or discontinuance of business. And next I. Invoice without supply or incorrect invoice. You have not given the invoice properly. Or C. Change in constitution of business. What is that? Individual to firm or firm to company, like that. Okay. Change in the constitution of business. Constitution means what? Sole proprietorship, partnership, company, body corporate, like that. That is change in constitution. So frantic. So tell me, what is that frantic? F for fraudulently obtaining registration. Returns. Returns not filed within for continuous 6 months or 2 quarters. Annual return not filed within 3 months from the due date. By whom? By a person opting for composition scheme. N, no longer liable to be registered. T, transfer or discontinuance of business. I, invoice without supply or incorrect invoice. Then change in constitution of business. The problem is you will remember the mnemonic, but you will not be able to remember what is that full form. Okay, so that's the reason why all the places where I have given mnemonics, one day before the exam you have to just brush it up, and without seeing it, once you need to recollect, and so that in exam when you are sitting you will be able to write that. Then frantic violation of bailer. This violation of is a common point for all these things. Okay, first B, you have to submit the bank details within time. What is the time? 30 days from the date of registration or date of filing first return, whichever is earlier. If you have not submitted the bank details within time, then also it will lead to cancellation of registration, violation of bank details. Then anti-profiteering, like that one order is there. What is that anti-profiteering? You don't have to bother about it. Anti-profiteering order that you violated, you don't have to write all these points. Any 5 if you write enough, because they will ask what are the reasons for cancellation of registration. Even though this many points are there, if you write any 5, that is enough. Safer side, one extra also you write and come. Okay, so therefore any 5, you don't have to write fully. Everywhere you learn theory, you don't have to write fully everything. Any 5 if you write, because in suggested answer itself if you see, they will mention all the points, but in brackets student has to write any 5, like that they will mention. So any 5 if you write, that is sufficient. Okay, but we will learn and go. So a safer side, 1 or 2 points extra if you write, good only na, so we get the full marks for that. And next, so anti-profiteering order violation. Then I, ITC, wrong availment of ITC, means you have taken the credit wrongly. Then your liability in 1 is greater than liability in 3B. I told you this 2 in 88C, 88D, that will lead to cancellation of registration. And you have to pay 1% of your liability through cash ledger, but you have violated that. And listen, first your registration got cancelled, you made application for revocation, and they made a revocation order. After revocation order, what is the time limit within which you need to file return? Very good, 30 days. In input tax credit chapter I told you, 30 days from revocation order we need to file return. By the time also we can take ITZ like that. Okay, so what is the time limit within which we need to file returns after revocation order? 30 days. If you are not filing returns within 30 days after revocation order, again it will lead to cancellation of registration. First they cancel your registration and you requested for revocation, they made revocation order, and after that you have to file return within 30 days. Again if you are not filing returns, definitely your registration get cancelled. That is this, return not filed within 30 days after revocation order. You see that in the previous page I gave the example, returns not filed from January to July, continuous 6 months not filed. Ennappa? And registration got cancelled on 1st September due to non-filing of returns. Is it the reason for cancellation? Yes. Returns not filed continuously for 6 months or 2 quarters leads to cancellation. Person applied for revocation and the revocation order passed on 31/12. If return from September to December not filed within 30 days from 31st December, again registration can be cancelled. Is it clear? So first you have made a application for revocation and revocation order passed. After revocation order, you need to file the returns. Which returns you need to file? From the date of cancellation till the date of revocation order. What is the date of cancellation? September. So September 24 to December 24, you have to file return within 30 days from 31st December, revocation order. Suppose you have not filed returns, again the registration will be cancelled. That is this. And apart from this, one more point is there, that is, you commence the business voluntarily, you have obtained registration but not commence business within 6 months. Obtained voluntary registration and not commence business within 6 months, that is also one of the reason for cancellation of registration. Got it? And remember, whenever you make application for cancellation of registration, When you will make application for cancellation of registration? Out of all these cases, you tell me as a registered person when you make cancellation. Not every time you make, they only will cancel. But you will make cancellation in 3 places. Which place? No longer liable to be registered. Very good. Transfer or discontinuance of business. Change in constitution. These 3 places, transfer or discontinuance, change in constitution, taxpayer no longer liable to be registered, then the person will make application for cancellation. But remember, they have to complete the Aadhaar authentication. Aadhaar authentication mandatory for registered person filing application for cancellation of registration. Why Aadhaar authentication mandatory? Otherwise, say your username, password, someone knows, they will log in and they will apply for cancellation. Who knows? Tomorrow, when you join in article shape, when the principal is not giving you leave for studying CA final, you may also do this. Okay. So, client login details you will have, you will log in and you will cancel the registration, and client will call the principal and will take him on the 5th gear. You understood? Bloody idiot. So, why you cancel my registration, etc. and all. So, we may get the kind of satisfaction, sadistic satisfaction. So, that's why they are telling Aadhaar authentication is mandatory. So that when you apply for cancellation, OTP will go. Successfully generated OTP for Aadhaar cancellation. Ayyo, I did not generate. Immediately he will call the principal. So that's why Aadhaar authentication is mandatory for cancellation of registration. Aadhaar authentication mandatory for registered person filing application for cancellation of registration. And even TCS deductor also can make application for cancellation. Then look into the next one. Suspension of registration. What is this? Whenever you make cancellation of registration or officer initiates cancellation of registration, for a period of time your registration is suspended. Is suspension cancellation same? No, no. Suspension is temporary, and till the time they decide cancellation or not, they will suspend. Thereafter, what are the 2 outcomes? After suspension of registration, what are the 2 outcomes? Number 1, either they will cancel or they will allow you to continue in the registration. Okay, Papa? So, is that suspension mandatory or optional? Optional. Read. Once a registered person has applied for cancellation of registration or the proper officer seeks to cancel his registration, the proper officer may means it's not mandatory, may, optional, may suspend his registration during the pendency of the proceeding relating to cancellation of registration filed by such registered person. And suspension of registration can be without affording reasonable opportunity of being heard. Just like that also they can do the suspension of registration. No notice for that. Already they gave notice for cancellation. Thereafter, there is no notice for suspension. That is the meaning of without giving opportunity of being heard. Means no need of notice. What is the procedure for cancellation of registration? First, you will make an application for cancellation. And what is the time limit within which they need to take action? Within 30 days. You made an application for cancellation of registration, and within 30 days, the proper officer has to decide either to pass the order for cancellation or to reject the application. What is the time limit for him, pa? 30 days. 30 days. Suppose if you did not make application but officer initiated cancellation. When officer initiated cancellation, what they do? First they give a notice. After they give notice, within 7 working days, you need to give reply. After your reply, they have 30 days either to cancel the registration or to drop the notice. Drop the notice means you will continue in the registration or they will do the cancellation. But this 30 days is not given in the law, it is based on the CBIC direction. The time limit not prescribed in rules, but as per CBIC direction it should be completed within 30 days. Whenever your registration gets cancelled, what is the disadvantage? You have to reverse the ITC on what? Inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock, and even on capital goods you need to reverse the ITC. See this. when registration of a person is cancelled, they shall reverse the ITC on inputs as such held in stock, WIP and FG, and even capital goods before the date of cancellation of registration. This we discussed in 18 subsection 4 read with 29 subsection 5. Then whenever they suspend your registration, for what period they will suspend your registration? Suppose you made application for cancellation. Today you made application for cancellation. Today is 4th December. You made application for cancellation and you selected 1st December. So with effect from which date your registration will be suspended? 4th December, whichever is later. Suppose you made application on 4th December and you selected 10th December. Then from when your registration will be suspended? 10th December. So registration shall be deemed to be suspended from the date of submission of application or the date selected in the application, whichever is later. Okay, and up to which date? Up to which date the registration will be suspended? Up to the completion of cancellation proceedings. Suppose if officer initiate cancellation, again he give a notice. In that notice he will specify one date. From that date till the conclusion of cancellation proceedings, with effect from a date to be determined by the officer pending the completion of cancellation proceedings. During the period of suspension, you are not unregistered, but you will behave like unregistered person. Means you cannot take ITC on your inward supply, and on your outward supply you don't have to pay tax. Means can you file returns? No, you cannot file returns for the suspension period. For the suspension period you cannot file returns. Is it clear? So you cannot issue tax invoice and collect the GST from your recipient. So you will behave like an unregistered person. A registered person whose registration has been suspended as above shall not make any taxable supply. That is, he can make taxable supply but cannot issue tax invoice and shall not be required to furnish any return under 39, that is GSTR 3B. And whenever the completion of cancellation proceeding happen, then the suspension will be revoked. Now, if you are not filing the returns because of which they started cancellation of registration, even during the suspension period you can file those returns. Concentrate, you did not file returns, that's why you got a notice. And they started suspension of registration. During the suspension period, all those pending returns you file. See, you cannot file the returns of suspension period during the suspension period, but the old returns and all you can file. So those returns you file so that the suspension will be automatically revoked. Say this. Returns not filed from January to July. Returns not filed from January to July. So suspension initiated. Okay, va? Suspension initiated. On which date? 5th September. After issuing notice for cancellation. If returns from Jan to July, filed after 5th September on any date, suspension is automatically revoked and notice shall be dropped. You understood? Next. See this, last section, revocation of cancellation of registration. What is that? They passed a cancellation order. You can't do anything. They passed a cancellation order. Means your registration will be cancelled. Now you request them, sir, sorry sir, and I will not do this mistake. Like that you make a revocation application. What is the time limit within which you need to make revocation application? 90 days from the date of order of cancellation, and it can be extended for a further period of 180 days, not 90 days, 180 days. 90 plus 180, literally 270 days. You have time limit to make application for revocation. But when you make application for revocation, all the pending returns up to the date of cancellation you should file. Before asking for sorry, rectify the mistake. You got it? Why we have cancelled your registration? Because you did not file returns. Then file all those returns before making revocation application. All returns up to which date? Up to the date of cancellation. Return shall be filed before applying if the registration was cancelled due to failure to file the returns. Submit application for revocation of cancellation of registration in form GST REG 21 within 90 days from the order of cancellation, plus it can be extended for a further period of 180 days. Who can extend? Either commissioner or additional commissioner or Joint Commissioner. Next, whether proper officer is satisfied, that is you made application, proper officer is satisfied means he need to decide within 30 days. What he need to decide? Either to revoke the cancellation or give a notice. Within 30 days from application, either he need to revoke cancellation or issue the notice. After notice, time limit always 7 working days, you need to give reply, and thereafter within 30 days, either they will revoke cancellation or reject the application. If they revoke cancellation and pass a cancellation order, what you should do? You should file return within, they did the revocation, so you need to file return within 30 days. Which returns? All the returns from which date to which date? Cancellation date to revocation date. Before cancellation, the pending returns already you submitted during revocation application. So from cancellation date to revocation order, what is the time limit within which you need to make? We need to file returns 30 days. So up to the date of order of cancellation, whatever returns you did not file, those returns you will file before making revocation application. Correct? Now order of cancellation to revocation order, any returns, all those returns will be filed within 30 days from revocation order. Got it? Then again, for making application for revocation, Aadhaar authentication is mandatory. Yes. Otherwise, one registration will be cancelled. Someone will log in and make application for revocation and the registration will continue. Okay. That's why Aadhaar authentication is mandatory. So with this we completed registration also, and look into this tax invoice, debit notes and credit notes, like that one topic is there. See that. Pa, all these are theory topics. Pa. There are no practical questions in this, and that's why I am just taking, I am not showing you in practice manual. Maybe 1 or 2 small questions will be there, but otherwise all are theoretical questions only. So please see tax invoice chapter, page number 128. Various documents involved in GST. See this first, tax invoice. So tax invoice, who will be giving tax invoice to whom? Supplier will give tax invoice to recipient. In which case? Registered supplier. In which case? Both FCM as well as RCM. In case of FCM, who will give? Supplier to recipient. In case of RCM, who should give? Recipient to supplier if the supplier is unregistered. That is called as self-invoice. What is the time limit within which self-invoice should be given? 30 days from the date of receipt of goods or services. And only in case of taxable supplies, tax invoice will be applicable. And there is one very, very important point. Please concentrate. There is a government department which is registered for deducting TDS, and they are making supply to you. They are not having normal registration, they are registered for deducting TDS. Now they are making supply to you, on which you need to pay GST under RCM. Okay, government department registered only for deducting TDS. You are recipient who is getting goods or services from the government department, and this transaction is covered under RCM. Who should give invoice to whom? Supplier to recipient or recipient to supplier? Recipient to supplier. Recipient to supplier. Why, sir? Because even though they are registered for deducting TDS, they are treated like unregistered person only. Self-invoice will come only in case of supplier being unregistered and the transaction is RCM. Correct? But even if the supplier is registered only for deducting TDS, they are treated as unregistered person. Therefore, the recipient has to give self-invoice to the supplier. See that point. If supplier is registered only for deducting TDS, then they are treated as unregistered, and a registered recipient shall issue self-invoice as if supplier is unregistered. This is only for self-invoice. In other place and all, don't take them as unregistered. Only for this purpose. Generally, they are registered for deducting TDS. Then, bill of supply. And invoice is mandatory or optional? Mandatory. The words used is shall. Same way, bill of supply. Again, the words used is shall. In which case bill of supply? A registered person making exempted supplies or a person opting for composition scheme. Mandatory, yes, they have to give bill of supply. Time limit, same time limit. Whatever time limit of tax invoice, the same time limit. Then there is something called as invoice cum bill of supply. Whenever the sale is made to unregistered person, B2C, whenever the sale is made to unregistered person, then they are making sale of both taxable goods and exempted goods, then in a single document. For example, you went to this Palamudir Solai, one shop, you purchase fruits and vegetables, plus you are also purchasing other commodities which are taxable. Fruits and vegetables exempted, commodities taxable. Now you are an unregistered person, will they give separate document, 2 slips, one for taxable, one for exempted? No, one slip itself, both will be mentioned, correct? So which means that is invoice cum bill of supply, and it is optional. Instead they can give 2 separate documents also. A registered person is supplying taxable as well as exempted goods or service to unregistered person. Time limit, same time limit of tax invoice. Then see this, one special point is there. In case of low value supply, what is a low value supply? Less than 200 rupees. Value of supply less than 200, not equal to 200, less than 200. Neither tax invoice nor bill of supply. They don't have to give any document, provided 3 conditions are satisfied. What are the 3 conditions? Number 1, recipient is unregistered. Recipient is unregistered. Condition number 1, recipient is unregistered. Condition number 2, recipient is not in need of invoice. Recipient is not in need of invoice. Condition number 3, a consolidated invoice needs to be raised by the end of the day. Just for accounting purposes, they will prepare a consolidated invoice for accounting purpose and keep it with them. So these 3 conditions should be satisfied. What is that? So low value supplies, that is less than 200, tax invoice as well as bill of supply not required if the recipient is unregistered, recipient not in need of invoice, and a consolidated invoice is generated at the end of the day. In case of multiplex theatres, even if the value is less than 200 rupees, they have to generate a invoice, nothing but e-ticket. They will give a e-ticket now. We will show that at the time of entry, they scan in, that e-ticket is deemed as invoice. In case of multiplex theatre and invoice, e-ticket deemed as invoice to be issued even if the value of supply is less than 200. While determining this value of supply, should we include GST or exclude GST? Exclude. Everywhere in value, exclude GST. Only in one place, include GST. That is e-way bill. Then look into the next one, debit note and credit note, that is given in section 34. So when debit note, when credit note, already you know, whenever there is a increase in the invoice value or tax, what is the name of the document? Debit note. That is value or tax in invoice is more than actual value or tax is more than the value as per invoice or tax as per invoice. That is simple part. Invoice value increasing or the tax is increasing. Already they prepared the invoice. So what is the document that they will be giving? Debit note. Who will be giving debit note to whom? Supplier to recipient. Mandatory, optional? Mandatory. Any time limit? No time limit. Why no time limit? Government is going to get money. So no time limit. Any time you can give. Okay. And what will happen because of debit note to supplier? Liability increases. What will happen to recipient? If registered, they will be able to take ITC. Then credit note. Credit note, when it will be given? You tell me logically. Value or tax in the invoice gets reduced. Value gets reduced or tax gets reduced. Or sales returns. Or deficiency in quality. First we raise the invoice and the recipient is not happy with the service, so he will negotiate and the value gets reduced. So deficiency in quality. For bad debts, credit note cannot be issued. Keep that in mind. Bad debts not possible. So these 3 cases, credit note. Who will be giving credit note to whom? Supplier to recipient. Mandatory or optional? Optional. It's up to you. If you want to give. Otherwise, no issue. Why? Because of credit note, the liability get reduced. That's right. May issue, not shall issue. If you want to issue, there is a time limit also. What is the time limit? 30th November of succeeding financial year or date of filing annual return, whichever is earlier. Ide debit note, after 3 years, 4 years also you give, no problem, because liability is going to get increased. But here there is a decrease in liability, so they are telling a time limit is there. That too may issue, but debit note it will be shall, and credit note cannot be issued in case of bad debts. Now, for 3 invoices together, can I give a single debit note, single credit note? Yes. One or more credit notes or debit notes can be issued for multiple invoices. Then look into revised tax invoice. Concentrate. You are liable to get registered on a particular date, and you made application for registration within 30 days, and you got the registration certificate. Between this time, which time? The date you are liable to get registered till the date you got registration certificate. Can you issue tax invoice for your taxable supplies? No. Why? Because you don't know the registration number. Sir, you are liable to register, sir, but you did not get the registration certificate yet. You made application, so till that time, which time to which time? You are liable to register till the date you got the certificate of registration. During this time, you cannot issue tax invoice because you don't know the GST IN. After the registration certificate, within 1 month, you can issue the revised tax invoice to recover the GST during this period. You got it? During this period, whatever GST is there, to recover the GST, you can give a revised tax invoice. Again, revised tax invoice, shall may? May. Because for them no problem, na? You have to pay tax. Sir, you have to pay tax. Whether you recover from your recipient or not, it is your headache. You got it? You go to hell also. We want our money. You got it? So that's why it is may issue. Every registered person who has been granted registration with effect from a date earlier than the date of certificate of registration may issue revised tax invoice in respect of taxable supplies during the period starting from effective date of registration till the date of issuance of certificate of registration. What is the effective date of registration? If you make application for registration within 30 days, the date on which you are liable to register is the effective date of registration. Mark it as important. At least in 10 attempts, in 5 attempts they ask this, effective date of registration. So what is the effective date of registration? If you make application for registration within 30 days, the date on which you are liable to register. For example, 1st October you are liable to register. You made application on 25th October and you got the registration certificate on 3rd November. What will be taken as the effective date of registration? 1st October, because you made application within 30 days. Suppose if you make application beyond 30 days, then the date on which you get the registration certificate will be taken as the effective date of registration. If applied within 30 days from the date when liable, date on which such person is liable. If not applied within 30 days, date on which registration is granted. And what is the time limit within which the revised tax invoice should be issued? 1 month. 1 month from date of certificate of registration. Don't get confused. Here it is 30 days, whereas here it is 1 month. 30 days for what? Making application for registration. 1 month is for what? Giving revised tax invoice. Suppose if you are not making application within 30 days, can you give revised tax invoice? No. Why you cannot give? Ayya, if you are not making application within 30 days, the certificate date itself is the effective date. Means you can give revised tax invoice from effective date till the certificate date, both are same. Which means revised tax invoice cannot be issued if application for registration is not made within 30 days from the date on which liability to register arises. Okay. So mark this as important. Revised tax invoice, they can make a question on this. Then receipt voucher. Whenever advance is collected, when advance, before preparing invoice, advance is collected, then for that advance, one document needs to be given by supplier to recipient. May or shall? Shall, mandatory. What is the name of the document? Receipt voucher. Proof that we have collected the advance. So receipt voucher shall, whenever advance is received by the supplier from the recipient, who will be giving supplier? It is required only when the payment is received before issuance of invoice. Time limit not specified means immediately. As and when advance is collected, you have to give the receipt voucher. Then payment voucher. Who will be making payment to whom? Recipient to supplier. So who will give this payment voucher? recipient. When RCM, in case of RCM, when the supply is covered under RCM and the recipient is making payment to supplier, the recipient has to give payment voucher to the supplier. A registered person who is liable to pay tax under 9394 shall issue payment voucher at the time of making payment to supplier. Time limit not specified, means immediately upon making payment. Then refund voucher, listen, first you collected advance. I'll give you an example. You did a marriage hall booking. Marriage hall you booked, and when you booked the marriage hall, 1 lakh rupee plus 18,000, 1,18,000 you paid to the marriage hall owner as advance. So what the marriage hall owner would have done? He would have given you a receipt voucher, correct? For 1,18,000, because he collected advance, he will give receipt voucher for 1,18,000. Now the booking is cancelled. When the booking is cancelled, what he will do? He will return entire 1,18,000 to you. But on that advance already he would have paid tax, correct? That's why he will be giving you a refund voucher, and based on that refund voucher, whatever already he paid 18,000 on advance, he will get it as a refund. You got it? So what is the document? Refund voucher. Who will be giving it to whom? Supplier to recipient. When it will be given? Whenever the supply is cancelled. Advance collected, but the supply is cancelled. Refund of advance received and invoice is not yet generated. And is it mandatory or optional? Optional. May issue. Refund they are going to get. That's why may issue refund voucher. Sorry. Now I am the marriage hall booking, like marriage hall owner, and I am not returning you 1,18,000. I will return only 1 lakh. I will tell, boss, you paid 1,18,000. 18,000 already I paid to government. So therefore I will not return that 18,000 to you. 1 lakh only I will return to you. Can I give refund voucher? No. I cannot give refund voucher. Why I cannot give refund voucher? Only if I return full amount I can give refund voucher. If I am not returning full amount, I cannot give refund voucher. Then in that case, who is having the burden of 18,000? Recipient. You are having the burden. Can you claim the refund? Yes. Refund can be claimed by recipient also, even if unregistered. Okay, Papa? So supplier issues refund voucher, supplier will claim refund. If supplier is not issuing refund voucher, recipient will claim refund with respect to that advance portion. Is it clear? Now see this. This point I connected in one chart in page number 131. Page number 131 you can see. First, invoice is prepared. When invoice is prepared, if the payment is received before invoice, what is the name of the document? Receipt voucher. May or shall? Shall. Receipt voucher shall be issued by supplier to recipient. Suppose if it is goods, will they pay GST on advance? No. But if it is services, they will pay GST on advance? Yes. Why they will not pay GST on advance in case of goods? Because the time of supply in case of goods is due date or actual date, whichever is earlier. So they will not pay GST on advance. But on services, they will pay GST on advance. And invoice prepared. So they will pay the liability as per invoice. Thereafter money is collected. Is receipt voucher mandatory or optional? Optional. If you want to give receipt voucher, you may give, otherwise not required. Got it? Now, before invoice, the amount is refunded. Means the supply is cancelled before invoice. Before invoice, the amount is refunded. Supplier shall issue refund voucher or may issue refund voucher? May issue refund voucher. Supplier may issue refund voucher to recipient. Suppose if supplier issues refund voucher, on goods are they paying any GST? No. So there is no question of refund. On services they already paid GST na. So they will be getting refund of the GST paid. Who? Supplier. Suppose if supplier is not issuing refund voucher, then who will have the burden of tax? Recipient. That marriage hall example, who will have burden of tax? Recipient. Can recipient also claim refund? Yes. Read that point. If supplier has not issued refund voucher, burden of GST on advance is on recipient, and such recipient, even though unregistered, can claim. Understood? Next. Suppose if the amount is refunded or the supply is cancelled after preparation of invoice, then If the amount is refunded or the supply is cancelled after preparation of invoice, then refund voucher cannot be issued. Refund voucher can be issued only if invoice is not yet prepared. If invoice is prepared, there is one document which we saw, credit note. The liability will reduce na. We are cancelling here. Invoice prepared. So how to cancel the invoice? Only by way of giving credit note. But credit note is again may. So amount refunded or supply cancelled. Option 1. Supplier may issue credit note to recipient. What will happen to the liability of the supplier? That gets reduced. Or there is a time limit for credit note, so it could not be issued. So what if the time limit is over, but supplier refunded full 1,18,000, then 18,000 rupees they can claim refund. Refund can be claimed under excess payment of tax by supplier. Suppose if supplier says, no pa, I will not return you 1,18,000 and all, 1 lakh only I will return. Then in that case, who will claim refund? Recipient. Alternatively, recipient also can claim refund even if unregistered. Okay, va? So any combination is possible. Depending upon the question, you write the answer accordingly. Now, that is about refund voucher. Come back to page number 129. Delivery challan. Delivery challan. When delivery challan? Whenever there is movement of goods covered under supply or without involving supply? Without involving supply. Then there will be delivery challan. For example, supply of liquid gas where the quantity at the time of removal is not known, or transportation of goods for job work, or transportation of goods for reasons other than supply. In all these cases, there is no supply but there is movement of goods. So delivery challan shall be issued. Who will issue? Supplier. Time limit not specified means along with the goods. As and when the goods are moved, delivery challan is required. Then, whether details of recipient should be mentioned in invoice. Please concentrate. Whether details of recipient should be mentioned in invoice. If it is B2B, definitely you need to mention the details of recipient in invoice. If it is B2B, means sale to registered person. Suppose if it is B2C transaction, please concentrate. B2C transaction, you remember where the relaxation is. B2C transaction, where the value is less than 50,000, where the value is less than 50,000, other than online transactions or OIDR or OMG, other than that online transactions, they have to mention the recipient detail only if the recipient is asking, otherwise not required. For example, I am supplier and registered, your recipient unregistered, say I am charging you fees definitely less than 50,000, so I don't have to give your details in the invoice. Just an invoice can be given without mentioning the recipient details. Okay, va? If you ask, sir, mention my name, sir. Otherwise, I cannot claim any reimbursement or I cannot prove because my parents will ask whether you paid fees or you attended free classes telling that fees is there and you ate that fees. So that's why you mention my name, sir, like that you ask. So I will mention. Otherwise, I don't have to mention. Is there online classes la? If it is online live class, I have to mention the recipient detail because it's a digital transaction or online transaction. Even if the value is less than 50,000, say this. Value of supply less than 50,000. B2B, definitely need to maintain the details. B2C, services through ECO, OIDR or online money gaming. Name of the state of recipient. Other cases, recipient details required only if requested by them. If it exceeds 50 or equal to 50, always recipient details needs to be mentioned. Just remember this example, you can remember this and write in exam, okay. Then, what is the usual time limit for issuance of invoice in case of services? 45 days. In case of banking, insurance. Others, 30 days. From when? From the date of completion. In case of bank, insurance and telecom sector. Bank, insurance, telecom sector. Between distinct persons, if there is any transaction, by end of the quarter, if they give issue invoice, that is okay. Between distinct persons. Which sectors? Banking, insurance, telecom. Distinct person means what? One registration to another registration. by end of quarter if they give invoice before expiry of the quarter, that is sufficient. This already we discussed GST implications on debit note and credit note, what will happen to the liability of the supplier, liability of the recipient, ITC of the recipient, etc. Next, this receipt voucher, refund voucher also we have discussed. Look into this. An unregistered person is not supposed to collect GST from the recipient. If they collect, that is a violation of section 32. Because he is unregistered, now how can he collect? Also, GST component should always be shown separately in the invoice. Then, see the next one. HSN code in invoice. Usually, in invoice, we need to enter the HSN, Harmonized System of Nomenclature code. For every product, one code is there. That code we need to enter. In case of services, we need to enter service accounting code. However, her service accounting code is 6 digits. All 6 digits needs to be entered. HSN is a 8-digit code, but you don't have to enter entire 8 digits. If your aggregate turnover during the previous year does not exceed 5 crores, you need to enter how many digits? 4 digits for B2B only for B2B, that is sale to registered person. Suppose if your aggregate turnover during the previous year exceed 5 crores, then you need to enter 6 digits for both B2B and B2C. Then next, we have the concept of E-invoice and dynamic QR code. What is E-invoice? You prepare a regular invoice. That regular invoice you upload in the portal and you will obtain 3 things for that invoice. That is invoice reference number, digital signature and QR code. Just to verify the authenticity of this invoice, this will be given and it will be shared with the buyer. For example, I give you an invoice. What is the proof that this invoice is genuine invoice which I will upload in the portal and I will pay GST on that? I may not have paid GST also now. Tomorrow you will only get affected, ITC you will not get. So for that reason they have brought in E-invoice, wherein every invoice you prepare, you put it in the portal and you obtain this and give it to the recipient. So that recipient will be happy that yes, it's a genuine invoice. Tomorrow his ITC will not be affected. For that they brought in E-invoice. So look into the E-invoice process. So what will happen in E-invoice process? First, as a taxpayer, what you will do? You will prepare an invoice as per your billing system. Any Tally, Zoho, etc. You will prepare an invoice. Convert that invoice into JSON file, JavaScript object notation, and upload it into the portal, because everything should be converted to a common language. That common language is .json, and it will be uploaded into the portal. Which portal? Invoice registration portal. After you upload in the invoice registration portal, the portal will do deduplication check whether the same invoice is already uploaded or not. They will check once, and then for this invoice they will be fixing 3 things. Number 1, invoice reference number, 1 unique number they will be giving, then digital signature, and then QR code will also be affixed, and they will be sending the data from there to suppliers GSTR1 and recipients GSTR2B. So supplier GSTR1 gets updated and recipients 2B gets updated. So which means liability added to supplier and ITC added to recipient. And thereafter the buyer can verify the invoice using that number or QR code. When he scanned the QR code, the invoice automatically come from the portal, which means it's a genuine invoice. Tomorrow the supplier will not escape from payment of GST. He has to pay the GST because it got added in his GSTR1. You got it? If he is not paying, means liability in 1 greater than liability in 3B. So they will give a notice. We saw na 88C. They will give intimation to him and they will recover the tax from him. Is it clear, pa? These are the steps involved. And there is one very important point. See, this procedure is not important. You need to know, you learnt. But what is important here is that if I have to give you E-invoice, but instead gave a normal invoice, even though I have reported it in GSTR1, it came in your 2B, but you cannot enjoy this ITC because it will amount to invalid ITC. You got it? Supplier has to give what invoice? E-invoice, but instead gave normal invoice. Now even though it is reflected in 2B of the recipient, can the recipient enjoy the ITC? No. Very important point. If a supplier is required to issue E-invoice but not issued E-invoice, and issued a normal invoice, then recipient cannot avail ITC even though such invoice is reflected in 2A or 2B of the recipient. Then next, who are not required to give E-invoice? Who are not required to give E-invoice? Remember biggest. Remember biggest, important for theory. Who are not required to give E-invoice? Biggest. B for banking company. I for insurance company. G for GTA, goods transport agency. Next G for government department or local authority. Then E for exhibition of film in a multiplex theatre. S for SEZ unit. SEZ unit, but not SEZ developer. Who is SEZ developer? The infrastructure developer. Who is SEZ unit? The one who do business inside SEZ. SEZ unit not required to give invoice. Finally, transportation of passengers like airlines, railways, etc. in any mode, they are not required to give invoice. These people are not required to give invoice, whatever the case may be. Not only with respect to the services which they render, if they render any other services also, e-invoice not applicable. For example, there is a bank. Generally, banking company not required to give e-invoice. If the bank is doing renting of immobile property, bank may own property that will be given on rent. For that renting activity also e-invoice not applicable. Yes, this exemption is for the entity, not for the service. This exemption from e-invoice is for the entity. So see there, whether exemption for mandatory generation of e-invoice is available for entity as a whole or only in respect of certain supplies made by the entity. It is clarified that exemption is available for the entity as a whole. Means if they are banking company, not applicable, that's it. If they are insurance company, not applicable, like that. Okay. Then there is a concept of dynamic QR code in invoice. What is a dynamic QR code in invoice? In order to promote digital transactions, they are telling the payment should be collected only by scanning QR code. And that is called as dynamic QR code. That too not the static QR code, dynamic QR code, which means when you scan the QR code, automatically amount will come and you will make the payment. That is called as dynamic QR code. Example, when you order anything from Amazon or Flipkart and select pay on delivery, so they will be delivering the product and they will show in their mobile the QR code. When you scan it, you don't have to enter the amount. Automatically you will get the amount and you will make payment now. That is called as dynamic QR code. And dynamic QR code means the payment should be collected only by scanning QR code, mainly to promote UPI transactions and digital transactions, so that everything is accounted. Okay. And recently also you might have heard of one Pani Puri vendor. So based on his UPI, he received the GST notice. So he was some roadside Pani Puri vendor, but what he did is that to all his relatives the same QR code he gave, because when they come here, they will also bring their entire family na. So my uncle will be coming next week, my brother-in-law will come thereafter next week, like that. Okay. So they all came here, the entire battalion got shifted, and when they shifted, total 18 people are in their family members. All the 18 people started using the same QR code, and therefore Pani Puri they sold. And that too, needless to say, I don't know what is there in that Pani Puri. Our people will daily eat it. Okay. So even without breakfast, dinner also they will survive, but without Pani Puri they cannot survive. So sales will happen, and the turnover went to somewhere 80 lakhs. 18 people across the Chennai, 80 lakhs turnover. See, I don't know how they will mix that water, what and all they would have done. So therefore, basically they put some pan and all, and they speak and mix it. So spraying, sir, everything will happen, and that not so tasty, baguta chai, like that we will eat. And so these people received the notice. So that's what, using UPI they wanted to track the people and wanted to collect the GST from them. So dynamic QR code has been brought, and in some cases dynamic QR code is not applicable. When? Remember big toe, biggest for e-invoice, for dynamic QR code big toe, B same, banking company, I insurance, G GTA, but another G is not there, only GTA. Big toe, T same, transportation of passengers by any mode. Then O, OIDR supplier, and E, exhibition of film in multiplex theatre. What is not there? This government is not there here, and SEZ unit is not there. Instead we have OIDR supplier. And to whom it is applicable. So far what we saw is to whom it is not applicable. Now we will see to whom it is applicable. If my aggregate turnover during the previous year does not exceed 5 crores, any previous year starting from 2017-18, if my aggregate turnover during any previous year does not exceed 5 crores, then both E-invoice and dynamic QR code not applicable. If my aggregate turnover during any previous year exceeds 5 crores but does not exceed 500 crores, for B2B it will be E-invoice, for B2C it will be dynamic QR code in invoice. If my aggregate turnover during any previous year exceeds 500 crores, for B2B E-invoice required, for B2C dynamic QR code is required. So if it exceeds 5, does not exceed 5, only E-invoice. Dynamic QR code not applicable. So when dynamic QR code is applicable, if my aggregate turnover in any previous year exceeds 500 crores, then only dynamic QR code is applicable. And invoice should be in prescribed form, and it is optional for taxpayer up to 5 crores. E-invoice gets auto-populated in GSTR1 e-way bill, and whenever we are preparing E-invoice, the physical copy of invoice is not required. Usually we need to prepare invoice in triplicate for goods, means original copy to the buyer, duplicate copy to the transporter, and triplicate copy to the supplier. In case of services, 2 copies, original copy to the recipient, duplicate copy to supplier. But that is not required if E-invoice is generated. And next, physical copy of invoice not required. QR code can be produced before the proper officer. Whenever officer stops our vehicle, in E-invoice one QR code is there na, that is made available, that is enough. And type of transaction for which E-invoice is required. Remember only for B2B transaction E-invoice is applicable. Means sale to a registered person. If sale to unregistered person, E-invoice is not applicable. And that outward supplies B2B, maybe FCM or RCM. Maybe I will pay GST or my recipient will pay GST. If it is my outward supply, for that E-invoice is applicable. Okay. So B2B transaction, whether it is outward supply covered under FCM or RCM. Then zero rated supplies, that is exports or supplies to SEZ, and credit notes and debit notes B2B. And there is one amendment here. Sir, when should I prepare E-invoice? Parallelly at the time of sale itself I should prepare a E-invoice, sir? No. You prepare a normal invoice and leisurely also you upload this invoice in the portal, not a problem. And if your turnover is more than 5 crores but less than 10 crores, more than 5 crores but less than 10 crores, no time limit, yearly once also you upload, no problem. But if your turnover is greater than or equals to 10 crores, when you prepare the normal invoice, within 30 days you need to upload these details in the portal. Which portal? Invoice registration portal. See there. This limit, taxpayers with aggregate turnover greater than or equals to 100 crores is now changed to 10 crores shall report the invoice or debit notes within 30 days from the date of invoice. Okay, sir, but if it exceeds 5 itself, E-invoice is applicable. Yes, but you don't have the time limit. Means yearly once also you upload all the invoices in the portal, no issue. Then dynamic QR code, we will enter all these details and prepare the dynamic QR code. It will have supplier GSTIN, UPI ID of supplier, bank account and IFSC code, invoice number and date, invoice amount with breakup of value and tax. First 3 details is static, it will not change. But the next 2 details will be dynamic, it will change. Correct? Because supply GSTIN, UPI ID of supplier, bank account will not change. For every invoice, what changes? Invoice number and invoice amount will change. And we have some exceptions here. UPI ID of supplier, suppose if the payment is collected by e-commerce operator, for example Amazon, Flipkart, whose UPI ID should be connected? Their UPI ID should be connected. That's why when you scan and make payment, it will come in your GPay, paying to Amazon Reseller Services Private Limited, like that it will come, not the seller. So it is e-commerce operators UPI ID will be given. Next, bank account and IFSC code. If the bank account is connected to UPI ID, then no need to give bank account separately, because through UPI itself the bank can be tracked. And invoice number and date. And invoice number and date, suppose if it is a retail sales, 10 counters will be there. At a time, all the people will be generating bill. So how to give the invoice number? So any unique number they can adopt. Then invoice amount with breakup of tax. Listen, this dynamic QR code is applicable only when you collect the money from the customer after preparing the invoice. Suppose if you collect the money before preparing the invoice, dynamic QR code is not applicable. You can collect in any mode. So already we collected part of the amount from the customer. Now remaining amount only we are going to collect after invoice. Then in the dynamic QR code, how much amount should be mentioned? The balance amount only should be mentioned. Part payment received before and remaining after invoice, then only the balance due should be mentioned. Then there are two exceptions for dynamic QR code. First point, just now I told you, if the payment is received before preparing the invoice, we can receive it in any mode, but the cross reference of that mode of receipt should be mentioned. Like somewhere you would have seen in bills and all, mode, cash, card ending 4 digits, like that and all they will mention. So if you mention the mode, that is sufficient. If payment is received before at the time of generating invoice and cross reference of such payment receipt is mentioned in invoice, then suppose if the recipient is outside India, can they scan and make the payment through dynamic QR code? Impossible, because UPI we don't have outside India. UPI system is available only in India. So they cannot scan and make the payment. We don't have that facility. Okay, still they have not upgraded. So therefore the payment cannot be received by QR code. So QR code not applicable. Supplier in India, recipient outside India, place of supply in India, and payment in convertible foreign exchange. It is not an export. If it is export, anyhow E-invoice is there. And dynamic QR code not required as the recipient is outside India. Then very important point, in E-invoice one QR code is there, and in dynamic QR code also QR code is there. Both are same as are. No. E-invoice QR code is generated by the portal. Dynamic QR code is generated by your device, that POS device or your mobile device, that will generate the QR code. Okay, va? Then objective of dynamic QR code is to collect the payment in digital form and avoid cash transaction. QR code mentioned in invoice and dynamic QR code is not same, because dynamic QR code is generated by supplier using point of sale device or banking apps. Okay. Now look into this. With this we will complete this and take break. Supply of goods and or services to registered person by notified person. Whether E-invoice is applicable or not, definitely applicable if it is B2B supplies. Correct? Next, exports. Yes, B2C supplies. E-invoice not applicable. Invoice issued by input service distributor not applicable. Supplies made by notified person, tax on which payable under RCM applicable. Whether you are going to pay GST under FCM or RCM on your outward supply, invoice applicable. Where specified category of supplies are received by notified person, that is inward supply under RCM. Inward supply under RCM, you have to give self invoice. Whether invoice is applicable or not applicable, not applicable, because invoice is only for outward supplies, not for inward supplies. So therefore invoice not applicable in case of inward supply. Import of good, that is also inward only, purchase only. So E-invoice is not applicable. Clear pa? So with this we completed this chapter, and what we have discussed, we discussed e-way bill, we discussed registration, and we completed this tax invoice, debit note, credit note, E-invoice, etc. We'll take a break and thereafter we'll continue with, I think what we have is only returns payment process. Correct? We'll complete that and then we will see the mighty 50 questions. So at what time we will meet? Half an hour? Fine, half an hour from now we will meet. Okay, we'll start. Look into page number 159. Page number 159. We are going to discuss payment process. In this payment process chapter, we have two sections, that is section 49 and section 50. 49 talks about what are the various electronic ledgers that need to be maintained by every registered person. There are three ledgers which needs to be maintained, that is electronic liability ledger, electronic credit ledger and electronic cash ledger. What does electronic liability ledger contain? It contains the details of liability to be paid by the registered person, and that electronic liability ledger will have total 5 dues: TIPFO, T for tax dues, I for interest on account of delay in payment of tax, P for penalty on account of breach of provisions, and F for fees, that is late fee for delay in filing return, O for others. So every registered person will have total 5 dues: tax dues, interest, penalty, fee and others. It will be there in liability ledger. And electronic credit ledger, whatever balance is there, that can be used only for payment of tax dues, but the balance available in the cash ledger can be used for payment of tax dues and other dues. And how the money will come into the electronic credit ledger? Whenever they avail the ITC in GSTR 3B, or they avail the ITC in ITC 1, that is closing stock, ITC on closing stock, or ITC 2, transfer of ITC from one business to another business, or 2A, single registration to multiple registration. These are the ways through which ITC will be reflected in credit ledger. Or sometimes we paid the tax in excess, and that excess tax paid we claimed as refund, so then also it will be coming back to our credit ledger. So refunds, all the monies which are there in the credit ledger can be used for payment of liability ledger, but only with respect to tax dues. How money will come into cash ledger? Whenever you make a deposit into the cash ledger through PMT6 challan, or the TDS and TCS which is deducted by the recipient and e-commerce operator, that will also be in our cash ledger. And any refunds that we claim also will come to our cash ledger, and the balance in cash ledger can be used for payment of liability ledger with respect to any dues. So this is what you need to write if you get a theory question on. Write a short note on various e-ledgers. You have to write about these three ledgers and how money will be coming into that ledger, inflow, and for what purpose we use that ledger for payment. Then electronic liability ledger will be PMT1, credit ledger will be PMT2, and electronic cash ledger is PMT5. And balance that is there in the credit ledger and cash ledger after payment of this interest, penalty, etc. Still in that cash ledger some balance will be there, na? That can we claim as refund? Yes. So we can claim as refund. So this is about e-ledgers. Look into the first one, that is special points in case of electronic cash ledger. How do we make deposit into the cash ledger? There are different modes of deposit. Either we can make payment through online, that is net banking, or NEFT RTGS, or we can also do it through debit card, credit card, or UPI, or IMPS, or finally OTC, that is over the counter payment. But with respect to over the counter payment, there is a restriction. How much we can deposit? Up to 10,000 rupees in a tax period. So internet banking, debit card, credit card, NEFT, RTGS, cash deposit, over the counter up to 10,000 rupees per tax period is permitted. Even UPI and IMPS. Every mode there is no limit, only in case of over the counter up to 10,000 rupees. And how the deposit will be made? The deposit will be made through PMT6 challan. As and when we make the payment, our bank account will get debited and the payment, that is cash ledger, should be credited. Suppose if our bank account got debited but the cash ledger not got credited, we can intimate it to the portal through PMT7. When payment is debited from bank account but not credited in cash ledger, then communication to payment gateway shall be made through the portal PMT7. Also we can shift the balance from one cell to another cell. Say for example, we have CGST, SGST and UTGST and IGST, and in all these we have tax, interest, penalty, fee and others. So total there is a 20 cell matrix. How? So actually SGST or CGST will be together and we will be having one more, that is CES. So which means, see this, there is total a 20 cell matrix that we have, that is CGST, SGST or UTGST, don't write, just listen. Then IGST and cess. These are the 4 major heads, and the 5 minor heads will be tax, interest, penalty, fee and others. Now there will be balances in these cells. Now by mistake we deposited, so total 20 cell matrix. By mistake we deposited in one cell. Can we shift the balance? Yes, we can shift the balance. Say for example, from CGST tax, can we shift it to somewhere like interest in IGST? Yes, we can shift the balance. But for shifting the balance, we need to file one form, that is PMT 9. So that is this with respect to that. So for transfer of balances between major heads and minor heads, we have PMT 9, and also balance available in the cash ledger from one distinct person to another distinct person, it can be transferred. For example, I have 2 registrations, one in Tamil Nadu, another in Andhra Pradesh. We can transfer the balances from, that is cash ledger balance, from Tamil Nadu registration to AP registration. But we need to remember one point in this case, that is CGST balance can be transferred to CGST head or IGST head. IGST balance can be transferred to CGST head or IGST head, but very important point, SGST balance cannot be transferred. Also, we cannot transfer CGST IGST to SGST head of the distinct person. So 2 important points, SGST balance cannot be transferred to distinct person, and CGST IGST balance cannot be transferred to the SGST head of the distinct person. Okay. However, if they want to transfer, what they should have done, they should have transferred to CGST IGST, and thereafter they can shift it to CGST SGST and again transfer it back to SGST, but directly the transfer cannot be made. What they can do, from SGST they can shift it to CGST or IGST, then again CGST IGST can be taken to CGST IGST, and again they can shift the balances back to this SGST. Got it? That is done, possible, but directly we cannot transfer the SGST balance, or we cannot transfer CGST IGST to SGST head of the distinct person. That is this. So balance available in the cash ledger can be transferred between the distinct person, and what is the form required? PMT 9. However, transferor should not have any unpaid liability in the electronic liability ledger. Means what? There should not be any pending liability. So in in Tamil Nadu registration, there should not be any liability, outstanding liability, everything we should have paid. Then we can transfer the balance to AP registration of the same person. But remember, one person to another person not possible. Between distinct persons only we can do the transfer. Then next, special points with respect to credit ledger. Whenever we have balance in the credit ledger, we can claim as refund only in 2 cases. Number 1, refund on account of 0 rated supplies. The excess balance that is there in the credit ledger, we can claim as refund in 2 cases. What is the first case, pa? Whatever 0 rated supplies we are making in that case. Or number 2, inverted tax structure. What is inverted tax structure? The tax rate on output is less than the tax rate on input. For example, you are selling garments which is taxable at 5%, whereas the cloth is taxable at 18%, means my purchase is 18%, but my sales is 5%. That is called as inverted structure. So I will get refund in that case. That is this. Refund from electronic credit ledger is possible only in 2 cases. One is inverted tax structure, that is tax rate on output is less than the tax rate on input, or 0 rated supplies. Then second point, refund to the source ledger. Sometimes by mistake we have paid the excess tax, and that excess tax will be refunded to the source ledger. For example, for a particular month we have made payment of 3 lakhs in excess, and that month how we paid this 3 lakhs? Say 2/3 we paid from credit ledger, 1/3 we paid from the cash ledger. Now 3 lakhs we paid in excess. So out of this excess, 2/3 will be given back to credit ledger and 1/3 will be given back to the cash ledger. So from whichever ledger we are making the payment, in the same proportion the refund also will be granted back. Where registered person has claimed refund of any amount paid as tax wrongly paid or paid in excess, for which debit has been made from the credit ledger, then the said amount if found admissible, then it will be refunded back to the credit ledger through PMT 3. Also sometimes erroneously we will claim the refund. So there is some ITC balance, 6 lakhs ITC balance is there. From that erroneously means wrongfully 2 lakhs we claimed as refund. When we claim 2 lakhs as refund, what will happen to the balance? From 6 lakhs it will come down to 4 lakhs. We claimed 2 lakhs as refund, and thereafter this 2 lakhs is actually erroneous. So either we paid it back or department has recovered it. Then again the ledger balance should increase now by 2 lakhs. First 6 lakhs we claimed refund, it came down to 4 lakhs, and from 4 lakhs again when we are paying back the 2 lakhs it should increase. That is this: when a registered person claims erroneous refund of ITC, upon payment of such refund along with interest and penalty, the proper officer shall pass order in PMT 3A for recredit. When the erroneous refund we claimed and we returned it, either we returned it or they recovered it, so they will do recredit. And balance in credit ledger can be used only for payment of tax, but cannot be used for payment of interest, penalty, fee and others. Also remember, the balance in credit ledger can be used for payment of GST under FCM only, but cannot be used for payment of GST under RCM. And whatever balance that is available in the credit ledger may be restricted by the proper officer for utilization, that is given in Rule 86A and 86B. That is our next discussion. And balance available in the credit ledger can be used for payment of arrears of tax also. That is 2 years before we have to pay some tax that we are paying now. For that, can we use the balance in credit ledger? Yes, no problem. For arrears of tax also we can use a balance in credit ledger. Then look into the next page. Whenever we have credit in our credit ledger, that is amount in the credit ledger that may be restricted for utilization by the proper officer. When the proper officer will restrict for utilization in 86A and 86B. First 86A, say your supplier is not in existence or not doing business from the place where they have obtained registration. Where he went, we don't know, not identifiable, or identifiable but they are doing business from a different place. Okay, then in that case whatever ITC that you have already availed will be suspended for maximum how many days per 1 year. Up to 1 year this ITC already availed in your credit ledger will be suspended. Is it clear? You are the recipient, your supplier is not in existence or not doing business from the place where they have obtained registration. Number 2, recipient is not in existence or not doing business from the place where they have obtained registration. 2 points: supplier not in existence or not doing business from the place where they have obtained registration, recipient not in existence or not doing business from the place where they have obtained registration, or you avail the ITC without actual receipt of goods or services, or the invoice is missing. You avail the ITC without receipt of goods, or the invoice is missing, or your supplier has not paid the tax to government. In these 5 cases, even though the credit is availed by the recipient in his credit ledger, it will be suspended for a period of 1 year. What will happen in this 1 year? Within that 1 year, if it is your mistake, you should rectify it. What is your mistake? You have not updated the registration because you change the address. You have to update it or get the duplicate invoice to prove that invoice is there. You got it? Or show the evidence that you have actually received the goods. Or your supplier should rectify the mistake. What is that? They should update the address in registration, or they should have made the payment of tax. What are the 5 cases, pa? Your supplier is not in existence or not doing business from the place where they have obtained registration. Now they need to update the registration. Number 2, recipient is not in existence or not doing business from the place where they have obtained registration, so they need to update that. Or number 3, you have availed the ITC without receipt of goods, so show the evidence that you have received the goods. Number 4, invoice is missing, get the duplicate invoice. Number 5, your supplier did not pay tax to government, ask the supplier to pay the tax to government. Automatically your suspended ITC will be received by you, so you can use it for payment of your liability. What if in 1 year all these things are not done? Then whatever they have suspended, permanently it will be disallowed. Okay, so GST officer has power to disallow the set off of provisional credit against GST payable for what period? For a maximum of 1 year, if he is of the opinion that these 5 cases, upon expiry of 1 year from the date of restriction, what will happen? The registered person shall be able to debit input tax credit so disallowed, subject to any other action that may be taken against such person. So after 1 year, permanently it will be disallowed, or it may be given to the person, depends. Okay, next we have 86B. What does 86B says? Even though you have sufficient balance in the electronic credit ledger, but you cannot use that money for payment of your liability fully. How much you can use? Only 99% of your liability you can use from the credit ledger, and 1% of your liability should be paid through cash ledger. So when this percentage 1% provision is applicable, you have to pay 1% of your liability. Which liability pa? FCM liability or RCM liability? FCM liability, because RCM liability anyhow you pay by cash ledger only. So therefore FCM liability you have to pay 1% through cash ledger. Okay. So say this, pay 1% of liability through cash ledger even if there is balance in credit ledger to pay. But when it will be applicable? Turnover in a month exceeds 50 lakhs. While counting turnover, which turnover should be taken? Only taxable turnover. Total how many turnovers we have? 4. Taxable, exempted, non-taxable, zero rated. Will zero rated be counted? No, minus zero rated. Will exempted be counted? No, minus exempted. And exempted includes non-taxable, so take out. And therefore which turnover? Directly it can be given taxable turnover other than exempted, non-taxable, zero rated. Only taxable turnover you need to take. If it exceeds 5 lakhs, then 86B is applicable. Then, and it is not applicable to whom? Not applicable to government and their family members. That is central government, state government department, local authority, government authority, that is statutory body, or PSU. For these people it is not applicable. See, mainly they are creating this provision to have a cash inflow. Mainly for a cash inflow, because this provision was created during the COVID period. What has happened up to February, March and all in 2020, we were not prepared for COVID, and normally we made a purchase. Like how this cyclone came, we did not prepare for it. Suddenly out of syllabus it came, and when it came, what happened during COVID? Did the business made any sales? No, fully locked down. What we were doing? Clapping, lighting lamp, etc. and all. Where we did any business? We did not do any business. And at a later point of time, slowly they have opened, restricted lockdown. At that time our liability was very less. But ITC, huge ITC is there. If this much of ITC used for payment of that liability, then definitely government will not get any money, because lot of credit is there. So they brought in this provision telling that you cannot use full credit, at least pay 1% of your liability through cash ledger. Like that they created. I myself beggar, and what if I am asking my another beggar? Correct. That's why for government departments or local authority or PSU, this is not applicable, because what's the point in asking another person who is of the same breed? You understood or not? So therefore not applicable to government department, PSU, local authority or statutory body. Then also this rule is not applicable in the following cases. Number 1, such person or proprietor or karta or managing director or any of its 2 partners deposited income tax more than 1 lakh in each of the last 2 years. What is this? Already they created a cash flow. How they created a cash flow to government? By way of income tax. How much they paid income tax? More than 1 lakh in each of the 2 financial years. Got it? Who? Either that person or karta or partners, any of its 2 partners, or managing director or any authorized signatory, if they have paid more than 1 lakh in each of the 2 preceding financial years. Number 2, suppose if they have got already refund of ITC more than 1 lakh in the preceding year, means they have excess balance in ITC, just in the last year only they claimed refund. Again this year if you collect from them, they will take stones and hit you. Correct or not? Last year if you gave this year you are asking, means why will they pay? Definitely they will not pay. So therefore received a refund of unutilized ITC more than 1 lakh in the preceding year. Number 3, concentrate. Cumulatively during the current year, from April, you already paid more than 1% through cash ledger. So this month we don't have to pay through any cash ledger, because already you paid more than 1%. That is up to last month. Say we are now in December month, up to November month. From when? April to November. April to November, see how much already you paid through cash ledger. except RCM. Except RCM, how much you paid through cash ledger, divided by, including December, you see your total liability. For example, up to November, you paid 1.5 lakh through cash ledger, divided by, what is your total liability? Total liability is 100 lakhs. 1.5 lakh divided by 100 lakhs into 100, that is 1.5%. Means more than 1% you already paid. So December month, should you pay anything through cash ledger or fully you can pay through credit ledger? Fully we can pay through credit ledger. Okay, va? Suppose up to November month we paid 1.5 lakh and our total liability is 200 lakhs including December. Now 1.5 lakh divided by 200 lakhs into 100 is how much? How much? Less than 1%. Less than 1% means whether we paid through electronic cash ledger more than 1%? No. So for December month, what you should do? 1% of liability should be paid through cash ledger. So we cannot use fully input tax credit. Okay, Vapa? See the formula. Amount paid through cash ledger up to previous month in the current financial year, that is up to November, divided by total gross liability up to current month in the financial year, that is including December. From April, what is your gross liability? Into 100. If it is greater than 1%, rule 86 be applicable or not applicable for the current month? Not applicable for the current month. Whereas if it is less than or equals to 1%, then rule 86 be applicable for the current month. Means current month we have to pay 1% through cash ledger. Then look into the next section, section 50. So this is interest on account of delay in payment of tax. There are three situations where we come across interest on account of delay in payment of tax. Number one, delay in filing 3B. You have to file 3B return. What is the time limit by which you need to file 3B return? 20th of the month following every month. If there is a delay in filing 3B return, means there is a delay in payment of tax. As there is a delay in payment of tax, you need to pay interest. How much? Interest rate 18%. From which date to which date? From the due date of that GSTR 3B to actual date of filing 3B. Say 20th of January is the due date, you filed on 31st of January. Means how many days delay? 11 days. For 11 days, that is don't count 20th, you count from next day till 31st Jan, so 11 days. For 11 days, we need to pay interest at the rate of 18% per annum. On what? Gross liability, net liability, remember pa, net liability. Net liability means what? Gross minus ITC. On net liability only we need to compute the interest. Please see situation 1. Delay in filing GSTR 3B. Interest at the rate of 18% from the first date after the due date till the actual date of payment, and it will be computed on what? Amount paid through cash ledger, that is net liability. And what will be taken as the date of payment? The date of payment is the date of filing GSTR 3B. Whenever you file 3B, that will be taken as the date of payment. And a highly important point, if you have sufficient balance in the cash ledger as on the due date of 3B, even though you filed 3B late, no interest. Example, net liability 4 lakhs. Net liability 4 lakhs. That 4 lakhs you deposited as on 20th January. December month oda net liability 4 lakhs, you deposited that 4 lakhs as on 20th January. But you filed return late on 31st January. Is there interest or no interest? No interest. Why? Already paid. Already paid means you deposited. It is there. Even though you filed a return late, it's okay. No issue, no interest. You got it? Suppose out of 4 lakhs, 3 lakhs we deposited as on the due date and 1 lakh we paid later. Now, and 1 lakh only. Means that much balance which is already there in the cash ledger as on the date of due date of 3B, if you have and you continue to have till the time you are filing 3B, there is no problem, interest will not arise. See that point. If sufficient balance is maintained in the cash ledger by the due date of 3B, so whenever you get an interest related computation for delay in filing 3B not tested, this attempt definitely it will be tested. Okay, definitely it will be tested. Interest is not payable on account of delay in filing GSTR 3B. You got it? No interest. And which balance we should see? Only that particular head or total all the heads? All the heads or that particular head? All the heads. Means entire balance in the cash ledger. In a cash ledger, CGST, SGST, IGST, like that different things are there. You see the total balance of the cash ledger. If the total balance of the cash ledger, you have sufficient amount, super. You don't have to pay interest. Not necessarily under that head. For example, CGST I have to pay 40, SGST I have to pay 40,000. 40, CGST, SGST. But under IGST head, there is 1 lakh. Is it okay? Yes. Yes. In the cash ledger, overall, how much you have? If sufficient balance is maintained, no interest. Then, next, you understood this first situation? Then second situation you see. Second situation, invoice not reported in GSTR 1 and 3B of a month but paid in another month, means arrears of tax. What is this arrears of tax? Some previous period we have to pay tax, we have not paid at that time and we are paying it now. Now in this case, what is the interest? Same 18%. And it is computed on what? Gross liability or net liability or gross liability. Even though part of that amount is paid through credit ledger, but we need to compute interest on gross liability. Interest at the rate of 18% from the first date after due date till the actual date of payment. Computed on what? Amount paid through cash ledger and credit ledger, that is gross liability. What will be considered as the date of payment? How to pay? Either through 3B or through DRC3. Actual date of filing 3B, or if payment is through DRC3, date of filing that form. Got it? Then next, third situation. What is the third situation? Wrong availment and utilization of ITC. You have wrongly availed and utilized the ITC. Interest is on what? Only on ITC? Availed or utilized? Utilized. Only on wrongly utilized. ITC wrongly availed and utilized, interest at the rate of 18% from the date of utilization till the date of reversal, and it is computed on what? ITC utilized. What is ITC utilized? How to find the ITC utilized? We learned this. See the balance in ITC. Whichever month the balance in ITC falls below the availed ITC, to that extent we have utilized, and for that month, see the next month, actual date of 3B or due date of 3B, whichever is earlier, that is the date of utilization till the date of reversal. So we need to compute the interest. Already we connected that in input tax credit. Then tax can be paid either through 3B or DRC3. DRC3 means demand and recovery notice 3. Such DRC3 can be filed any time. Now, how to check the balance in ITC while computing interest? Because if you have balance in ITC and if the balance in ITC falls below wrongly availed ITC, then only it is utilized. Now, which balance should be seen? Only that particular head. For example, IGST credit wrongly availed. So, which balance you need to see? All three. CGST, SGST, IGST. All three heads you see the balance in ITC. Sorry. CGST credit wrongly availed. Awesome. CGST, IGST. Yeah. CGST can be utilized for payment of CGST and IGST. Okay. Then SGST credit wrongly availed. SGST head and IGST head balance you see. Suppose compensation says wrongly availed. Compensation says balance only you see. If CGST and SGST credit wrongly availed, both CGST and SGST. CGST, SGST, IGST, all three we will check. Okay, Papa? Say this. How to check the balance in ITC while computing interest for wrong availment and utilization of ITC? If IGST credit is wrongly availed, check the balance in ITC of CGST plus SGST plus IGST. If CGST credit is wrongly availed, check the balance in ITC of CGST plus IGST. Suppose if SGST is wrongly availed, check the balance in ITC of SGST plus IGST. Compensation says credit wrongly availed, check the balance of compensation says. One more line you write down. If CGST and SGST, if CGST plus SGST credit wrongly availed, if CGST plus SGST credit wrongly availed, then check the balance of, check the balance of what? CGST plus SGST plus IGST. If CGST plus SGST credit wrongly availed, then check the balance of CGST plus SGST plus IGST. Okay. Then look into practice manual related to this. We have some questions on interest computation. Page number 142. Page number 142. Balance in electronic credit ledger can be utilized against payment of what? Only output tax liability. We cannot use for interest, penalty and late fees. Which of the following shall be discharged first while discharging the liability of a taxable person? You tell me, pa. Which month liability should be paid first? Current month or previous month? Previous month. First we need to pay previous month liability. All dues relating to previous tax period. Then only current tax period. Then only arrears of tax. Previous month you would have reported liability in GSTR1. Naya, without filing 3B of last month, how can you pay GSTR 3B of this month, pa? Last month 3B you should have filed, na? Sir, GSTR 3B of last month without filing, this month you cannot report liability at all. You got it? So what is the sequence? First GSTR 1 of last month, then GSTR 3B of last month, then only GSTR 1 of this month. You got it? So which liability should be paid first? Last month. Last month, then only current month. What if you have not at all reported the liability? Then okay, arrears of tax you can pay later also. So first last month, then current month, thereafter arrears of tax. So option A is the answer. TT Private Limited, registered in Rajasthan, furnished the following information for the month of June. Interstate sale of goods 1,25,000 to JJ Enterprises, interstate purchases and intrastate purchases, and the applicable rate of GST is 18%. Compute the GST payable. Okay, 1,25,000 into 18. How much is the liability? 22,500. Now, no need to see the options. Option C is the answer. Yeah. Ayya, question la enna liability irukuppa? What is the liability in the question? IGST. How in the answer CGST, SGST will come? Definitely it will be IGST liability only. So option C is the answer. Okay, wow. Then 22,500, and what is the credit that we have? IGST credit and CGST credit. IGST credit 40,000. 40,000 into 18%, that is 7,200, and CGST, SGST credit. So fully if you use, you will end up with 3,600 only. Then next, see this question number 2. Mr. A has deposited a sum of 30,000 rupees under the minor head of interest for the major head of IGST. Under IGST interest, he deposited some money. At the time of filing 3B for a particular tax period, he noticed that there was no sufficient amount under the minor head tax towards the payment of 30,000. When approached with the jurisdictional tax officer, A was guided to deposit the tax amount under proper head of account and claim refund for the remittance of the amount deposited under the head interest. Examine the relevant provisions of CGST towards payment of tax and compliance with the law. You tell me. Actually, they should have deposited under IGST tax, but they deposited under IGST interest. But officer is telling again deposit 30,000 in IGST tax, and whatever is there in interest you get as a refund, like that officer is telling. Is the officer valid or invalid? Why? We can use PMT 9 for transfer of balances from one cell to another cell. So we can file that form to shift the balance of 30,000 which is in interest under IGST to tax under IGST and can be used for payment. That is the answer for this. Then next one. See this question number 8. Remaining and all theory questions pa. Suhasini, but you have to read. Practice manual, your target I will tell you. After completion of today's class, over actually, only one chapter left, returns. Napa? We completed all the portion, okay. Your target is what you know. Today we will complete Mighty 50 also. The target is simple for you. You have to complete this practice manual. That you need to do. I revised everything. Now you don't have to sit and read the book again from the beginning. Don't read. Book already you have. Every page I discussed from that. Now you solve this, you get doubt, refer to the book. Reverse working. Okay, va? Solve the questions, you get it out, you know. While solving the question, close the answer and try to recollect. Check the answer. Super. Perfect. No. Then check why you went wrong. Read the provision. You got it? Like that you prepare. Now it is only about application. It's not about reading, because in 4 days we have completed that reading job. Now what you need to do is the practice. In that lot of questions we are discussing, and remaining questions you need to complete it. Okay. Then, and also the last case scenario MCQs, that also you need to say this. Suhasini is a registered software consultant. On account of her ill health, she could not provide any service during the month of October. However, she had to incur all the expenses related to her office. She paid 75,000 to various vendors. The total input tax involved on the GST procured on the goods and service procured by her is 13,500. Out of the total bills paid by her, one bill relates to 15,000. So security services availed for security of her office, tax on which is payable under RCM, and ITC involved in such bill is 2,700. Suhasini is of the opinion that for the month of October, no GST is payable from cash ledger. How much is the total GST paid on inward supplies? 13,500. In that 13,500, this 2,700 is the GST under RCM. Okay, va? And no GST payable from cash ledger as she has sufficient balance in ITC for payment. No. This 2,700 should be paid in cash even though there is sufficient balance in the credit ledger. So Suhasini is wrong and she will be required to pay GST of 2,700 through electronic cash ledger. Then next, see this question number 10. Messrs. Salty and Spicy Limited reduce the amount of 1,50,000 from the output tax liability in contravention of provisions of section 41 for the month of April, which is ineligible credit. So wrongly they availed the ITC. How much ITC? 1,50,000. A notice was issued by the department to pay tax with interest, and they paid the tax with interest on 31st July. Calculate the interest liability. Now which month this is? April. April. So we need to know the date on which they utilized. 1,50,000 for the month of April. For the month of April. Now we need to know when it is utilized. We don't have the information in the question. So take the assumption. What is the assumption you need to take? April month itself it is utilized. Means what is the date of utilization? Next month 20th. April month utilized means how to utilize? Through 3B it should be utilized. 3B when it is filed for April? 20th of May. So 20th May will be taken as the date of utilization. Is it clear? So we need to count the interest from 20th May till 31st July. Please do. 20th May means don't count 20th May. Remaining days you see in May. That is 11 days in May. And June it will be 30 days. July it will be 31 days. That is for 72 days we need to calculate. What is the special point we learnt in this illustration? When the date of utilization is not given, we need to take the date of availment itself as the date of utilization. Got it? Then next, see this question number 11. Mr. Aman A registered supplier of taxable goods filed 3B for the month of January on 15th April. For January month, what is the due date? 3B due date? 20th February. But when are they filing? Means delay in filing 3B. The prescribed due date to file the 3B was 20th February. The amount of net GST payable on supplies made by him for the said return is 36,500, which was paid on the same date. Briefly explain the related provisions and compute the amount of interest payable. Come on. What is the interest pa? Sir, delay in filing 3B. What is the net liability? 36,500. For delay in filing 3B, we need to compute interest on what? Net liability. From when? From the due date of 3B till the actual date of 3B. What is the due date of 3B? 20th February. So in February, how many days? 8 days. March 31 days. April 15 days. So total 54 days. For 54 days, we need to pay interest. 36,500 into 18% into 54 by 365. 972 rupees should be taken as the interest payable. Is that clear? Next. Say this, question number 16. Raghav Limited have filed their 3B for the month of July within the due date prescribed under 39, that is 20th August itself they filed 3B. Post filing the return, the registered person has noticed during September 21 that tax due for the month of July have been short paid for 40,000. So there is a short payment of 40,000 and it is arrears of tax. Raghav Limited has paid the shortfall of 40,000 through 3B of September 21 filed on 20th October. And how they paid? 30,000 through cash and 10,000 through credit ledger. Examine the interest payable under the CGST Act. Come on pa. Interest is payable on 40 or 30 or? Gross liability or net liability or? Gross liability. Why? Because it is arrears of tax. In case of arrears of tax, how you know arrears of tax? For that month already return filed, correct? See the first line. For that month already return has been filed. After filing return, they came to know that they have to pay tax. Means it's arrears of tax. For arrears of tax, interest will be computed on gross liability. At what rate? 18%. From which date to which date? From the due date till the actual date. Actually, this pertains to which month? This 40,000 pertains to which month? July. For July, what is the due date? 20th August. So you count from 20th August. In August, how many days? 11 days. And September, 30 days. October, 20 days. Because you are going to make payment on 20th October. So how many days delay pa? 61 days. So see the interest computation. 40,000 into 18% into, it is 61 days pa. It is 61 days. 61 days, not 60 days. 61 days should be taken. Why, sir? See, 20th means don't count 20th. Then in August, 11 days. September, 30 days. And October, 20 days. 61 days is correct only. Okay, they made a calculation by taking 21st and all. But the due date clearly it is given as 20th only. 20th August only. So 61 days should be taken. And what is the interest? 40,000 into 18% into 61 divided by 365. How much? 1,203. 1,203 should be taken. Next. Here there is another part. What will be your answer if 3B for the month of July has been filed belatedly on 2010 and the self-assessed tax of 40 has been paid on 2010 using cash ledger 30, credit ledger 10? Means July month return you are filing late. Then automatically it is not arrears of tax. Delay in filing 3B. In a situation 1 year, then interest will be computed on what? Net liability. What is net liability? 30,000. Gross 40 minus 10, net 30. On 30,000 only interest computed. Same number of days. That is 30,000 into 18 into 61 divided by 365. So 30,000 into 18%, 5,400 into 61 divided by 365, that will be 902. 902. You have to round it off to nearest to 1 rupee. You have to round it off nearest to 1 rupee. Next. Now see this. Note, there exists, what is the due date? 20th August, correct? There exists adequate balance in the cash ledger and credit ledger as on 31/7 for the above shortfall. Then in that case, interest not payable, correct? So if there is sufficient balance, then interest is not payable. So here in this case, if there exists sufficient balance, then interest is not payable. Then interest is not payable on account of what? Delay in filing 3B. On account of delay in filing GSTR 3B. Only in that case, interest is not there. See, if there is sufficient balance in the credit ledger or cash ledger, we should see the cash ledger actually, and then you don't have to pay interest. That is on account of delay in filing 3B, only for that, not for arrears of tax, only for delay in filing 3B case. Is it clear? For arrears of tax, definitely you have to pay, whether you have sufficient balance or no sufficient balance. For arrears of tax, interest is always payable, only in case of delay in filing 3B. Next. See this question number 19. Mr. Manik provides the following information regarding his tax and other liabilities under GST Act as per electronic liability ledger. Tax due for the month of May, interest due for the month of May, penalty due for the month of May, tax due for the month of June, liability arising out of demand notice 73. You tell me first which should be paid. So first previous month what? Tax due, correct? Tax, interest, penalty, everything, all dues. 25,000, 2,000 and 3,000. How much? Thereafter second priority will be 35,000 and then only 48,000. Okay. We discussed now priority in paying. So based on that they have given question in May 23. Then remaining questions and all based on this only, the interest computation only, whatever we discussed based on that types. Now let's proceed to the last chapter in our discussion, returns under GST, page number 164. Returns under GST. First we need to understand what are the various returns, who is required to file that return, and by when that return needs to be filed. First return is GSTR 1. Who is required to file that GSTR 1? Every registered person. What does the GSTR 1 contains? Only outward supply details. And this GSTR 1 time limit is what? 11th of the month following every month. However, it can be filed on a quarterly basis also. If it is quarterly return, then what is the time limit? 13th of the month following every quarter. So if it is monthly, 11th of the month following every month, quarterly, who will be filing it quarterly? QRMP. Then 13th of the month following every quarter. Then GSTR 1A, like that they have made a new return now. That is, for July month, you have filed the GSTR 1 by 11th of August. Please concentrate. For July month, you have filed GSTR 1 by 11th of August. And you have to file 3B by 20th of August. In this between, you came to know that in one you have made a mistake. Can you rectify that mistake? Yes. How you can rectify the mistake? Through 1A. Again I am repeating. July month, 11th August, you file GSTR 1. And 20th August, you need to file 3B. In this between gap, you have made some changes to GSTR 1 through 1A. Can you do that? Yes. Yes. And that effect will be there in the 3B. which you are going to file on 20th of August. 11th of August you file GSTR1. By 20th August you are going to file 3B. In this 9 days gap, you can amend the GSTR1 through 1A. So 1 oda impact, 1A oda impact will be there in 3B of that month. That is by 20th of August. But see the twist. Your recipient will be able to take ITC only as per 1, not as per 1A. You got it? Then 1A effect will be there for him in the next month 2B. See how unfair. Liability wise, immediately liability is coming. But ITC wise, next month only ITC will be reflected. You got it? So your liability will be updated immediately. But your recipient ITC will be updated at a later point of time, next month. Okay. So what is the purpose of 1A? For amending the details furnished in GSTR 1. What is the time limit by 1A should be filed? Before filing 3B of the respective month. Due date of filing 3B, actual date of filing 3B. Actual date of filing 3B. What if you file 3B on 25th? Till 25th, we can amend. What if you file 3B on 30th? Till 30th, we can amend. They did not tell due date of 3B. They said actual date of 3B. Then there is something called as IFF, that is invoice furnishing facility. Please concentrate. If I am filing returns on a quarterly basis, what will happen to your ITC? You will be getting that in 2B also quarterly. Sir, if I file GSTR1 monthly, for you the data will be reflected in 2B monthly. Suppose if I file GSTR1 quarterly, after that quarter only you will be able to get it in your 2B, correct? Then definitely you will not be okay with this, because sir, if you are going for quarterly, why should I suffer? So I want the ITC this month itself. You file the return quarterly also, but why should I suffer? So because of that reason, they brought in a functionality called as invoice furnishing facility, wherein even though I am under quarterly return, all my B2B supplies means what? Sale to registered persons, I will put it in IFF, will be filed on a monthly basis by 13th of next month. So it will be reflected to you in the 2B in the same month itself. Got it? But what about third month? First month, for example, April to June. April month, when I will file IFF? By 13th of May. May month I will file by 13th of June. What about June month? I will not file IFF, because anyhow for all these 3 months I am going to file GSTR1 by 13th of July. Okay, wow. See there. IFF in case of QRMP for the first 2 months in a quarter. By when it should be filed? 13th of the month following every month. Then GSTR 3B. GSTR 3B is a comprehensive return that contains details of all liabilities, etc. and all. And by when this GSTR 3B needs to be filed? If I am under monthly, 20th of the month following every month. If I am under quarterly, 22nd or 24th of the month following every quarter. Okay, Papa. Monthly time limit is what? 20th of the month following every month. If it is quarterly, 22nd of the month following every quarter, or 24th of the month following every quarter. Which states it will be 22nd? Say this. You remember few states, GMCA states you take. Okay. You just put it like 7 for Dhoni. Okay. So Gujarat, Madhya Pradesh, Chhattisgarh, Andhra Pradesh. 7. Okay. 7. You just see in the middle. Gujarat, Madhya Pradesh, Chhattisgarh, Andhra Pradesh. And states below that. GMCA and states below that. Gujarat, Madhya Pradesh, Chhattisgarh, Andhra Pradesh. And states below that. Means which states? Maharashtra, Telangana, Goa, Karnataka, Kerala, Tamil Nadu, Pondicherry, and Andaman and Nicobar, Lakshadweep, all these things, it will be 22nd. Whereas all states above that, what is that? Orissa, Jharkhand, West Bengal, Uttar Pradesh, Rajasthan, all those things will be 24th. Okay. So Vadakkans will be filing on 24th pa. Tekkans will be filing by 22nd. You got it? Then, so GMCA, Gujarat, Madhya Pradesh, Chhattisgarh, Andhra Pradesh and all states below that, it will be 22nd. Others will be 24th. Then, how the details should be reported in GSTR1? Invoice wise details? Yes. If it is B2B, always invoice wise details. Don't check whether it is intrastate or interstate. B2B means what? Sale to registered person, always invoice wise details. If 100 invoices are there, all 100 invoices you put separately. Whereas, if it is B2C, means what? Sale to unregistered person. If it is intrastate, within the state, you can do state wise, like full consolidation. Means what? Don't put invoice wise. Add all the invoices, total liability. The total liability alone you put it there. Which case pa? B2C intrastate. If it is B2C interstate, you check how much is the invoice value. If the invoice value is more than 1 lakh, put it invoice wise. If the invoice value does not exceed 1 lakh per invoice, then total it and put the consolidated figure state wise. Is it clear? So you have to remember only 3 provisions. Point number 1, B2B, always invoice wise. B2C intrastate, always consolidation. Correct? B2C intrastate, always consolidation. B2C interstate, more than 1 lakh per invoice, invoice wise. Otherwise, state wise consolidation. Then next, GSTR CMP 8. Who will file CMP 8? Already we discussed. Composition scheme. By when? 18th of the month following every quarter. GSTR 4. Annual return. Why? When? 30th June of the succeeding financial year. And GSTR 5. NRTP. By when? 13th of the month following every month or 7 days from expiry of registration, whichever is earlier. Why like that? Because NRTP will not have a permanent registration. The registration is only for a period of 90 days plus 90 days. That's why 13th of the month following every month or 7 days from expiry of registration, whichever is earlier. Then GSTR 5A. Who will file GSTR 5A? OIDR supplier. Where is that they are located? Outside India. So that will be like 3B, regular 3B return. That is 20th of the month following every month. GSTR 6, by input service distributor. I told you na, head office which takes the credit and distributes the credit. What is the time limit? 13th of the month following every month. 7 and 8 will be filed by TDS and TCS. Time limit 10th of the month following every month. Then 9 series. 9, 9C, 9B, 9 normal annual return, 9B annual return by e-commerce operator. What is the time limit for 9 series? 31st December of succeeding financial year. But remember this very important point pa. Only when your turnover, aggregate turnover exceed 2 crores, then only annual return is required. If your aggregate turnover does not exceed 2 crores, annual return not required. Got it? So 31st December of this next financial year, if aggregate turnover during previous year exceeds 2 crores. Then 9C will be self-certified reconciliation statement. That is, why will there be mismatch between turnover as per your books versus turnover as per GST, ITC as per your books versus ITC as per GST records? Why there is a difference? That reconciliation you need to do and you need to submit. That is called as 9C, reconciliation statement. To whom that 9C is applicable? Aggregate turnover exceeds 5 crores. For them only it will be applicable. Time limit same. What is the time limit? 31st December of succeeding financial year. GSTR 10 is a final return. When that final return will be filed? After cancellation of registration. What is the time limit within which the final return will be filed? 3 months from the date of cancellation, or 3 months from the order of cancellation, whichever is later, not earlier, whichever is later. What is cancellation date? Effective date of cancellation. What is cancellation order? They will pass an order of cancellation. See, today they pass an order of cancellation with a retrospective date, back date. The date on which they have cancelled is the date of cancellation, but today they gave an order. Correct? Cancellation can be futuristic also. Today they will pass a order for cancellation with effect from a future date. You understood? That's why whichever is later plus 3 months. The 3 months is common for both. Next, GSTR 11 is a return to be filed by UIN holder. Unique identification number holder. They will get refund of GST paid on their inward supplies. I told you na. That particular UIN holder will be filing GSTR 11 containing the details of their purchases. When they need to file, whenever they are filing refund application, at that time they need to file this. At the time of filing refund claim. So these are the various returns with the due dates and the purpose, like person who will file it. Mostly for MCQ. Whatever we discussed in this, mostly for MCQ they will be giving this. Next, special points on returns. Without filing GSTR 1, that is 3B of previous month, can we file GSTR 1 of current month? No, I told you already. Sequential filing of returns. First you file 1, then you file 3B, then only this month you can file 1 and then 3B, like that. Without filing GSTR 1 of a month, 3B cannot be filed for that month. Also without filing 3B of previous month, 1 cannot be filed for the current month. And this already we discussed. Third, like restriction in 38. Second point, you see, government on the recommendations of council may allow person to file GSTR 1 even if not filed for prior period. This is exception to the first point. First point says without filing previous month 1, you cannot file this month 1, but it is possible only with the approval of government on the recommendations of council. Then look into this, who are not required to file 1 or 3B. Who are not required to file 1 or 3B, remember tonic in the T square, okay, tonic, T for TDS, TCS deductor. Why? Because they file GSTR 7 and 8. O, OIDR supplier, because they will be filing 5. N, NRTP, so they will file 5. OIDR will file 5A, NRTP will file 5. Then TONI, input service distributor, because they file GSTR 6. Then IC, composition scheme dealer. Why? Because they will file CMP 8. That's the reason why these people are not required to file 1 and 3B. Same way. Who are not required to file annual return? Remember CAG tonic. CAG tonic. What is CAG? Generally CAG is what? Comptroller and Auditor General. A person whose records are subject to audit by CAG, they are not required to file annual return. Okay, Papa? Persons whose records are subject to audit by CAG. Who are the persons subject to audit by CAG? Government departments, PSUs, etc. They are not required to file annual return. Then tonic, same. TDS. Because TCS they will file GSTR 9B. Okay, wow. So TDS. O, same. OIDR supplier. N, same. NRTP. I, same. Input service distributor. But extra C is casual taxable person, not composition scheme. Because composition scheme also will file annual return GSTR 4. Next, annual return for TDS deductor, that is, sorry, annual return for TCS deductor. Annual return for TCS deductor, that is 9B, is yet to be notified. Is yet to be notified, but it is there. Return is there, but practically it is not implemented yet. GST not payable at the time of filing GSTR 1. However, GST is payable at the time of filing 3B. If any person is not required to file 9 but has an unpaid liability, that is annual return, they are not required to file but they have unpaid liability. How they can pay? DRC 3. I told you, anytime you can file DRC 3 to pay your liability. They can discharge the same using DRC 3. A taxpayer need to electronically sign the submitted returns, otherwise it will be considered as not filed. Next, that is when they upload the return, file the return, there will be something called as EVC, e-verification. So, or digital signature. They need to click on that e-verification or digital signature and they need to do the digital sign or e-verification sign. Then only the return will be filed. Taxpayer opting for voluntary cancellation of GSTIN has to file GSTR 1 for the active period. For example, up to say 1st December my registration is cancelled, means up to November I have to file the returns, correct? 1st December my registration is cancelled. What I told you, up to the date of cancellation we should file our returns, any cost, got it? So up to the date of cancellation of registration they have to file the GSTR1, and in case of goods HSN, in case of service SAC, needs to be updated in the returns. So HSN, harmonized system of nomenclature, we discussed in tax invoice, that SAC, service accounting code, that should also be updated in the returns. These are some general points related to returns. Then look into the next page, late fee for delay in filing returns. What is that late fee? Please concentrate. If you are not filing GSTR 1 or 3B by time, then the late fee will be nil return 10 rupees per day, other than nil return 25 rupees per day. What is the maximum? For nil return 250 rupees, for other than nil return depends. If your turnover during the previous year does not exceed 1.5 crores, then maximum will be 1000 rupees. If your turnover exceeds 1.5 but does not exceed 5 crores, 2500 rupees. If your aggregate turnover during previous year exceeds 5 crores, then what is the maximum late fee? 5000 rupees. And this late fee is under CGST Act, means a equal late fee will be payable under SGST Act. Is it clear, pa? Now, how a question will be given related to this? You can see that. Question number 14 in page 145 you see. Question number 14, page 145. Mr. Ayushman, a registered person having intrastate aggregate turnover of 1.2 crores in the preceding financial year, did not file 3B for the month of September 2021 by 10th November. How many days delay? How many days delay? September month, by when it should be filed? GSTR 3B by 20th of October. So when are they filing it? 10th of November, means how many days delay? 21 days delay. 20th October pa, so October la 11 days, November la 10 days. So 21 days there is a delay. For the 21 days delay, they have to pay late fee. And the amount of tax payable is 8 lakhs, means nil return, other than nil return, other than nil return. So therefore they have to pay late fee. How much is the late fee payable? 25 rupees per day into 21 days. How much? 525 rupees. And their turnover during the previous year is 1.2 crores. So maximum will be 1000 under CGST only. So what we have to take? 525. Puridappa, total is not 1000. Ayya, total is not 1000. CGST is 1000. And what we got? 525. So 525 we will take. 525 under CGST and 525 under SGST. So therefore 1050. Maximum is 2000. Okay. Next. What will be your answer if Ayushman has intrastate aggregate turnover of 5 crores in the preceding financial year? See, this is same, but maximum it will go up to 5000, 2500 under CGST, 2500 under SGST. Then next, what will be your answer in A if the total amount of tax payable in 3B for the month of September is nil return? Nil return means 21 into 10, how much? 210, subject to maximum 250. So 210 only will be taken. So 210 plus 210, that is 420, and maximum will be 500. Okay, wow. We will not be prepared for this, but they will ask a question like this. So actually easy it is. It is easy, and we will think, why should we learn this and go for exam? In one question for 5 marks they will ask like this. Okay, purely on late fee computation. It's not something which is not possible, because already they gave in RTP. So far they did not ask, that's it. So far they did not ask, but definitely they can make a question like this. So say this, you understood the late fee per GSTR 1 and 3B. Mostly it will be 1 and 3B or 9. These two late fee only you will be getting. And see the next one. What is the next late fee? GSTR 4. Now you tell me to whom GSTR 4 is applicable? Composition scheme. What should be your turnover for composition scheme during previous year? It should not exceed 1.5 crores. If your turnover does not exceed 1.5 crores, what is the maximum late fee? 1000. So copy paste. Nil return 10 rupees per day subject to maximum 250. Other than nil return 25 rupees per day subject to maximum 1000. So this portion pa. This portion. Is it clear? Definitely composition scheme means turnover during previous year will not exceed 1.5 crores na. So 1000. Then 5A and 6. Nil return 10 rupees per day, other than nil return 25 rupees per day, no change. But maximum alone will be 5000 flat. GSTR 7, nil return has to be filed. If you are not filing nil return, there is no late fee, it is waived. Why? Government. Part TDS, GSTR 7 is TDS deductor, no late fee, waived. Other than nil return, we discussed 24 rupees per day subject to maximum 1000. GSTR 8, what is the late fee? 100 rupees per day subject to maximum 5000. Then GSTR 9 and 9B, 9C you see. So what is the late fee? Per day late fee. If your aggregate turnover during previous year does not exceed 5 crores, then it will be 25 rupees per day. Suppose if it exceeds 5 crores but does not exceed 20 crores, double 50 rupees per day. If it exceeds 20 crores, then again double, that is 100 rupees per day. So 25, 50, 100. Maximum first two cases 0.02% of turnover. Last case 0.25% of turnover. 0.02%, it is 0.25%. So here also there is a computation possibility is there. That's why either you may get a late fee computation on 1 and 3B or 9. Apart from this, any other return 100 rupees per day subject to maximum 5000. An equal amount of late fee is payable under SGST Act also. Late fee under IGST Act is not applicable if late fee is payable under CGST, SGST. And late fee for returns is automatically computed by the portal. So you don't have to do that practically, it will only compute. And how the late fee can be paid? Only through cash ledger. In exam don't write late fee will be automatically done by portal, so therefore I am not required to do the computation, give me marks like that and all, don't write. You have to compute for exam purpose. Filing nil return through SMS, that is 3 returns, you don't have to log in at all and you can send a SMS. Got it? You don't have to log in into the portal, just send SMS so that return is filed. So what's the return? GSTR 1, GSTR 3B and CMP 8, provided all the entries in the return are nil. For example, you have some ITC but no liability, you cannot file nil return. That you have to log in and enter the details. Everything should be nil. Then you can file it through SMS. Then notice to return defaulters. What is this notice to return defaulters? Whenever you are not filing returns. In income tax also this point is there. One notice will be given to you asking you to file return. Same way in GST. If you are not filing returns, a notice will be given to you asking you to furnish the return. What is the time limit within which you need to furnish the return? Just that much you remember. Time limit is 15 days. Within 15 days from such notice you need to file return. What if you are not filing return within 15 days? They will do best judgment assessment and recover the tax from you. Got it? Best judgment assessment means what? Based on the data available with them, they will compute how much tax you need to pay and directly it will be recovered from you. If not filed within 15 days, after notice, then officer recover GST based on the information available with him, that is bank statement. Based on that they will do the recovery. Then rectification of returns. So rectification of returns already we discussed. What is that? Whenever there is rectification of GSTR 1, GSTR 3B or GSTR 8. What is the time limit by which rectification should be done? 30th November of succeeding financial year or date of filing and return, whichever is earlier. Then GSTR 1 shall be blocked or restricted in the following cases. Means what? You cannot file the GSTR 1. Which cases pa? This is important for theory. Mark it as important for theory. GSTR1 shall be blocked or restricted in the following cases. Means you cannot file those returns. When? Number 1, if you have not filed the GSTR1 of the previous month, or you have not filed the GSTR1 of the previous quarter. 2. Then next, you have to give the bank details within the time, but you have not given the bank details. Number 4, you have to, that is, there is a difference between GSTR1 and 3B, and they gave an intimation to you. You did not properly reply to that intimation or pay tax within 7 days. Then also they will block our GSTR1, correct? Or you availed ITC in 3B more than 2B, they gave an intimation. Within 7 days, either you have to give reply or pay the difference. Otherwise, they will block our GSTR1. We discussed this too, 88C, 88D, that. So, in these 5 cases, our GSTR1 will be blocked. Means we cannot file our GSTR1. Then, see this new GST return structure. Already I have explained to you about this. What is that? After you file GSTR1 of a particular month, that is, say, for the month of July, by 11th of August, you would have filed GSTR1, and thereafter by 20th you need to file GSTR3B. Between 11th to 20th, if there is any changes, that can be done through 1A, and this amendment effect will be there in the 3B of the supplier. But what will be there in the 2B of the recipient? Only those details which are filed by 11th will be reflected in 2B, correct? So, by 11th, whatever you are filing, only those details will be generated in 2B. Only details in GSTR 1. Only those details in GSTR 1 will be reflected in 2B. But whatever details of GSTR 1A will be reflected in which period? Next month. Amendment effect in GSTR 2B of the recipient when pa? In the next month, not this month. Got it? And what recipient should do? As and when supplier files GSTR 1, all those invoices will be reflected to him in invoice management system. In this invoice management system, all the purchase invoices will come. There will be 3 options for him: accept, reject, pending. Suppose if it is block credit, reject. If it is inward supply used for non-business, reject. If the inward supply used for exempted, reject. Remaining he can accept. Suppose goods not received, only invoice is there. Next month goods are received, or goods are received in lots, he will be able to take ITC only on last lot. Then he will keep all those invoices as pending. Those invoices which are pending will be carried forward to the next month IMS. Is this IMS mandatory or optional? Optional. What if I am not doing all those things? Every invoice will be travelled to GSTR 2B. Suppose if no action is taken, deemed accepted, and all the invoices will be going to 2B. If you take the action, rejected, pending will not be taken, only accepted invoice will be going to 2B. Pending invoices will be transferred to next month IMS. And all the returns you need to file within 3 years from the due date. All returns including annual return except CMP 8 can be filed belatedly. But what is the maximum time limit by which it should be filed belated returns? 3 years from its due date. Then looking into the next area, we are left with 2 more areas pa GST practitioner and QRMP scheme. First look into GST practitioner. Section 48 talks about GST practitioner. Who can act as a GST practitioner? What is the qualification to become a GST practitioner? Number 1, there should be citizen of India. Foreigner not allowed. There should be citizen of India. Person of sound mind, means not lunatic, not mental, or not something else. So they should be having person of sound mind, not like Tarbu star. Okay. Then not adjudged as insolvent. What not adjudged as insolvent means? insolvency petition has not been filed. He is not an insolvent, or insolvency petition has been filed on him. Not been convicted by a competent court for an offence with imprisonment less than 2 years. Means imprisonment more than 2 years cannot become GST practitioner. Up to 2 years if he is imprisoned, okay, he can become GST practitioner, no problem. Suppose if we go for jail, the imprisonment should be how much pa? Less than 2 years. Then he can become GST practitioner after he come back from the jail. So something should be there na. So therefore GST practitioner he can become. So what is the eligibility condition pa? Citizen of India, person of sound mind, not adjudged as insolvent, not been convicted by a court for an offence less than 2 years. And apart from this, what other condition should be satisfied, sir? He should have the prescribed qualification. What is that prescribed qualification? Graduation pa. So 11th, 12th cleared, 10th pass and all cannot become. Graduation is must. Or suppose if they have qualified 10th some 20 years, 30 years before and joined in government service, now they are retired, even they also can become GST practitioner, provided they need to write one test which is conducted by the GST department. Okay. Now this is about the person. What activities they can do, sir? What activities they can do? These 8 activities they can do. Number 1, they can apply for registration. Number 2, they can file returns. Number 3, they will make payment of tax, and if refund, they will claim the refund. Make payment or refund. Then file intimation for opting for composition scheme or withdrawal from composition scheme. They can act as an authorized representative, means rather than taxpayer going and meeting the officer, he can. And they will furnish the e-way bill entry, that is data entry they will do, information for e-way bill. And they will be entering details of goods sent on job work and received from job work. And they will make application or amendment of unique enrollment number. We discussed now UEN. So these are the 8 activities that can be done by a GST practitioner. And if they file return and if there is any mistake, who is held responsible? GST practitioner or registered person? Registered person. See that. Responsibility for correctness of particulars. The responsibility for correctness of any particulars furnished in the return or other details filed by GST practitioner shall continue to rest with the registered person on whose behalf such returns are furnished. So it is always on the registered person. And every statement furnished by GST practitioner, they need to get a confirmation. I don't know that if the registered person will know whether it is correct or not, he himself will file. Now why he will ask a GST practitioner to file? And the registered person before confirming should ensure that the facts mentioned in written are true and correct. What if he is not responding? Deemed to be accepted. Okay. Confirmation shall be deemed as deemed confirmation. So that is about this GST practitioner. Look at the next area, QRMP scheme. What is the full form of QRMP? Quarterly return, monthly payment. Means they file returns on a quarterly but pay tax on a. Why like that? Don't know. They created something. So even the government also don't know why they created this. They created. What is the use of it? They don't know. Quarterly return, quarterly payment means there is a benefit. Monthly payment, if I need to do, what is the pain in me to file the returns monthly? I can happily file the returns monthly. Na? So say this. What is the quarterly return time limit? GST are 1 by when? 13th of the month following every quarter. 3B? 22nd or 24th of the month following every quarter. To whom it is applicable? Aggregate turnover during previous year does not exceed 5 crores. Does not exceed 5 crores. Only for them. And how they need to pay tax? Monthly. But when they file return quarterly, how they can pay monthly? So they have 2 methods. Method number 1, fixed sum method. Method number 2, self-assessment method. And they have to pay any of these 2 methods. By when? 25th of the month following every month. And for first 2 months. Means say July to September you are in QRMP. For July, you need to pay by 25th of August. For August, you need to pay by 25th of September. What about September? Anyhow, for July to September, you are going to file 3B. Monthly payment of tax through PMT6 using fixed sum method or self-assessment method by 25th of next month for 2 months in a quarter. And next, suppose if they want to report B2B invoices, what they should do? They need to file a IFF. What is that IFF? Invoice furnishing facility, mandatory, optional? Optional. By 13th of the month following every month, for the first month and second month, they need to add these invoices. B2B invoices may be furnished optional on a monthly basis through IFF, which is reflected in 2A or 2B of the recipient. And this QRMP scheme is GST invoice, and distinct person have the option to avail the scheme for one or more GSTIN. It's not like composition scheme. In composition scheme, all in, all out, all the registrations will be under composition scheme, or all the registrations will be normal scheme. It is not like that here. I have 4 registrations. 2 registrations I can go for QRMP, and 2 registrations I can go for monthly returns. Then say this, time limit to opt in. Sir, for July to September, if I want to go for QRMP, by when I should decide? What is the commencement of quarter? July 1st. Within 1 month, that is by July end. Okay, by July end. And 2 months before. 2 months before means July 2 months before May. So between 1st May to 31st July, I need to decide. Remember, A for after, B for before. Alphabet A is 1, alphabet B 2. So 1 month after it, 2 months before. Okay, clear? That is the time limit for opting in. Condition for opt-in, what they should have done? All the pending returns should have been filed under monthly scheme. Then GSTR1 or IFF already we discussed. They can add the invoices in IFF, but what is the maximum amount for which invoices they can add? Maximum 50 lakhs. Underline that. The said details of outward supply shall not exceed 50 lakhs in each month. Only 50 lakhs worth of invoices in total can be added every month. Then next, they have 2 methods. What are the 2 methods? Fixed sum method or self-assessment method. In fixed sum method, what they should do? See the 3B of previous quarter. Take the previous quarter 3B. In that previous quarter 3B, say for example, July to September, you are in QRMP. Take the 3B of April to June. In that 3B of April to June, what is your net liability? Say 1 lakh. 1 lakh into 35%, that is 35,000. You pay in the first month and second month of this quarter. That is July you pay 35,000, August you pay 35,000. What about September? Anyhow, for 3 months you are going to file the actual return. In that you pay the differential amount. Got it? This is under fixed sum. Suppose if my 3B last was monthly 3B, then take that monthly 3B, see the net liability, say if that net liability is 40,000, you pay that 40,000 during the first month and second month. Why monthly 3B previous? Because it's the first quarter which you are going on QRMP, means last quarter it was monthly only. You got it? So quarterly filer of 3B of previous quarter, 35% of the tax liability in cash paid in the preceding quarter. Monthly filer of 3B of the previous quarter, 100% of the tax liability in cash paid in the last month of the preceding quarter. Then another method, what is that? Self-assessment method. Under this self-assessment method, what we need to do? You ascertain how much is your actual liability, and that much liability every month you pay. So that is self-assessment method. Any change in the method of filing 3B? No change. Normally only we will file. Compulsory opt-out. You tell me when we will come out of this QRMP? Whenever your aggregate turnover exceeds 5 crores. And levy of late fee. So for GSTR1 and 3B, if you file late, you have to pay late fee. But for delay in payment of tax, you don't have to pay late fee, but there will be interest. Look into this, interest on account of short payment or non-payment under QRMP. First concentrate pa. Fixed sum method we will take. Fixed sum method, under fixed sum method, April to under fixed sum method, April to June, your GSTR 3B liability is 1,50,000. Now July to September you are going for QRMP. July, August, September. How much is your FSM liability? For July and August, what is your FSM liability? 1,50,000 into 35%. What is 1,50,000 into 35%? 52,500. 52,500 you have to pay. By when it should be paid, this 52,500? By 25th August. Correct? This 52,500 by when it should be paid? By 25th September. Suppose if you pay this late, then interest. At what rate? 18%. From which date to which date? From this due date till the actual date. Okay, wow. FSM, what is the first interest? FSM, what is the first interest? See there. What is the first interest in FSM? Tax with respect to first or second month of the quarter. Tax with respect to first or second month of the quarter. Not paid by 25th of next month. Okay. Then next. Suppose if your actual liability is say 60,000 and 70,000 and 80,000. Now for July, how much you already paid? What is your actual? What is the difference? And for August, how much? Now, is there any interest payable on this 7,500 and 17,500? No. If you paid by? No. If you paid by which date? 22nd of October. Why 22nd of October? For July to September, what is the due date of 3B? 22nd of October. So by GSTR 3B due date, if you pay these three amounts, okay, if you pay these three amounts by when? By 22nd of October, you don't have to pay any interest. Correct, appa? Which interest? On this difference of 7,500 and 17,500. If you paid by due date of 3B for this quarter, you don't have to pay any interest on the difference. See just difference tax. What is difference tax? Actual minus tax already paid. With respect to first month and second month of the quarter, no interest. Correct? Appa when interest will be there? If this 7,500, 17,500 and 80,000 paid beyond 22nd October, then interest will come. See that GSTR 3B for the quarter filed late, then interest will be at the rate of 18% from 23rd or 25th of the month following the quarter till the date of filing 3B. As it is delay in filing 3B, interest will be computed on net liability. Okay, wow. This is in case of fixed sum method. In case of self-assessment method, first interest, third interest, both will be there. Extra one more interest will come on this 7,500 and 17,500 even if you pay it by 22nd October. Why? Because you are following self-assessment method on your own. You did not follow whichever method we are telling. You followed some method on your own. So that is self-assessment method. So if there is any difference, on what? Actual liability minus what you have already paid, on that you pay interest. From which date to which date? From 25th of the next month till the date of payment. See there. Under self-assessment method, that self-assessed tax, if you pay late, you need to pay interest. Plus on the differential tax also you need to pay interest. Is it clear? Plus beyond 3B if you are filing also you need to pay the interest. So extra on this differential tax there will be interest. That much you remember. Enough. Then interest not payable on differential tax under fixed sum method if such differential tax is deposited by the due date of 3B. However, if you are not filing it by 3B, that is differential tax you did not pay. What is differential tax? How much is the actual tax minus what you have already paid? So on the differential tax, if you file by 3B, no interest. Beyond that, interest will come. If it is which method? Fixed sum method. But self-assessment method, this point is not applicable. Then, so if you have not understood, don't worry, leave it. So far not asked also. And they will not be asking also. It's not that important. But the regular interest computation which we saw under section 50, that you understood now, that is very, very important. That all you cannot skip. Then first return. So every person is required to file his first return when? After registration. But in that return, not only the month for which they are filing return, but even for the prior period, they need to mention the details. For example, 22nd October, you are liable to register. You made application for registration on 18th of November and you got the registration certificate on 26th November. Now you are going to file the return for which month? November month. When you got the registration certificate, 26th November, means you are going to file the first return for November month. In that November month return, what details you need to report? Only from 26th November, no, 22nd October. From the date you are liable to register. Read. Every registered person who has made outward supplies in the period between the date on which he become liable to registration till the date on which registration has been granted shall declare the same in his first return furnished by him after the grant of registration. Is it clear? So with this we completed everything and we are moving on to Mighty 50. Okay. So first batch where I have completed everything without any pending part. Last 2 times after May exam, before that I completed, but last 2, May and September, I could not complete because the portion was extra and now they have removed many things now, because of which it went fast. And this time even I discussed even the question and answers also. Let's move on to the Mighty 50 questions. Last class we completed up to question number 8. Now look into question number 9. Question number 9. We'll take break at 1 o'clock. Okay. So hardly it is 40 minutes only. Why you need to have break? We'll continue, no? Or you need break and then afternoon session we can reduce. We can. Okay. See this. Determine whether GST is payable in respect of each of the following independent services provided by the registered persons. Question number 9. Service provided to governmental authority by way of slum improvement and upgradation. What is your answer? Taxable or exempted? Exempted. What are the services provided to governmental authority which is exempted? Public health, sanitation conservancy, solid waste management, water supply, slum improvement and upgradation. Correct? All these things are services to governmental authority and it is exempted. Next, fees of 20,000 charged from office staff for in-house personality development course conducted by Banarsi Das College. A college is doing the training for its staff and that college is providing education as a part of curriculum for obtaining qualification recognized by law. Tell me whether it is taxable or exempted. Why exempted? See, this college is an educational institution and any service provided by education institution to its students, faculty and staff is exempted. Bus fees of 2,000 per month collected from students by RPSD college providing education as a part of curriculum for obtaining a qualification recognized by law. Is it service provided by educational institution or to educational institution? Carefully read. By educational institution. So always it will be exempted. When it will be taxable? If it is transportation services to educational institution, first category only exempted, category 2 and 3 will be taxable. But it is not service provided to educational institution. It is service provided by educational institution. Any service by any educational institution to its students, faculty and staff is exempted. Housekeeping services provided by Messrs. Buff Limited to Bloom Montessori School, a play school for cleaning its playground and classrooms. This is by educational institution or to educational institution? To educational institution. Which service we need to see? Housekeeping, category 1, within the premises. Yes, it is within the premises. To category 1. Yes, play school is category 1. Therefore, it will be exempted. Grobert supplied Gratitude Jot, an online educational journal, to students of UKG class of Seats Montessori School for 2000 rupees. Because online educational journals and periodicals only to category 2 is exempted. This is category 1. Therefore, it will be taxable. Except this fifth point, all other cases it will be exempted. Next, question number 10. So, from the following information, determine the value of taxable supply as per the provisions of section 15 of CGST Act. Value of machine including GST at 12%, 15 lakhs, and the tax invoice includes the following: taxes other than GST charged separately by the supplier. First we will take this 15 lakhs as transaction value, and taxes other than GST as per provision to be included or to be excluded? To be included. In the given price it is already included, so therefore ignore. Weightment and loading charges, which expenditure? Before delivery, incidental or other expenses before delivery, correct? Same way consultancy charges, same way testing charges, same way inspection charges. For all these 4 services, all these are either incidental or other expenses before at the time of delivery of goods. Therefore, it is to be included as per 15(2)(c). In the given price it is already included, so therefore further inclusion will not arise, but we need to write a note for that. We need to write a note for that as to why it is not included here, because it is already included, and why it is to be included, that part. Then other information: subsidy received from central government for setting up a factory in backward region. What type of subsidy it is? Directly linked to the price or not directly linked to the price? Not directly linked to the price. Is it relevant for valuation? No. This is general subsidy, ignored for valuation purpose. So we will not consider this, and it will be treated as what? Donations. Subsidy received from a third party for timely supply of machine to the recipient. Subsidy received from a third party for timely supply of machine to the recipient. It is subsidy from other than CGRSG, directly linked to the price. It is to be included as per provision. But in the given price we don't know. What is the assumption we need to take? When the question is silent, the given price is after considering the subsidy, correct? That's what they have given. Give reason with suitable assumptions. So we take the assumption here that the given price is after considering subsidy. Means what? While arriving at this 15 lakhs, already they reduced 50,000. So which means as per provision it is to be included. In the given price it is not included. Therefore we need to add. We need to add this 50,000. Then trade discount actually allowed shown separately in invoice. Trade discount actually allowed. Is it allowed as deduction? Yes. How much? 24,000 will be reduced. Pre-supply discount. Now what you need to do? Don't calculate the GST now itself. Whenever the price is inclusive of GST, make all the adjustments. Make all the adjustments. Finally you arrive at the value na. That value should be assumed as inclusive of GST and into rate of GST 12% divided by 100 plus 12, that is 112 should be taken. Okay, va? Don't do it now. Don't do it on 15 lakhs. Make all the adjustments. 15 lakhs plus 50,000 minus 24,000. You will get 15 lakh 26,000. 15 lakh 26,000 into what by what? 12 divided by 112. See how much you got. 1,63,500. When you reduce it, the remaining will be taken as the value of taxable supply. Is it clear, pa? So the special point in this question is the price inclusive of GST. Usually the prices will be given as exclusive of GST. When it is including GST, you have to make all the changes, and finally whatever number you get, that should be taken as inclusive of GST. Next, question number 11. The following details of purchases, sales, etc. effected by Messrs. Tab and Company, a registered manufacturer under CGST Act, purchased raw material A from local dealer for rupees 86,100 inclusive of GST at 5%. Now what is the question? The question is, calculate the amount of GST payable after utilizing the input tax credit, assuming no opening balance of input tax credit. See this, it's an interesting question. They gave the purchase data. Based on that purchase data, we need to arrive the sale price and see how much is the liability. And they gave cost of purchase and profit margin, earned 5% profit on cost, which means we need to first arrive at the sale price. For arriving at the sale price, cost plus profit should be taken. Now, you purchase raw material A. How much will be taken as cost in this? Whether ITC available or not available on raw material? Available. Raw material is not a blocked credit and it is used in the course or furtherance of business. So definitely we can take ITC on raw material, which means don't take 86,100 in the cost. Why? Because that 86,000 is inclusive of GST. Separate it. So 86,100 into 5 divided by 105. How much? 4,100. You separate. So what is the balance? 82,000. So now keep it into two separate places. 82,000 you need to take in the cost. 82,000 you need to take in the cost, and that remaining 4,500 you got a 4,100. Yes or no? That 4,100 is your ITC. Keep that in mind. So what is the ITC in this? 4,100. The next, purchased raw material B from local dealer 1,12,000. Can we take ITC on this? Yes, on this raw material ITC can be taken. How much will be taken as cost? 1,12,000 into 12 by 112, that is 12,000 rupees will be ITC. So how much will be taken as cost? 1 lakh. Purchased capital goods from within the state to be used in manufacture of taxable goods 1,96,000 inclusive of GST. But full capital goods, what is the ITC for the capital goods? 1,96,000 into 12 divided by 112, that is 21,000 is ITC. What is the remaining cost? 1,96,000 minus 21,000, that is 1,75,000. But don't add 1,75,000 in the cost sheet. Why? Only depreciation. So what is the depreciation charged for these goods, that is apportioned for these goods? 15%. Means 1,75,000 is the purchase price of capital goods. Out of that capital goods, how much is absorbed by these units? Into 15%. That will be 26,250. Okay, Papa. Again I am repeating. 1,96,000 is the total purchase price of capital goods including the GST. The GST component can be taken as ITC. So ITC will be 21,000. Up remaining cost will be 1,75,000. But full 1,75,000 we should not add in the cost. Out of that 1,75,000, into 15% only should be taken for these goods. So into 15% means it is like what? Amortization. Usually what they do, capital goods, they will take what is the total production quantity and now how much quantity is being made, like that they will amortize it. So like that 15%. Next one pa. Other direct and indirect expense 55,460. Is it given as inclusive or exclusive of GST? No. Which means that itself is total. That itself is total, and 55,460 you add it to the cost. Now you got the cost. During the period only 70% production is sold within the state and applicable rate is 12%. Now first see the cost of production. What is the cost of production? 82,000 plus 1 lakh plus 26,250 plus 55,460, that is 2,63,710. This is the total cost of production. But out of this, how much is cost of goods sold? Into 70%, that is 1,84,597, and on the cost of goods sold only 5% profit will be added. Profit is not on production, profit is on goods sold. So plus 5%, what is that? 1,93,826.85, that is 1,93,827. You understood how we got the sale price? Now on this sale price, what is the GST liability? Into 12%. How much? 20, that is CGST, SGST. Why CGST, SGST? Because everything is intrastate. All these are intrastate. So therefore CGST, SGST you take 1,93,827 into 9%. How much? 9 or 6 are? 6. 1,93,827 into 6%, that is 11,630 will be the output tax liability. Now ITC you take, first ITC 4,100, 4,100 divided by 2, 2,050, 2,050, then again 12,000 divided by 2, 6,000, 6,000, capital goods 21,000 divided by 2, 10,500, 10,500. If you reduce it, we will get the net liability. Is it clear? So net GST, CGST, SGST credited to be carried forward. So net GST 0, 0, and excess credit you have. Why excess credit you have? Only 11,630 is your liability. So remaining credit that will be carried forward. Understood? So what is the peculiarity in this question? They gave the cost data. You will arrive at the selling price. Based on that you pay the GST, and minus based on the purchases you need to take out the input tax credit, and that will be adjusted. Then next, look into question number 12. Dobril Technocrats Limited, registered in Gurgaon, Haryana, is engaged in manufacturing heavy steel machinery. It enters into agreement with Mindsharp Associates, registered in Delhi, for imparting motivational training to the top management of Dobril Technocrats in a 5-day residential motivational training program at an agreed consideration of 20 lakhs. First, with respect to this service, they are asking determine the place of supply. So first, for this service, what is the service here? Service what? Training. For training and performance appraisal, we have B2B, B2C, we need to check. Correct? TOT, training and performance appraisal, organizing an event, transportation of goods or passengers. See this and tell me, is it B2B or B2C? B2B, because Mindsharp Associates is providing services to Dobril Technocrats, registered. So what should be taken as the place of supply? Gurgaon, Haryana. Haryana will be taken as the place of supply. Correct? Say this. First service provided by Mindsharp to Dobril by way of providing motivational training, and we need to take location, B2B, location of recipient, that is Gurgaon, Haryana will be taken. Second, Mindsharp Associates books the conference hall along with the rooms of Hotel Chum Chum Nimrana, registered in Rajasthan, for the training program for a lump sum consideration of 12 lakhs. Now for this, what is the service pa? Service in relation to property, immobile property. Correct? They are hotel booking pa. Hotel booking means service in relation to immobile property. What will be taken as the place of supply? Location of property. If property is outside India, then location of recipient. But here property is in India only. Where is it? In Rajasthan. Now, what is the location of supplier? That is hotel, Rajasthan. What is the place of supply? That is also Rajasthan. So therefore, in this case, the location of hotel will be taken as the place of supply. Puridappa? Now they may ask, also comment on the nature of supply like that. First case, where is Mindshare? Delhi, and Dobriel Technocrats, Haryana. So it will become interstate supply. Whereas second one will become intrastate supply. How? Hotel also Rajasthan, place of supply also Rajasthan. It is intrastate supply chargeable to CGST and SGST. Next, see question number 13. Rudra Limited raised invoice for service of rupees 1 lakh, excluding GST at 18% on 15/9/2023 and reported the same in their GSTR1 of September 2023 filed on 11th October 2023. Abhi Limited, who is recipient of such services, availed ITC in 3B of September 2023 filed on 18/10. First, Rudra Limited is the supplier, Abhi Limited is the recipient. Rudra Limited raised the invoice on 15 September and they reported it in their GSTR1 and filed it by 11th of October. And even Abhi Limited, which is recipient of that services, availed the ITC in 3B of September, which is filed on 18th of October, and utilized the same in 3B of November 23 filed on 20th December 2023. Availed the ITC and utilized the ITC in November 20th December means what is the date of utilization? 20th December is the date of utilization. And Rudra Limited has not filed 3B with respect to September 2023 and Abhi Limited reversed the ITC in 3B of December 2024. First, which financial year pa? Invoice 23-24, and supplier should file the GSTR 3B by September 2024. If supplier not filed by September 2024, then they need to reverse the ITC. Correct? By when? 30th November 2024, but they are reversing in December 2024, filed on 17/1/2025. Here one small correction, September 2024, the Rudra Limited has not filed and Abhi Limited reversed the ITC in 3B of December, filed on 17/5. Compute the interest payable by Abhi Limited and the consequence with respect to ITC if Rudra Limited files 3B of September 2024 on 18 February 2025 and discuss. Sir, this is correct only, this is correct only. This correct only. Correct only. Correct only, pa. Because he has not filed 3B with respect to September 2023. That is correct. September 2023 3B not filed is what given. Okay. But when they are filing the 3B return of September 2023 on 18th February, they should have filed by September 2024. They have not filed is what it is given. Correct only. Question no need to change. Perfect. So if Rudra Limited files GSTR 3B of September 2023 on 18 February 2025 and discuss whether any interest is payable by Rudra Limited, assuming no other transactions are there for Rudra Limited. You understood the question? Question you understood? Quickly read the question once. Is that AC working? No. Anyone is having AC remote? Yeah, kulurda. Turn off and on. Working, That AC also turn on, no? I know that you want to save money for me, but it's fine. Okay, say this. So the question is simple pa. Rudra Limited is the supplier and Abhi Limited is the recipient. Rudra Limited has to file the GSTR 3B by September of the succeeding financial year. But they did not file it by September of the succeeding financial year due to that reason. The recipient has to reverse the ITC by 30th November, but the recipient not reverse the ITC by 30th November. But they have reversed it by January, 17 January. Now we need to compute interest from which date to which date? From the date of utilization till the date of reversal. Correct? What is the date of utilization? From the question you tell me what is the date of utilization? 20th December. So date of utilization is 20th December. What is the date of reversal? When are they going to pay it? 17th January 2025. For that you need to compute the interest. Start. So 2023 December 20, that is 20th December 23 to 20th December 2024, 366 days. Leap year pa. Or in December you take 31 minus 20, 11 days in December. Next year full year 366. Okay va. Then again in 2025, how many days? 17. That is 383 days. 394 394 days. That is 11 days plus 366 plus 17. 394 days. For that 394 days we need to compute interest. Understood? How? Same. How much is the GST paid? 18,000 into 1 lakh. That is 18,000 on that 18% into 394 by 366, 3,488. This is which rule? Rule 37A. We discussed one chart in input tax credit chapter based on that. As per section 41 read with rule 37A, as Rudra Limited not filed GSTR 3B of September 23 by 30th September 2024, ITC availed by Abhi Limited needs to be reversed by 30th September 2024. So that is ITC needs to be reversed. With respect to ITC avail not reversed by 30th November, they shall pay interest as follows. They have to reverse. If they are not reversing, they have to pay interest as follows. What is the time limit by which they need to reverse? 30th November 2024. Interest will be 3,488. That's the answer for this question. Again, Rudra Limited filed 3B thereafter. Can Abhi Limited re-avail the ITC? Yes, without any time limit. As Rudra Limited filed on 18 February 2025, Abhi Limited can re-avail the ITC of 18,000, but this 3,488 cannot be re-availed. When Rudra Limited filed 3B of September on 18 February, ITC reversed by Abhi Limited can be re-availed. Even though the time limit for availing ITC is expired, as the time limit for availing ITC not applicable for re-availment of ITC. Correct? Now, what is the consequence to Rudra Limited? Rudra Limited filed the return late. Rudra Limited is also required to pay interest. Jackpot for government. This side interest, that side interest also. How interest is payable by Rudra Limited? Regularly we discuss whenever there is a delay in filing 3B, interest is payable. Correct? Now see how many days delay. 3B of September they are filing on 18th February. Means September 2023 due date is what? 20th October. Up October la 11 days. November 30 days. December 31 days. So 72 days in 2023. Then 2024 366 days. Then again 2025 January 31 days, February 18 days. That is for 487 days Rudra Limited should pay interest. Say this. As 3B is filed late by Rudra Limited, they need to pay interest at 18% from the due date of 3B, that is 20th October, till the date of filing 3B, that is interest payable for 487 days. 18,000 into 18% into 487, 4311. Actually, this 3488 and 4311 is the income to government without doing anything. You understood or not? Like that. So, we have actually three major sources of revenue to government now: direct tax, indirect tax, and interest. Okay, interest is also one major source of revenue. Lot of money they are earning in the form of interest. Next, question number 14. You understood that question number 13? It is on rule 37A, not yet asked. So far not asked on rule 37A, one question also. If at all they make a question like this, it will be. Then look into question number 14. Mr. Allen, a non-resident person, wishes to provide taxable supply of goods in India with effect from 1/7/2024. He has no fixed place of business or residence in India. He imports goods worth rupees 20 lakhs, basic customs duty 10%, social welfare surcharge 10%, IGST 18%. His expected outward supply in India is 40 lakhs, excluding GST at 12%, and inward supply in India is 25 lakhs, excluding GST at 18%. He seeks your advice on the following aspects relating to CGST Act. When shall he apply for registration? At least 5 days before commencement of business, because he is NRTP. From when he is commencing business, 1/7 means at least 5 days before 1/7. 5 days before 1/7 means 25th June. Correct? On or after 25th June or before that, they should have made the application for registration. Shall make application by 25th June. Then second part. Is permanent account number mandatory for his GST registration? No. Being a NRTP, they will not have a permanent account number. So based on their passport, they can get the registration. And then that particular application can be signed by authorized signatory in India who may have a permanent account number. So registration is granted based on passport. However, such application should be signed by authorized signatory having a valid permanent account number. Third, what is the period of validity of registration granted to him? 90 days from the date on which he gets registered. And it can be extended? Yes. Will he be able to extend his registration? Yes. And what is the period for which it is extended? For a further period not exceeding 90 days. Can he avail ITC on his inward supply? How much ITC is available in the given case? For blocked credit. Imports, only on imports whatever IGST paid they can take. NRTP cannot take ITC on anything except on import of goods. Hope you remember we discussed blocked credits. Imports by NRTP is a blocked credit. However, on import of goods, I gave you example of cricketers who are bringing the cricket kit, on that only GST paid can be taken as credit. So in this case, on inward supplies within India, ITC not available. However, on import of goods, they can take ITC. How much is the value of import of goods? 20 lakhs. 20 lakhs into 18%. How much? 20 lakhs into 18%. 3,60,000. That is the ITC available. Correct? No, sir. No, sir. Wrong answer, sir. Because while computing GST, as per section 15(2)(a, all taxes other than GST should be included in the value. So customs duty and social welfare surcharge you need to include, then only IGST can be computed. So 20 lakhs into 10%, what is that? 2 lakhs, and surcharge will be 10% on customs duty. Like cess, health and education cess, it will be on tax na. So therefore 2 lakhs into 10%, that will be 20,000. So what is the total customs duty? 2,20,000. So 22,20,000 into 18%, 3,99,600. Say this. Value 20, customs duty 2 lakh, social welfare surcharge 20, on that IGST 18 is 3,99,600. This only can be taken as ITC. Why? Remember, while computing GST, we need to add everything other than GST. We discussed in valuation chapter. Okay. NRTP cannot avail ITC except with respect to IGST paid on import of goods. Then compute the advance tax payable by him at the time of making application for registration, how much is their estimated gross liability? 40 lakhs, huh? Where is it? 40 lakhs into 12%. 40 lakhs into 12%. How much? 4 lakh 88,000. But estimated gross liability they need to deposit, or estimated net liability they need to deposit? Estimated net liability 4 lakh 80 minus 3 lakh 99. Can the IGST paid be taken as credit and adjusted? Yes. IGST paid on import can be taken as credit and adjusted against the liability minus 3 lakh 99,600. So how much? 80,400 is the estimated net tax liability. Got it? Like this they can give question connecting registration and input tax credit chapter. Okay. Next. Discuss whether E-invoice or dynamic QR code in invoice is applicable in the following cases. A government department is registered under GST. Its aggregate turnover in the preceding financial year is 22 crores. They are making outward supply to registered as well as unregistered persons. First, when they make sale to registered persons, whether E-invoice is applicable or not applicable? Not applicable. Why not applicable? Biggest. In that biggest, G for government department. For government department, E-invoice is not applicable. And a dynamic QR code is applicable, but in this case not applicable because their aggregate turnover does not exceed 500 crores. So E-invoice also not applicable, dynamic QR code also not applicable. That is the answer. But reason you need to write properly. Okay, E-invoice not required as garment is excluded from E-invoice, and dynamic QR code, even though no exemption to government department, but it is not applicable as their aggregate turnover during previous year does not exceed 500 crores. Then second one, Dream World Private Limited. Again this type of question they have not asked. They asked a theory question, when E-invoice is applicable or when dynamic QR code is applicable, that much only. But this application based questions not yet tested. Dream World Private Limited is registered under GST in the state of Haryana. During the preceding financial year, its annual aggregate turnover was 12 crore. In the month of April 2023, it supplies goods worth rupees 12 lakh to Nightmare Limited, a registered person in SEZ. Tell me what should be taken in this case. E-invoice is applicable, they are making sale to registered or unregistered person? Registered person. So, but it is a SEZ. Whether E-invoice is applicable? Yes. Only supply by SEZ, E-invoice not applicable, but supply to SEZ, E-invoice applicable because they are registered and turnover during the previous year exceeds 5 crores. So, definitely E-invoice will be applicable. And as the sale is made to registered person, dynamic QR code is not applicable. Dynamic QR code is applicable only in case of B to C. Next, third one. Bali Limited is registered under GST in Maharashtra and is situated in SEZ, having an aggregate turnover of 600 crores during previous year. They make supplies to Others Private Limited, an unregistered person. E-invoice applicable or not applicable? Not applicable because it is supply made by SEZ. What about dynamic QR code in invoice? Applicable because in that big toe S is not there, means dynamic QR code is applicable, and moreover it is made to unregistered person and their turnover during previous year exceeds 500 crores. So E-invoice not applicable, but here dynamic QR code not covered under exceptions. Aggregate turnover during previous year exceed 500 crores, therefore dynamic QR code is applicable. 4. Harnam & Co. dealing in interior decoration purchases products made supplies. So decoration products made supplies to various persons located outside India. The aggregate turnover of Harnam in the preceding financial year is 650 crores. First, as they are making export of services, E-invoice is applicable. Correct? Sir, export of service, sir, supplier in India, recipient outside India, definitely it will be export of service. So therefore E-invoice will be applicable, but dynamic QR code not applicable. Why dynamic QR code not applicable? If the recipient is outside India, dynamic QR code is not applicable. So that is the explanation you need to write for this. Then next one, question number 16. Happy Limited, oh, time is over. Fine, pa. Okay, no issue. We'll continue. Anyhow, we have to discuss that. We'll discuss, no issue. Because portion completed, I'm so happy. Okay. So these questions only. You take 1 hour break also you take. I don't have any problem. Okay. Fine. Okay, we'll start. See this question number 16. Happy Limited, located at Alwar, Rajasthan, exclusively manufactures and sells the product Shine and Shine, which is exempt from GST. So basically they are engaged in exempted supplies, exclusively exempted supplies. Therefore, they are exempted from registration. Happy Limited sells Shine and Shine only within Rajasthan. The turnover of Happy Limited in the previous year was 60 lakhs. Happy Limited purchased additional machinery, that is capital goods, for manufacturing Shine and Shine on 1st April 2021. The invoice for supply of machinery was also issued on 1st April 2021. The purchase price of the machinery was 25 lakhs exclusive of CGST SGST. On 1st December, exemption available on the product Shine and Shine was withdrawn by the government, which means from 1st December the product became taxable. Until that point of time, the product was exempted. With effect from 1st December, the product became taxable, and the turnover of Happy Limited on 30th September was 45 lakhs, means already they crossed the threshold limit. And they have to register. With effect from which date they need to register? 1st December they need to register. Examine the issue and provide the answers with supporting explanatory note for each answer. Does Happy Limited have to register under GST? Yes. They are doing business in Rajasthan, and the applicable threshold limit for registration is 40 lakhs, as they are exclusively engaged in goods, supply of goods. However, as they are making only exempted supplies, they are exempted from registration. With effect from 1st December, as the exemption got withdrawn, they are liable to get registered and pay GST. And they need to make application for registration within 30 days from the date they are liable to register. What is the date they are liable to register? 1st December 2021. So accordingly, within 30 days from 1st December 2021, they need to make application for registration. Clear? And turnover already crossed 40 lakhs. Second, can Happy Limited take credit of tax paid on machinery purchased? If yes, what is the amount of ITC that can be availed? Now on this capital goods, can they take ITC? Yes sir, no. They purchased the capital goods. Is that capital goods purchased within 1 year prior to the closing stock date? Yes. With effect from which date they are liable to register? 1st December. And we need to see before 1st December, that is 30th November. As on 30th November, whether within 1 year prior, whether they purchased the machinery? Yes. That is 1st April 2021 is within 1 year prior. Means they can take ITC on capital goods. Okay. Now, tell me whether it is 18(1)(a) or 18(1)(d). Which section is applicable in this case? 18(1)(a) or 18(1)(d). You can see the book and tell me. 18(1)(a) va 18(1)(d) ya. Page number 111. Look into page number 111. Search and tell me whether it is 18(1)(a) or 18(1)(d). 18(1)(d) illappa, 18(1)(a). 18(1)(a) because now only they are getting registered. How can they take credit on capital goods? They cannot take credit on capital goods. You are all thinking they are making exempted supply and the exempted supply became taxable. So therefore, they can take ITC on capital goods. Correct. That is 18(1)(d). And 18(1)(d) is only for a registered person whose exempted supply became taxable. Now only when you are getting registered, it is 18(1)(a). In 18(1)(a), you cannot take the credit on capital goods. So say this. As per 17, capital goods used there exclusively for exempted supplies is disallowed. However, when exempted supply becomes taxable, ITC is available under 18(1)(d). But the non-registered person cannot take ITC on capital goods under this provision. So therefore in this case only 18(1)(a) is applicable, correct? And ITC on capital goods is not possible. So because this person is getting registered now only. So like they will twist it so that we will end up taking the credit on capital goods, but actually that section itself is not applicable. It is 18(1)(a). Then next, question number 17. Suraj Limited, a manufacturing concern of Rajasthan, having aggregate turnover of 100 lakhs in financial year 1920, has opted for composition scheme, furnishes you with the following information for financial year 2021. So they opted for composition scheme. It requires you to determine its composition tax liability and total tax liability, details of turnover of 2021. So we need to compute the composition tax liability if Suraj Limited is a manufacturer. Also determine the composition tax liability if Suraj is a trader. Suppose if they are a manufacturer, they need to pay 1% on what? Total turnover. If they are a trader, they need to pay 1% on taxable turnover. Now, first, if you take manufacturer, what is the turnover on which GST payable under composition scheme? Whether taxable turnover will be taken? Yes. Intra-state supply of goods X we will take. Intra-state supply of goods made which are chargeable to nil rate also we will take. Goods Y chargeable to 18%, yes. Intra-state supply of services chargeable with 5% GST also, yes. Interest income will not be taken. Why interest income will not be taken? Because interest income will be excluded for computing the GST under composition scheme. And even value of inward supply on which GST payable under RCM also not taken. So we need to see only this. How much? 30 lakhs plus 18 lakhs plus 30 lakhs plus 6 lakhs. So that comes to 84 lakhs. 84 lakhs into 1%, 84,000. This is what liability? Composition tax liability. And look into trader. If they are a trader, what should be taken? If they are a trader, we need to take only taxable turnover. That is 30 lakhs and then this 30 lakhs and then this 6 lakhs. So 30 plus 6, that is 66 lakhs. On that into 1%, that is 66,000. And what about this inward supply under RCM? That is their liability, regular liability, 5 lakh into 5%. That is their RCM liability. Is it clear? But the question is, determine the composition tax liability. The composition tax liability is this much only. Inward supply under RCM, even though they are under composition scheme, only on their outward supplies they will be paying tax at the rate of 1%. But on their inward supply under RCM, they need to pay the regular liability. That's the reason why we are not taking it. Next. Additional RCM liability. What is that additional RCM liability? 5 lakh into 5%, 25,000. Now if you do total, then you will get the total tax liability. Understood, pa? Show it properly what is composition tax liability and what is total tax liability. Then question number 18. DLF Limited, a real estate developer company, is located in Chennai. On August 1st, 2013, it enters into agreement with Mr. Z to transfer 1000 square feet of commercial flat in a building under construction in Madurai. As per the agreement, the possession of flat will be handed over in March 2024. Agreed consideration is rupees 90 lakhs plus GST. Tax invoice issued by DLH gives the following data. Mr. Z pays 70 lakhs by check at the time of signing the agreement. Okay. The superstructure of 1000 square feet along with undivided share of land 90 lakhs less value of land 30 lakhs, taxable value 60 lakhs. On that 9% and 9% they have charged. Possession is handed over on March 10, 2024. Mr. Z is not satisfied with the quality of the stone and wood used by DLH. Consequently, against the balance payment of 30 lakh 80,000. How 30 lakh 80,000? Pa, what is the total consideration, pa? 90 lakh plus applicable GST 18%. How much already paid? 70 lakhs. Means out of that is 90 lakh plus GST is how much? 18%. So total 100. That is 1 crore 80,000. 1 crore 80,000 la how much is already paid? 70 lakhs is already paid. So 30 lakh 80,000 is the balance. You understood? Mr. Z pays 24 lakhs. Out of this 30, 80, 24 lakhs is paid, which is accepted by DLH in full and final settlement. Discuss the treatment of balance 6 lakh 80,000 for the purpose of GST. What is it? It is like a discount. Means they need to give a credit note. They need to give a credit note. Why they need to give a credit note? See, it's not like that. They are reducing the value. They are reducing the value, because of which they need to give the credit note. Deficiency in quality. I told you, whenever there is a deficiency in quality, the credit note can be issued. So if the credit note is issued for the 6,80,000 rupees, how much will be the value? How much will be the tax component? That is what we need to arrive. Say this. Where the goods supplied are found to be deficient, the taxpayer can issue a credit note. Credit note should include the amount of tax credited to the recipient. In this case, GST liability will be recalculated as follows. Say this. First, let's take, because the problem is we are not having GST directly. We are having GST directly. If it is there, no issue. For example, 12% GST means 12 by 112, like that we would have taken. But the problem is it's not 12, because 1,800,000 is not 18 by 118. You observe, this 18% is not computed on 90 lakhs. This 18% is computed only on 60 lakhs. So that's why we are calculating the tax component clearly. Let X be the superstructure. 1/3 is towards UDS, remaining 0.67. On that 0.67, 9% and 9%. So the total is 1.12x. Correct? Now in this 1.12x, that will be equal to what? This 1.12x is equal to what? 6,80,000. If that 1.12x equal to 6,80,000, then we need to do the reverse working. So what will be the x component? So that is 1.12x is 6,80,000. Then 6,80,000 divided by 1.12, that comes to how much? 6,80,000 divided by 1.12. So how much? 60 lakh, 6 lakh 7,142.85. That is 6 lakh 7,143. And accordingly 0.06x and 0.06x. So you got what is x into 0.06. What is into 0.06? 36,428.5. That is 36,429. Now we got the tax component. So therefore, for this amount, we need to give the credit note. Is it clear, pa? Purida illiya? That is, see, total amount for which credit note to be given is 6,80,000. Adu okay va? 6,80,000 we need to give credit note. Ana, in the 6,80,000, what is the tax component? What is the tax component? Can you do directly? 6,80,000 into 12 by 112. Correct? No. Why not correct? Yena, in the 9% is not on 60, 90. It is on 60. Upper there is a 1/3 reduction. Correct? There is a 1/3 reduction. Then accordingly we need to calculate. So how to calculate that? Simple. Where total rate is how much? Total rate is how much? 18. Total rate is how much? 18. 18 on what? 18 on what? 2/3. 18 on 2/3. 18 on 2/3. Correct? So therefore, let 100 rupees be the value. 100 la 33.33 will be taken out. Up 66.67 only. We are computing that. Am I right? So we are taking, let x be the 100 rupees, 33.33 will be gone, and 66.667x. On that 66.667x, 9% and 9% we are discussing. So 66.667. So on that 9% is how much? 0.06, 0.06. Now you do the total of this, that is x plus 0.06, 0.06, 1.12. So that 1.12 you equate to 6,80,000. If 1.12 is 6,80,000, then x is how much? 6,07,143. On that 9% and 9% will be 36,429 and 36,429. This is how it is arrived. Can I give you a simple way? Effective rate enna? 18% total. Idhila 1/3 gone. So means into 2 by 3. What is 2 by 3? 12%. 12%. So 12% is the effective rate. Directly you calculate, you will get the answer. 6,80,000 into 12 by 112. How much? 72,857 divided by 2. 36,429. Easy pa? This way also you can do. Alternatively, what you can do? 18% you take out 1/3. From 18% if you take out 1/3, how much it will be? 2/3. That is 2/3 of 18% is what? 12%. Means the effective rate of GST will be 12%. Then in that 6,80,000, 12% is the GST component. So 6,80,000 into 12 by 112, you will be getting the total tax component, and that divided by 2, you will get CGST, SGST. Easy. Then look into question number 19. X is engaged in intrastate supply of goods and services in Chennai. His turnover for the financial year 22-23, 23-24 is given below. Financial year 23-22-23 and 23-24, and supply of goods, stationery items or books, supply of service by way of loans, advances, deposits, supply of other services. Up to 31st March 2023, X is registered person who has not opted for composition scheme. Means previous year they have not opted for composition scheme. He wants to opt for composition scheme with effect from April 1, 2023. Is it possible? First, what is the business that they are doing? Both goods and services. And definitely they are doing services beyond 10% limit. So which section we need to check? 10(2)(a). 10(2)(a). Because if it is 10(1), they can render service only 10% of turnover during previous year or 5 lakhs, whichever is higher. As they are doing both goods and services equally, like goods will be like 10, 42, etc. and all. So therefore 10(2)(a). But the problem with 10(2)(a) is that previous year turnover should not exceed 50 lakhs. You see what is their previous year aggregate turnover? 87. Is it really 87, or you need to calculate properly? Please calculate. Please calculate. So 15, don't take 42 plus 30, only 45. Why, sir? Interest should not be taken into aggregate turnover. Interest on loans, advances, deposits should not be taken into aggregate turnover for determining the eligibility to opt for composition scheme. Accordingly, 15 plus 30, what is that? 45, which does not exceed 50. Definitely they can go for 10(2)(a). Is it clear? And under 10(2)(a), if they go for composition scheme, what is the rate at which they need to pay GST? 6%. 6% on what? Total turnover. What is the total turnover during the current year? 17 and 30. Again, don't take 44. Interest income will not be taken. So 17 plus 30, how much? 47. 47 into 6%. What is that? 47 into 6%. 2,82,000. Understood? So first we need to write what is the composition scheme under 10(2)(a) and what is their aggregate turnover during the previous year. As it does not exceed 50 lakhs, they can opt for composition scheme during current year. And So composition scheme during the current year, what is the rate at which they need to pay? 3%, 3%. And why 10-1 they are not going? Sir, because if they go for 10-1, they cannot render this much of services. Is it clear? So service income they have, 30 lakhs of service income they have, they cannot render that much of service, because what is your aggregate turnover during previous year? 45. 45 into 10%, 4.5 lakhs. 4.5 lakhs or 5 lakhs, whichever is higher, 5 lakhs. Means current year you can provide only 5 lakhs of services. That's the reason why 10-1 we are not applying. We are going for 10-2A. That is the question here. So we need to identify which is the best composition scheme and which is the applicable composition scheme. Then look into question number 20. Answer the following questions. What is blocking of e-way-bill generation facility and which situations it will be blocked? Tell me. If you are not filing returns for consecutive 2 tax periods, either GSTR1 or GSTR3B or CMP8, or your registration is suspended. Next, whether recipient can generate e-way bill of blocked GSTN indicating them as supplier and vice versa? No, recipient cannot generate e-way bill with respect to blocked GSTN of the supplier. However, whether transporter or e-commerce operator or courier agency can generate? No, no one. So recipient also cannot generate, transporter, e-commerce operator or any other person also cannot generate. Can e-way bill be generated for inward supplies of block GSTN? Yes. For inward supplies there is no restriction, only for the outward supplies the e-way bill will be blocked. We discussed all these points. Can the blocked GSTN transport exempted goods? Yes, because for transportation of exempted goods e-way bill is not applicable. So therefore they can transport exempted goods, there is no issue, but that exempted goods should be under the cover of a bill of supply. Bill of supply. Clear pa? You may get a question like this related to e-way bill, not yet tested. Then look into question number 21. Agni Limited filed GST return under section 39, that is GSTR 3B, for the month of January on 11th April 2021. So there is a delay in filing GSTR 3B. For January, what is the due date of 3B? 20th of February. But when are they filing? 11th of April. So what is the delay? What is the delay? February 8 days, March 31 days, April 11 days. That is 50 days. There is a delay by 50 days. Continue. Details of the tax assessed as payable for the month are given below. CGST, SGST, output tax 1,80,000, 1,80,000, tax payable under reverse charge 40,40, input tax credit available for utilization 70,70. Tell me what is their net GST payable. Sir, whether this 70 includes 40 or not? Yes. Available for utilization means what? Available for utilization means what? Even GST paid under RCM also they would have already taken. Correct? Whatever GST you pay under RCM, can you avail as ITC or not? Yes. We can avail that as ITC, and that is already considered in 70,000. Please don't add 40 again. Please don't add 40 again in this 70. So what is their ITC? 70,000 is their ITC. First, what is their FCM liability? 1,80,000. 1,80,000 minus 70. How much? 1,10,000. Plus, what is their RCM liability? 40. That RCM liability always should be paid by cash na. So therefore, how much is their net liability? 1,50,000 and 1,50,000. On that 1,50,000, they need to pay interest. At what rate? 18% into 50 days. Why 50 days? We counted the number of days delay into 50 days. So 3,699 we will get. This interest is on account of delay in filing GSTR 3B. Delay in filing GSTR 3B. Assuming that the company has a ITC balance of 2,50,000 each under CGST, SGST for the said month, compute the interest payable if entire tax due for the said month was paid through credit ledger to the extent possible as per the provisions of the Act. Then, sir, can they use 2,50,000 for payment of FCM liability? Yes, but RCM liability should always be paid in cash, even though they have excess balance in the credit ledger. So therefore, how much will be their net liability? 40,000 and 40,000. So 40,000 and 40,000 into 18% into 50 divided by 365. Even if they have 2,50,000 balance, but RCM liability should be paid in cash. Suppose in this question if they give, what will be your answer? If their taxable turnover during the month exceed 50 lakhs, then 86B 1%. That is, out of this 1,80,000, 1% should be paid in cash. That is 1,800. If 86B is applicable, we have to pay 1% of liability through cash ledger. So 1,80,000 into 1%, that is 1,800 plus RCM liability. What is that? 40,000. So what will be the net liability payable through cash ledger? 41,800. On that, interest will be computed. When? If the question says their taxable turnover is more than 50 lakhs or rule 86B is applicable. Then next, as turnover information in a month is not available, rule 86B restriction is not applied. That is, payment of 1% through cash ledger is not applied in this case because we don't have the turnover information. Otherwise, that should be considered here. Always you remember, whenever you have more ITC than your liability or equal to your liability, ensure that rule 86B will come. But for rule 86B, what is that you need to check? Their taxable turnover in the month should exceed 50 lakhs. Then question number 22. The aggregate turnover of Prithvi, a registered person, for financial year 21-22 was 440 lakhs. 440 lakhs means more than 2 crores. The outward supply of Mr. Prithvi is exempted owing to a notification from central government, and Mr. Prithvi decided to cancel his registration during the financial year. So he filed the final return, but he has not filed the annual return under section 44 before the due date, as he is of the opinion that either final return or annual return is required to be filed, but not both. Discuss whether the contention of Prithvi is valid, and also discuss the provisions as to late fee, if any, for not filing the returns by due date. You tell me, pa. So whether they did business during the financial year? Read the question and tell me whether Mr. Prithvi did the business during the financial year. Yes, but during the financial year they cancelled their registration, means they did business and their turnover is 440 lakhs. So they have to file the annual return, even though their registration is cancelled, but they need to file annual return because they have a turnover now that year. So they have to file annual return by 31st December of the succeeding financial year. Plus, they should also file final return because their registration is cancelled. Nowhere we studied that only annual return is required to be filed or only final return is required to be filed. I never said that these two are mutually exclusive. Because they have a turnover during that year and that too the turnover exceed 2 crores, they should file the annual return. And as the registration is cancelled, they need to file the final return. What is the annual return time limit? 31st December of succeeding financial year, that is by 31st December 2022, they need to file the annual return. And final return, when they need to file? 3 months from the date of cancellation or 3 months from the order of cancellation, whichever is later, they need to file their final return. And what is the late fee for not filing annual return? Their turnover is 440, means does not exceed 5 crores. So therefore we need to take 25 rupees for every day, subject to maximum 0.02% of turnover. This is under each act. 25 rupees per day, subject to maximum 0.02% under each act. For final return, if they have not filed, what is the late fee? Regular 100 rupees per day, subject to maximum 5,000. So that will be the late fee in this case. So therefore for annual return, what is the late fee? So 25 rupees per day, subject to maximum 0.02% of turnover. What is 0.02% of turnover? 440 lakhs into 0.02%, that is 8,800 CGST will be the late fee, maximum late fee. Understood? So like this, you will get a question on returns. Already this is asked in RTP. This is an RTP question. Okay. Next. Question number 23. Manihar Enterprises registered in Delhi is engaged in supply of various goods and services exclusively to government departments, agencies, etc. and persons notified under section 51 of CGST Act. It has provided the information relating to supplies made, their contract value and payment due against each month in the month of October as under. First, all these are supplies made to government department. First, supply of stationery to Fishery Department, Kolkata. What is the total contract value? 2,60,000. The 2,60,000 is inclusive of GST. Now, what is the rate of GST? 18%. Take out 18% and tell me what is the value, contract value. 2,60,000 into 100 divided by 118. How much? 2,20,338. Whether it exceeds 2,50,000 or does not exceed 2,50,000? Does not exceed 2,50,000. So TDS is applicable or TDS not applicable? Not applicable. So no TDS. Okay, pa? Next, second, supply of heavy machinery to public sector undertaking in Uttarakhand, 5,90,000. Now excluding GST, how much? 5 lakhs. Correct? Means more than 2,50,000. So limit wise, it crossed 2,50,000. Next, whether TDS is applicable in this case? Yes. For PSU, who are the notified recipients to whom TDS is applicable? Check your book. Central government, state government department, local authority, public sector undertaking, government society or government agency, and government authority where the government has invested greater than or equals to 51%, and supply of metal scrap by registered person to registered person. Correct? Check, check. Open your book. What's the page number? TDS TCS 151. 151. Can you see that? Is PSU there? TDS. Yes. So whenever the supply is made to public sector undertaking, definitely TDS will be applicable. We don't have any restriction. Now tell me, TDS is computed on what? 5,90,000, 25,000, 25,000, not on 5,90,000. To check whether TDS is applicable or not, we see the contract value. But TDS is always computed on the amount remitted. What is the amount remitted? 25,000. On that TDS will be applicable. But whether it is intrastate or interstate. Now see where the supplier is located. Where the supplier is located, Delhi, and it is supply of heavy machinery, means supply involves movement of goods. We need to take ending point. What is the ending point? Uttarakhand. Therefore, it will be coming under interstate supply and chargeable to IGST. So TDS at the rate of 2%. So 25,000 into 2%, that is 500. Please check the answer. We need to put it under IGST column. Check the answer. First case, no TDS. Second case, TDS is applicable, and that TDS will be computed on 25,000, and that will be 2%. Sir, only on payment due or remitted, on that only TDS should be computed, not on the entire value of supply under the contract. Okay, this I stressed multiple times. Look into the third point. Supply of taxable goods to Delhi office of National Housing Bank, a society established by Government of India under the Societies Registration Act 1860. What is your answer? For government society also, whether it is applicable? Check whether notified recipient government society is there. Yes, it is there. It is there. Second point. Ulunga paranga pa. Open your eyes and see. It is there. No. It is there. Anga poi exam liyo no ani elidittu anga. So it is there. You have to read. So government society is there. Therefore, whenever the supply is made to government society, TDS is definitely applicable. And what is the value of supply under the contract? Total value of supply 6,49,000. Excluding GST, it is more than 2,50,000. So TDS is applicable, and on this 50,000 TDS is computed. What is the location of supplier? Delhi. And what is the place of supply? Supply of taxable goods. Ending point is what? Delhi. Therefore, it is intrastate supply. TDS at 1% each. That is CGST 1%, SGST 1%. So 500 rupees and 500 rupees under CGST, SGST. Okay, wow. Next. Look into another one. Number 4. Interior decoration of Andhra Bhavan located in Delhi. Service contract is entered into with government of Andhra Pradesh, registered only in Andhra Pradesh. So, government department only. And what is the value of supply under the contract? 12,39,000. Beyond 2,50,000. But there is one restriction. What is that? If location of recipient and place of supply is in two different states, TDS is not applicable. Now see there, what is the location of recipient? Andhra Pradesh. Government of Andhra Pradesh, registered only in Andhra Pradesh, like that it is given. So what is the location of recipient? Andhra Pradesh. What is the service? Interior decoration. For interior decoration, what should be taken as the place of supply? Location of property. What is the location of property? Not Andhra Pradesh, Delhi. Andhra Bhavan located in Delhi. So therefore, place of supply is Delhi because it is service in relation to immobile property. Place of supply is Delhi, but recipient is located in Andhra Pradesh. So as place of supply and recipient not in the same state, TDS is applicable or not applicable? Not applicable. So there is no TDS. Clear pa? And reason you need to write. Reason you need to write, I have given the detailed explanation for each and every point. Okay. And as the location of supplier and place of supply same state, that is in Delhi, supplier also Delhi, place of supply also Delhi, but the recipient is in another state, they cannot deduct TDS. Next one, you see this, supply of printed books and printed postcards to West Delhi Post Office out of the total contract value of 9,72,000. Contract value of supply of books exempt from GST is 7 lakhs, and for supply of printed postcards is 2,72,000. But we need to take contract value for determining 2,50,000. Taxable supplies are, exempted supplies are, both are. Only taxable supplies. Value of taxable supply under the contract exceed 2,50,000, then only TDS will be applicable. Now, you need to take taxable supply. How much is the taxable supply? 2,72,000. 2,72,000. Even though 9,72,000 is there, but in that 9,72,000, 7 lakhs is exempted. So don't take, and remaining 2,72,000. 2,72,000 into 100 divided by 118. How much? 2,30,508, as the value of taxable supply under the contract does not exceed 2,50,000. So TDS is applicable or not applicable? Not applicable. So there is no TDS in this case. Next one, maintenance of street lights in municipal area of East Delhi. The maintenance contract entered into with Municipal Corporation of Delhi also involves replacement of defunct lights and other spares. However, the value of supply of the goods is more than 25% of the value of composite supply, not more than 25% of the value of composite supply. And basically this maintenance service to East Delhi is an activity in relation to function entrusted to municipality under Article 243W of the Constitution. What is your answer? Is it taxable or exempted? Exempted. Where we discussed this, composite supply of goods and services to government where the value of supply does not exceed 25% of the total. You open your book and tell me where we have seen, one chart we have seen, government services. 49, very good. Page number 49. Page 49 you see. page 49. In that page number 49, you can find that. What is that? Composite supply of goods or services in relation to Article 243 GRW, where the value of goods does not exceed 25%. So that is exempted. So as this activity is exempted, TDS is applicable or not applicable? Not applicable, because only when the supplies are taxable, then only TDS is applicable. As the supply is exempted, there is no TDS. Again, there is no TDS. Okay, but you need to give the reason why it is no TDS, because the said activity is covered under the exemption. Next, question number 24. Say this: Mr. Bhaskar wrongly availed 1,25,000 input tax credit at the time of furnishing return under section 39 of CGST Act for the month of October 2022. What is the ITC? 1,25,000 wrongly availed. This ITC is not utilized against the output tax liability for the month of October. Mr. Bhaskar utilized 75,000 from the above wrongly availed ITC of 1,25,000 against output tax liability for the month of November. So which month 75,000 is utilized? November month. And Mr. Bhaskar paid the amount of ITC wrongly utilized 75,000 on 10th March and reversed the unutilized ITC. So of 75,000 on 10th March and 50,000. So what happened? 75,000 wrongly availed and utilized, he reversed on 10th March, and 50,000 he reversed on 20th March. Calculate the total interest payable. So CGST, SGST rounded off to nearest to 1 rupee under GST law. If Bhaskar files 3B for the month of October on 18 November, 3B for the month of November on 25th December. Assume that there is no extension of due date of filing return and no other transactions. First, in case of wrong availment and utilization of ITC, interest is computed only on ITC utilized. Now from the question, tell me how much is wrongly availed? 1,25,000. But how much is utilized? 75,000. So interest will be computed only on 75,000. And 75,000, check the question and tell me what is the date of utilization. Date, I am asking, date of utilization, date of utilization, date of utilization, 10th March. Say this. This ITC is utilized against output tax liability for the month of October. So where from March came? Just like that, achudringa. Something, okay, who kasa panama panandampa at the attempt, you understood? You have to just like that, don't blabber, yeah? Read the question properly. Clearly it is given utilized, visible for your eyes, utilized, utilized, wait, utilized against the output tax liability for the month of October, correct? What utilized? Not utilized. Then next, when it is utilized, utilized 75,000 for the above wrongly availed ITC against output tax liability for the month of November. So which month they utilize? November month they utilize. For November month, when are they filing? 3B, 25th December. And our date of utilization is what? Due date of 3B or actual date of 3B, whichever is earlier. Where we studied interest computation. Open your book and see there. Section 50. Section 50, interest computation. Today we discussed in payment process chapter. Page number 162. Look into page number 162. In that page number 162, third situation you read. In that third situation, third point, third row, date of utilization, actual date of 3B or due date of 3B in the month in which you have utilized. What is the month in which you have utilized in this question? November. For November, what is the due date? 20th December or 25th December, whichever is earlier. So what is the date of utilization pa? Date of utilization is 20th December 2022. Got it? Because we need to take date of utilization as the actual date of 3B, that is 25th December, or due date of 3B, that is 20th December, whichever is earlier, that is 20th December. And what is the date of reversal? What is the date of reversal of this 75,000? 10th March. Clearly given, and reverse the unutilized amount of ITC on 10th March. So therefore we will take it as 10th March 2023. Next year, next year 2023 they are reversing. Now you count the number of days. 20th December to 10th March. 20th December, that is in December 11 days, January 31 days, February 28 days, March 10 days, that is 80 days. So for that 80 days, we need to compute interest. How much is the interest? 75,000 into 18% into 80 divided by 365, that will be 2,958.90. So 2,959. What about 50,000? On 50,000 there is no interest. Why 50,000 there is no interest? Because they have not utilized. That's why interest will not be arised in this case, as wrongly availed ITC has been paid back without any utilization. Clear? So like this they will be asking a question on that section 53. So far not asked. So far they asked on the first two situations, but on the third situation they have not asked. You can expect a question like this. Question number 25. See, now that ChatGPT is there, for CA Institute it is furthermore easy to create the question. Previously and all it will be very difficult to create a question, that they need to think and they need to coin a question, etc. and all. Now ChatGPT is there. If you ask ChatGPT, I need a question on this, and thereafter you add this provision, you add this provision, you complicate the question like that, if you give, it will create a complicated question. Yes, and answer also previously they used to take lot of time in order to make the answer. Now it is simple. Explain the answer for this, it will give the answer for that. Now a human has to just check whether the answer is correct or not. That because ChatGPT will make mistakes, and they have to just check whether it is correct or not. Hardly they need 1 day to create the entire question paper. So due to that reason, they can definitely make all the areas which has not been asked. Even ChatGPT has a deep research mode. You go to the deep research mode and ask, what are the areas which are not tested in the past exams in GST? It will give list. Okay, make questions on that. It will make. Seriously, pa. So therefore, no, it is easy for them now to make the questions. We have to increase our preparation. Okay. Then, if ChatGPT is allowed in exam, completely everyone will clear, no? Actually, ICA is planning to change it to online exam, from pen and paper exam to online exam in 2 years down the line. That's their idea, because almost all foreign courses and all, they went into online exam, MCQ model, full MCQ. Even if descriptive is given, you have to type the answer. Even if descriptive is given, you have to type the answer, so that mistakes, evaluation error will not be there. But the paper will be very difficult, like CFA exams and all, how it is conducted, like that they are planning. Mostly in 2 years it will be implemented. Who knows, by the time you come for CA final, there won't be pen and paper exam itself. Okay, they are planning to do it online live. Online, it's very good, and result you will know immediately. Result you will know immediately. When you click on submit, you will get the result. So you know, okay, very chill. Again, you can prepare accordingly. Okay, say this. Question number 25. Examine the taxability of supplies in the following independent cases in terms of relevant provisions of CGST Act. Brief reason should form part of your answer. Number 1. Mr. Satya, a physiotherapist registered with recognized paramedics authority, provided services to Mr. Dayal for restoring mobility after his spine surgery and charged rupees 10,000 per month. Service comprises of regular home visit for physiotherapy session of 1 hour. What is your answer? Taxable or exempted? Which category it is coming under exemption? Healthcare services by authorized medical practitioner or paramedics. Actually, they will come under paramedics. Even paramedic service is also exempted. Whatever may be the amount, fully it will be exempted. Next, number 2. Mr. Paustik Ahar provided services to Sisuraksha and Anganwadi by way of serving of food, including midday meals for 6,000 per month. Sisuraksha served food to students in Anganwadi under midday meal scheme. What is your answer? Where? Catering services to category 1 education institution. Anganwadi schools will come under category 1 education institutions. So catering service provided to them will be exempted, whether the amount paid out of government contribution or corporate donations, irrespective of that. Third, fee charged by Passport Seva Kendra to Dada Exports Limited for the issuance of passport to its employees to visit foreign countries for export business. Exempted. Fee for birth certificate, death certificate, driving license, visa, passport. Do you remember that? Specific exemption with respect to services provided by government. 5 certificates. These are given to the company. Okay. Birth certificate, death certificate, driving license, visa, passport, that will be exempted. So in this case, it will be exempted under that point. Next, question number 26. Determine the taxability or otherwise of the following service provided by Indian Railways. Clockroom services provided to passengers. We discussed now this question. Service of transportation of passengers in second class. Exempted. Platform tickets. Exempted. Warehouse located in Bengaluru to Paras traders. That is not there in the exemption. Nowhere it is covered. And moreover, for railways, in the exemptions, we have seen special purpose vehicle, maintenance service, one zone or division to another zone or division, but nowhere it is there. So therefore, it will be taxable. Service of transportation of passengers in AC, taxable. Organic manure is notified goods, therefore it is exempted. And only 1,50,000 plus 10 lakhs. Accordingly, you need to write the reason for each and every activity, whether it is taxable or exempted. Okay, answer this. Transportation of organic manure by airways, taxable or exempted? Organic manure by airways, taxable or exempted? Why? For airways, notified goods transported, we don't have exemption. That notified goods transported exemption is there only in 3 places. Where and all? Railways, vessel, coastal waters and GTA. Only 3 places. So airways, if notified goods are transported, definitely it is taxable. For airways, only one exemption. What is that? Outside India to India, if they are transporting the goods, that alone is exempted. Then next. Question number 27. Mr. Divas, a registered person in Agra, Uttar Pradesh, purchased a car for 12,50,000 on 15th October. On 31st October, the car met with an accident resulting in minor damage. Due to urgency, he got his car repaired in the local garage of a nearby market instead of garage authorized by his general insurance company, that is Suraksha Insurance Company, through which his car was insured. the total cost of repairs was 54,000 excluding GST 18%. On instructions of Mr. Divas, the invoice for entire amount was raised by the garage in the name of Suraksha Insurance Company. So invoice is in whose name? Insurance company name. Can the insurance company take ITC? Yes. We discussed one circular. In case of reimbursement mode of settlement, if the insured has made the payment and insurance company is reimburses to the insured, still insurance company can take ITC provided the invoice is in the name of insurance company. The insurance company approved the claim amount only 40,000. What is the total amount? 54. But how much they approved? 40. Means how much they are going to reimburse? Only 40,000 along with GST 18%. In light of the above facts, you are required to answer the following questions. Number 1. Whether Suraksha Insurance Company is eligible to avail ITC on the basis of invoice raised by garage? If yes, what would be the amount of eligible ITC? How much? First, they can take ITC. We don't have blocked credit. Generally, repair and maintenance is blocked credit. However, that is not applicable in case of a general insurance company. And in this case, they are reimbursing only 40,000. So 40,000 into 18%, only 7,200 can be taken as ITC. Then next, they gave lot of data. You need to restrict it to just 3 points. First paragraph you need to write about blocked credit. Second paragraph you need to write about the circular that they can take ITC if invoice is in their name. Third paragraph you need to tell as they reimbursed only 40,000 rupees proportionate to that ITC available. Just restrict it to that. Okay. Next. Would your answer be different if garage has issued 2 different invoices? One for 40,000 plus GST to Suraksha Insurance and another for 14,000 plus 18%. The answer remains same. Even if they have given separate invoices, as the invoice in the name of insurance company is only for 40,000 and they have reimbursed 40,000, full 40,000 into 18% they can take credit 7,200. What about Divas? As the invoice is the name of Divas, insurance company cannot take ITC on that, and Mr. Divas, if the motor vehicle purchased is eligible for ITC, on this repair and maintenance also they can take ITC. That you need to write. Next, third, in case the garage issued invoice in the name of Mr. Divas, would Suraksha Insurance Company be eligible to avail ITC? No. Even though insurance company has reimbursed 40,000 plus GST, but as the invoice is not in the name of the insurance company, ITC not available to insurance company, and Divas can take ITC provided the motor vehicle purchased is eligible for ITC, because we have seen repair and maintenance, service center, and then insurance and hiring, renting and leasing of motor vehicles in relation to motor vehicle. If the motor vehicle purchased is eligible for ITC, this 4 service also eligible for ITC. So that is the answer for this. Next, question number 28. This is on TCS. Rajwada Operators Limited is registered under GST in the state of Karnataka as an e-commerce operator. It owns and operates a web portal which supplies various goods and services on behalf of various sellers or service providers to its ultimate customers. Details of supplies undertaken through ROL in the month of October are as under. Sale of goods worth 1,47,500 including GST by A Limited, registered supplier of Rajasthan, to B Limited, Gujarat. And also goods worth taxable value of 1,40,000 sold by A Limited, Rajasthan, to B Limited, Gujarat in the month of September were returned in the month of October. Now, what is that you need to compute? All figures above exclusive GST, compute the amount of TCS to be collected by ROL for the month of October. Now, as a e-commerce operator, you need to compute TCS on what? Net value of taxable supplies. What is net value of taxable supplies? Value of supplies made through the platform minus returns through the platform. Do you remember we discussed? Now see, what is the value of supplies made through the platform? 1,47,500 and while computing TCS we need to take out GST. So take GST. What is the rate of GST? 18%. So 1,47,500 into 100 divided by 118. How much? 1,25,000. Correct? 1,25,000 is the sales. But what is the sales returns? 1,40,000. So the value is negative. So TCS is applicable or not applicable? Not applicable, because the value is negative. So TCS will not be applicable. Nice point, no? So therefore TCS will be nil. Don't take 15,000 into 0.5%. You understood? That option also will be there in options. Okay, but you should not take. TCS will be 0. See there. So as it is a nil negative value, TCS to be collected is nil in this case. Second part, value of services provided from 21st October to 30th October by way of transportation of passengers by motor vehicles by X Limited, registered under GST in Karnataka to Z Limited, registered under GST in Karnataka, amounting to 5,50,000. It includes 1,50,000 against transportation services provided by Omnibus. Omnibus by a company. Transportation of passengers in Omnibus by a company is not notified for 9.5. Correct? In this case, who is transporting? Who is transporting? X Limited. X Limited. Ennappa? X Limited means company. Company transportation of passengers in Omnibus. 9.5 applicable or not applicable? Not applicable. Therefore, whether TCS is applicable? Yes. So therefore, on this 5,50,000, TCS will be payable at 0.5%. 0.5%, that will be 2,750. Correct? And what is the nature of supply? Intrastate supply or interstate supply? Sorry, it includes, okay, only 1,50,000. Then 1,50,000 into 0.5%, that is 750. Sir, on 4 lakhs no TCS. Why on 4 lakhs no TCS? Because 9.5 is applicable. 4 lakhs no TCS pa, because no 9.5 is applicable where they need to pay GST. So TCS not applicable. But on 1,50,000 the supplier will pay GST. 9.5 not applicable. So TCS is applicable 750. But here whether it is intrastate or interstate, what is the location of supplier? Karnataka. And to whom they are providing services? Various passengers. Means B2B or B2C? B2C. In case of B2C, transportation of passenger, what is the place of supply? Starting point of passenger, that is there only. Therefore, it will come under intrastate supply. So, CGST, SGST, that is 375 rupees each under CGST, SGST. You got it? Next, look into another point. Miss Zara of Mumbai books a room for 3 days and 2 nights. So in Raj Nivas Palace, Jodhpur, Rajasthan, through Maharaja Resorts Limited, also an e-commerce operator. Okay. So 2 e-commerce operators are there here. So how 2 e-commerce operators? First, Zara is the recipient. Zara is the recipient, customer. And how this customer is booking? Through Raj Nivas Palace, Maharaja Resorts Limited, MRL. So MRL, like that one e-commerce operator is there. And next, in Karnataka, MRL is integrated with ROL, who has an agreement with Raj Nivas Palace. So hotel is the supplier. Hotel is the supplier. This ROL is the e-commerce operator 1. This MRL is e-commerce operator 2. Correct? Then Raj Nivas Palace is registered in Rajasthan and raises invoice of 1,50,000 to Miss Zara and receives 1,45,000 from ROL on the same. Now, hotel and first e-commerce operator, second e-commerce operator and Zara. Now tell me, which e-commerce operator will get TCS? Supplier side e-commerce operator. When there are multiple e-commerce operators in a transaction, the supplier side e-commerce operator will deduct TCS. Therefore, ROL will deduct the TCS on what? 1,50,000, 1,45,000. Always TCS is not on payment remitted, it is on the value. What is the value? 1,50,000 into 0.5%, that is 750, and it is intrastate supply. How, sir? Hotel accommodation, hotel accommodation. In case of hotel accommodation, location of supplier is also Rajasthan, place of supply is location of immovable property, that is also Rajasthan, therefore it is intrastate supply. Like that, everywhere place of supply can be connected, you understood? And accordingly it will be intrastate supply, chargeable to CGST, SGST, 375 each, CGST, SGST. Sometimes to make it simple for you, they will give, assume all transactions as intrastate supplies, like that they will give in question. But if that line is not there, intrastate or interstate, like that line is not there, you need to put the effort to determine whether it is intrastate or interstate and determine the place of supply. Okay. Next, question number 29. Mehul Enterprises registered under GST in Uttar Pradesh and a monthly return filer is engaged in making taxable supply of goods and services. It furnished the details of its outward supplies in form GSTR1 for the month of January on 11th February. However, on 14th February, so first which month? January month, they filed GSTR1 by 11th February on time. On 14th February, the accountant of Mehul Enterprises noticed that one invoice issued to Vaishali traders for supply of goods of value 1 lakh, taxable at 18%, pertaining to January has been inadvertently missed to be declared in GSTR1 furnished in January. So they missed one invoice. They missed one invoice and GSTR1 filed, one file, and they came to know this on 14th of February. Still there is a time limit to file 3B? Yes. What is the time limit to file 3B? 20th of February. So now you are required to briefly discuss whether Mehul Enterprise can amend the details of outward supply furnished in GSTR1 of January. Possible? Yes. So if there is any details furnished in GSTR1 and it is filed, and that GSTR1 can be amended through GSTR1A, including the missed invoices can be added, and that 1A needs to be filed by when? By GSTR3B of January. So whenever they file the GSTR3B of January, by that time. If such amendment is permitted and details of one are amended, whether the said invoice will be available in 2B of Vaishali traders? No. So these details which are reported in GSTR1A will be added to the liability of Mehul Enterprises for January, and by 20th February they need to discharge that liability. However, this invoice not added in GSTR1 but added in 1A will be reflected in February 2B, not January 2B but February 2B to the recipient. You got it? The said invoice will be available in 2B of Vaishali traders for the month of January? No, only in February. Got it? So based on this only one chart we have seen in returns chapter. While reading, usually you feel like this will not come in exam. Okay. Usually while reading you feel like this and all, who will ask? Okay, they will ask. They will ask. Definitely I say will ask. This is common for all the papers. You just get tuned. See, we all have one problem. We are playing a game without knowing the rules of the game. Yes, because we should know the rules first. The rules are simple. 3 rules are only there in the game. When you are reading, you feel like sleeping. Important. Important. That area will be questioned, tested in exam. Number 2. When you are reading, your mind will tell this and all will not come in exam. Definitely. Very, very important. Very, very important. That will come in exam. Rule number 3. That is, when you are reading, you are not able to understand anything. You are seeing, but nothing is going in your mind. Very, 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 very important. So definitely that will be tested. These are the 3 rules of this game. If you are clear in this, nothing will happen. Okay, you will clear. You understood? So therefore, be prepared. So that is how this EA Institute will make the question paper. So definitely at the time when I discussed, you thought, nah, this and all, who will ask like that? See, they asked. And you know what? It's an RTP question. It's an RTP question. I did not create. In this mighty 50, around some 20-25 questions I created. Remaining questions and all are RTP and some other sources I have taken this. CMA Institute is also having IDT paper. There also some questions will be tested. CA Institute sometimes copy from there also. So from there also I have lifted. Okay. So therefore, these questions, this particular question is a RTP question. They can make a question like this. Then looking into question number 30. Mr. Prithviraj, registered under GST, is engaged in supplying services as discussed in the table below in Maharashtra. He has furnished the following information with respect to services provided or received by him during the month of February. So this is your 10-mark question type. So whenever you get a question like this, just remember this template and you need to follow this template. In page number 179 I have given. Page number 179 I have given how to present that 10 marks question. So you need to prepare it in total 4 statements which I already told you. First statement will be computation of gross GST payable on outward supplies. Second statement, computation of GST payable on inward supply under RCM. So when you start the answer, so first page, page number 1, you are starting the answer in the answer booklet. In page number 1, you write the first statement, that is computation of gross GST payable under FCM, full statement. Next page, you take gross, like in GST payable on inward supply under RCM, okay, and that will be half page because more inward supplies will not be there. And in that remaining half page, you take computation of input tax credit availed. Now, you please prepare these 3 statements. Thereafter, every question when you are reading, so it will come, the transaction will come either in one statement or more than one statement. For example, outward supply will come only in statement number 1. Inward supply, if you have RCM, it will come in RCM statement also, ITC statement also. Inward supply on which you pay GST under FCM, it will come only in ITC statement. Once you prepare these 3 statements, finally statement number 4, computation of net GST payable will be easy. First, so inward supply, like outward supply statement, computation of GST payable. So once you take the outward supply, what is that? First you need to check. Check whether it is supply or not a supply. If it is not a supply, you just write the note that the said activity is not a supply and GST not payable. Don't take anything in the value column because it is first of all not a supply, so don't have to add it to the value also, and take the GST as dash dash dash. Second, suppose if it becomes supply, check whether it is exempted. Yes, it is exempted. Again, write the note that the said activity is exempted. So therefore, take the value. Why for exempted transactions we need to take value? Proportionate ITC we need to take. There will be some common ITC used for both taxable and exempted. Only proportionate ITC is available for us. You remember that? What is it I told you? Total ITC into exempted divided by total. We cannot enjoy the ITC. For that reason, we need to know the exempted turnover. So please keep this exempted turnover, but the GST will not be there. Then next one, supply, which will be taxable under RCM. Means don't add it to supplier liability, you need to add it to recipient liability. So therefore it will come in your statement only as a note, but it will be taxable under RCM. So therefore don't take the liability, but add it in the value. Why you need to add it in the value? We discussed in input tax credit chapter that our outward supply covered under RCM is treated as exempted for ITC purpose. So taxable under RCM treated as exempted for ITC purpose. So just take the value. Then finally you have some supply taxable under FCM. If it is intra, put it under CGST, SGST. If it is inter, put it under IGST, and you will get the total. So now this is your gross GST payable under FCM, and this turnover will help you to determine two things. Number one, exempted turnover is useful for ITC reversal, and taxable turnover is useful for checking the applicability of Rule 86B. So if the taxable turnover exceeds 50 lakhs, then 86B will be applicable. For that it will be useful. Understood upper first statement? Then second statement. Second statement, computation of GST payable on inward supplies under RCM. Again we need to check whether the activity is supply or not a supply. Not a supply, leave it, don't take. Suppose even for inward supply should we check, sir? Yes, even for inward supply we need to check. Sometimes the activity is not at all supply, then why you need to take it to your RCM liability? You don't have to take it. So if your inward supply is not a supply, leave it. Suppose if the inward supply is exempted, GST itself you have not paid, so leave it. Suppose if the inward supply is taxable but it is covered under FCM, then it will not come in second statement, but it will come only in the third statement as ITC. Correct? Inward supply on which you pay GST under FCM, that is to the supplier, then it will come only in the ITC statement, it will not come under RCM liability. Then next, inward supply taxable under RCM, then it will be added to the RCM liability, plus it will have one more adjustment. What is that one more adjustment? You can take ITC also on this. So in ITC statement, two ITCs will come. One is inward supply taxable under FCM and inward supply taxable under RCM. This RCM liability will come in ITC statement as well, because whatever tax we paid on inward supply under RCM, we can avail it as ITC for that reason. And thereafter, ineligible ITC you need to reverse. And what is that ineligible ITC? Blocked credit, used for a non-business purpose, used for exempted, that you take out. And then you will get ITC availed in 3B and do the reversal. What is that reversal? Total ITC into exempted divided by total. You need to do the reversal. And then opening balance you add. Why opening balance you need to add in the last? Because this month credit you need to adjust and take the net ITC, add opening balance. So you will get the net eligible ITC for utilization. Finally, computation of net GST payable. In that, you will take gross GST payable under FCM from which statement? First statement, you will take that less ITC utilized. How much will be the ITC utilized? Now you need to check whether the taxable turnover exceeds 50 lakhs or not from the first statement. If the taxable turnover exceeds 50 lakhs, then 99% of the liability only we can use from credit ledger. And suppose if Rule 86B is not applicable, 100% ITC we can use from the credit ledger. But for that one more point, you should have sufficient balance in the credit ledger, then only we adopt this. And next, GST payable under RCM you need to add, that is from second statement. Finally, you will get net GST payable using electronic cash ledger. Clear up this template. Ensure that we are doing all the questions using this template. When you practice itself, in your practicing stage itself, you start incorporating like this, so that you will get the flow in exam. First, here we need to see Mr. Prithviraj, registered under GST, is engaged in supplying services. As discussed in the table below in Maharashtra, he has furnished the following information with respect to service provided or received by him during the month of February. First one, Carnatic music performance given by Prithviraj. Inward or outward? Outward. Outward. And is it taxable or exempted? Why taxable? Because to promote the brand of ready-made garments, definitely it will be taxable. And is it FCM or RCM? FCM. Because for musical performance like that, we don't have any RCM. Correct? That is temporary transfer of copyright related to musical performance is only RCM. But a performance artist and all is not covered under RCM. It will be FCM. Quickly we have to run through in our mind whether it comes under Sir, CG, Go, Salads, anywhere. If not, means it is FCM. Otherwise it will be RCM. The next, number 2. Outdoor catering service availed. Availed means inward. Inward. Availed for marketing event organized for his prospective customers. Is it taxable? Yes. And is it FCM or RCM? FCM. We don't have to pay. Catering and all is not there in RCM. FCM. And as it is inward, you also check whether ITC available or ITC not available. Huh? No ITC, blocked credit. Outdoor catering is blocked credit. However, in 3 cases we can take ITC on block credit. Number 1, employer to employee under statutory obligation. No. Inward outward in the same category. No. Inward part of outward. No. So ITC not available. Okay. Next. So like that, when you write in short no while reading the question, in the answer sheet quickly you can arrive at the answer. Of course, the invigilator will tell you should not scribble anything in the question paper, etc. and all. They don't know. See, unfortunate that they don't know anything about CA exam. They are that college teachers, etc. and all. They don't know how difficult CA exam. If they know, why will they do invigilation? Correct. So know, they will be in a different place, correct or not. So therefore, now this they will tell. You just request them. Okay, ma'am, okay, sir, I will erase it later. So first you write, you finish the answer, and thereafter you erase. Okay, and don't react odd way. I will do like this. Whatever you want to do, you do. Don't do. Please tone, requesting tone, they will understand, and you do that. Because ultimately, end of the day, if this 10 marks, 10 out of 10 if we are getting, thereafter remaining questions and all, we will not lose marks. You know where we lose marks? MCQ is a 10 marks question. Remaining and all, for 5 mark questions and all, 3 or 2 easily we will get. Easily we will get. So no student has shown me an answer sheet wherein in that there is no marks. Some marks they will give. And provided minimum to minimum the answer is correct, they will get. But major chunk they will be losing marks in MCQ as well as in the 10 marks question. You are pakka in that na, thereafter no one can stop you. Who knows, your score will be somewhere 70s and 80s also. Okay, it happens pa, it happens. Because before attempt, May attempt and all, so 80s, 90s, 93 and all one student got. Okay, and therefore possible, definitely it is possible. Not ranker and all, ranker getting 93 normal, ranker getting 90 marks and all normal. No, that student wrote only one group for May, and in that one group 3 subjects, so wherein account somewhere like 60, law somewhere like 55, and tax alone 93. Okay, so too much they have prepared, I think. So see this. Then services of transportation of students provided to Subhaskar College, inward or outward? Outward. Outward. Transportation service to Subhaskar College, providing education as a part of curriculum for obtaining recognized qualification. Taxable or exempted? Why? College. If it is to school, then it will be exempted. As it is to college, it will be taxable. FCM or RCM? FCM. For transportation services, we don't have RCM. Only for renting a motor vehicle, we have RCM. And next, legal services availed. So inward or outward? Inward. Inward. Legal services availed for official purpose from an advocate located in Gujarat. In order to know whether it is taxable or not, check whether the aggregate turnover during the previous year exceed threshold limit. Because advocate services to a business entity whose turnover during the previous year does not exceed threshold limit is exempted. 5th point, in the notes it is given the turnover of Prithviraj was 2.5 crore in the previous financial year. So definitely it will be taxable, and moreover it is covered under RCM. Can they take ITC? Yes. For legal service we don't have any blocked credit, so ITC is also available. Next, services provided to Wealth Bank as a business correspondent with respect to accounts in branch of the bank in urban area, inward or outward? Outward. Taxable or exempted? Taxable, because it is urban area. And whether it is FCM or RCM? Sa vachiduva. Okay. After 3 days, today 4th day, if you tell RCM etc. and all, seriously, I'll take you to the 3rd floor and from there itself I will push you. I don't have any problem. I will tell you just went to, you became cranky and you fell down like that. Okay. So the FCM, business correspondent, business facilitator only RCM. Got it? So it is FCM. Otherwise I will die and write your name and die. Okay. Next. See this, criminal this is and all. How many times I told, business facilitator to banking company only RCM. Then recovery agent services provided to a car dealer, inward or outward? Outward, outward. And it is taxable. Recovery agent, we don't have any exemption. FCM or RCM? Good. Why? Recovery agent to bank only RCM. Here it is car dealer. That's why FCM. General insurance taken on a car. Seating capacity 5, used for official purpose, inward or outward? Inward, inward, it is taxable, taxable, and insurance and all is not in RCM, it will be FCM. Only insurance agent service is RCM, and whether ITC is available or not available. Why? Because motor vehicle purchase is not eligible for ITC. So insurance service also not eligible for ITC, no ITC. And we have to now prepare the answer over. Rates of GST is given, all inward and outward are exclusive of taxes, all conditions are satisfied, all the transactions are intrastate unless information for determination of place of supply is given. If the information is available for place of supply, then you need to determine. Otherwise, everything is intra. Not that everything is intra like that blindly they gave. Read the question properly. All are intra unless information for determination of place of supply is given. Means what? If you have information about place of supply, determine. If not, then only you take intra. Compute the net GST payable in cash by Prithviraj for the month of February. First one, we will take outward supply, that Carnatic music performance 1,40,000. Is it intra or inter? Sir, performance, musical performance like that, do we have any specific provision? Where? We don't have. What we have is organizing an event, training and performance appraisal, and food, beauty treatment, but nowhere this Carnatic music performance we have any specific provision. So general provisions. General provisions, what will be taken as the place of supply? Location of recipient. So what is the location of recipient? We don't have information, correct? So intra. So intra, we don't have the place of supply. So now intra, you apply that note. So CGST, SGST, say this 1,40,000, CGST, SGST 12,600, 12,600, clear? Next, second outward. So first outward we completed, second outward. Service of transportation of students, in this case it is taxable. And do we have any information about transportation? We need to take starting point B to B, B to C, all these things not there, correct? So due to that reason we will take it as intra. Again 1 lakh into CGST, SGST 9,000 and 9,000. Next outward, bank, anyhow bank is general provision. And where is that bank located? We don't have information. So again intra, this will be taxable. So 2 lakhs, CGST, SGST 9% and 9%, 18,000 and 18,000. Then next outward, recovery agent service to car dealer, taxable under FCM. Again we don't have the place of supply information. So intra, CGST, SGST 15,000 into 18%, that is 9%, 9%. So we got the total GST payable under FCM, statement number 1. You got it? Now statement number 2, any inward supply under RCM? 1, only one, that is legal services. So second statement, legal service availed from a advocate. Now we need to determine for advocate services, where is advocate located? Gujarat. And advocate service, do we have any specific provision for place of supply? No. So general provisions, what will be taken as the place of supply? Location of recipient. Prithviraj is in Maharashtra. Supplier in Gujarat. Place of supply Maharashtra. Therefore, it will be inter. You understood? For this purpose. Inter. And accordingly, 1,75,000 into 18% will be interstate. 31,500 IGST, GST payable under RCM, any other inward? No, only one inward. Whatever inward you have, that will also come in ITC statement. Whatever you have kept under statement 2, if eligible for ITC, it will come in third statement also, that legal service 31,500. Next inward you see. What is the next inward after this legal service? Outdoor catering, you cannot take ITC. And next even general insurance, you cannot take ITC, but you need to just write the note that ITC not available like that. Now you will get the total ITC also. Now computation of net GST payable. What is the gross GST under FCM? 4950, 4950, 0. And what is the ITC utilized? This 31,500 we can utilize for payment of CGST, SGST equally. And therefore, RCM liability, if you add, net GST payable will be 25,200, 25,200 and 31,500. Understood? Clear? Then, so this is how 10 marks question. That's what. In practice itself, if you start practicing like this, you will get the flow. Once you get the flow, you will not find it difficult in exam. It's not about you need to listen the answer. It's about you need to practice. Okay. So far I did my job. The remaining part you need to do. Okay. That part is that you need to practice. Then only you will get the flow of it. Okay. And next, question number 31. Determine the place of supply in respect of the following independent cases. You need any break? You know, 20 questions are there. It will take, it's not that it will get over in half an hour, etc. and all. It will go up to 5 o'clock easily, it will go. Okay. So take a break for 15 minutes and then we will continue. Okay. I said about question papers, no? So you just download it because we could not take a print of it because as it was continuously raining, so we could not get the print done. So I have uploaded it in my website tharunraj.com. Go to downloads. In the downloads you can see CA Intermediate test series question paper and suggested answers you can find. There we have given all the question papers including the suggested answers. Okay. So total 91 pages is there. You don't have to take a print of it and all. Just you keep it in your desktop and start writing the answers and then cross check with respect to the suggested answers. Okay. So what I did it like first test will be 50% portion. So that will have these chapters. Introduction to GST, supply under GST, liability, exemptions, place of supply, time of supply. First 50% paper. Then test 2 will be remaining portion. And test 3 will be these two portions for 100 marks. Test 4 is normal DT and IDT mock test. Okay, this is your DT and IDT 100 marks paper, and I have included both DT portion as well as IDT portion. First it is question papers and then I have given yes. So income tax portion is also included. This is the last paper in which income tax as well as indirect tax both portion is included. Your 100 marks paper. Okay. So tharunraj.com in downloads. Either Tharun's Brainery.store or tharunraj.com, both websites. Any website you can go, same website only. In that under downloads, under CA Intermediate. Okay, fine. You please make use of it, and all are very good questions. You try that so that it will be like a revision also for you, and you can complete the discussion. I mean, complete the portion also after writing this test series. You yourself decide the time, etc. and all, and you take up the test. Fine. So we'll come back to the discussion related to question number 31, page number 33. Determine the place of supply in respect of following independent cases. Brief reason should form part of your answer. Mr. U from Mount Abu, Rajasthan, an unregistered person, ordered one laptop as a gift for her father from e-commerce site Zilu, registered in Mumbai, Maharashtra, to be delivered at his parent house located at Hyderabad, Gujarat. Mount Abu, Rajasthan was mentioned as permanent address of Mr. U at e-commerce site. We discussed one circular related to sale of goods through e-commerce platform. If the billing address and delivery address is different, the delivery address should be taken as the place of supply. You check here. What is the billing address? Rajasthan. But what is the delivery address? Ahmedabad, Gujarat. So what should be taken as the place of supply? Ahmedabad, Gujarat should be taken as the place of supply as per that CBSE circular. And here it is, supply involves movement of goods and supply to an unregistered person, and we need to take location of recipient in the records of supplier. As per CBSE circular, as there is a different billing and delivery address, the delivery address will be taken as place of supply. Then Mr. Oman, a tourist from Australia, visited India in the month of September. He got repaired his camera during his visit to Udaipur, Rajasthan by Mr. R, who also visited Udaipur at the same time. Mr. R is registered in New Delhi. Mr. Oman provided address of his friend who resides at Mumbai, Maharashtra to be mentioned in the bill issued by Mr. R for repairing a camera. Repairing a camera, we don't have any specific provision, so it will be general provision. We need to take location of recipient, B to B, B to C, B to C, because he is not from India. So B to C, location of recipient in the records of supplier. So he gave the address of his friend who resides at Mumbai, Maharashtra. So therefore Mumbai, Maharashtra will be taken as the place of supply. Then next question number 32. Mr. Bose took a health insurance policy for the coverage amount of 5 lakh upon making payment of premium of 10,000 annually from Swasthya Bima Insurance Company on 110. Mr. Bose had no claim during 2024-25. On 110, Swasthya Bima Insurance offered a discount of 5% on the renewal premium. No claim bonus pa. Amount to Mr. Bose for having claim free year 24-25 because the company has the policy of offering a discount of 5% on the renewal premium amount for every claim free year in the form of no claim bonus. Swasthya Bima Insurance make the disclosure of the fact of availability of discount in form of NCB subject to certain conditions to Mr. Bose in the insurance policy document itself. Also, there is specific mention of the discount in form of no claim bonus in the invoice issued by them to Mr. Bose. As per Mr. Bose accountant, he has to pay GST on the whole renewal premium amount without any deduction, as no claim bonus is for agreeing to the obligation to refrain from the act of lodging insurance. Is the contention of accountant correct? No. What we discussed, no claim bonus which is given by the insurance company to the insured is in the nature of a pre-supply discount and it is duly recorded in the invoice. Therefore, it is allowed as a deduction, which means GST is payable only on 95%. That is whatever is the renewal premium minus 5% on that. Say this, the value of supply does not include any discount. It is clarified that no claim bonus is permissible deduction provided it is duly recorded in the invoice. The contention of accountant is not correct and GST shall be leviable on the actual premium. Actual premium means renewal premium minus discount payable by Mr. Bose to the insurance company after deduction of NCB. So then next question number 33. See, all these are 5 marks question types. Okay. And see, you don't have to think for 5 marks. If I write one paragraph, it is sufficient. Yes. Sometimes the answer itself will be one paragraph only. It's not about the quantity, it's about the quality. Okay, it's not about the quantity. I have to write pages and pages. No, it's about the quality of the answer. That is enough. To the point, if you are writing, you will get the marks. Question number 33. Determine whether liability to obtain registration arises or not under GST law in the following independent cases. Number 1, Mr. G from Delhi is dealing in purchase and sale of securities in his own account from secondary market. He disclosed the transactions of purchase and sale of securities in trading account and treated the same as business income. Turnover from April to September is 75 lakhs. Is he liable for registration? So we discussed this. What is that I told you? A person who is dealing in transaction in securities, that securities are neither goods nor services. Consequently, GST is not applicable on the same. And are they required to register or not required to register? Not required to register. So that is the answer for the first part. In the given case, G is not liable to register because the shares are neither goods nor services. Second, KLJ Foundation from Jaipur, Rajasthan, a charitable trust registered under 12AB of Income Tax Act, is engaged in supply of various services by charitable trust. KLJ Foundation receipts for the preceding financial year was 30 lakhs. Whether the foundation is required to take registration. Basically, they are engaged in supply of activities, charitable activities, 12AB, and they are exempted from registration. Correct? They are exempted from registration. Consequently, they are not required to get registered in this case. Okay, because exclusively engaged in supplying services exempt from tax. We discussed na, Charitable trust 12AA, 12AB, specified charitable activities are exempted. Then look into question number 34. This is the 10-mark question type. Mr. Sagar Chaturvedi, registered under GST, is engaged in supply of multiple services as discussed in table below in Mumbai, Maharashtra. He has furnished the following information with respect to services supplied and received by him during the month of April. Service of transportation of students, inward or outward? Outward. And to Sanskar College offering degree courses recognized by law, taxable, because only to category 1 it is exempted. So, and it is covered under FCM. Next, number 2, outward supply of service of milling of paddy into rice. Again outward, milling of paddy into rice, we don't have any exemption. It will be taxable and it will come under FCM because it is not covered under RCM. We don't have list of services RCM for this. Received the services means inward, received the services by way of transportation of goods by road from Sindhu transporters and unregistered GTA, definitely it will be RCM, taxable RCM, and they have not given notified goods, so no exemption. And the recipient also registered. If they are unregistered individual, then exempted, and recipient is not government, only for deducting TDS, so therefore it will be taxable under RCM. Organized a business exhibition, so outward, organized a business exhibition in Gujarat for Ramesh Industries registered in Delhi. Is it exempted? No. If the business exhibition is held outside India, then it is exempted, otherwise it will be taxable and it will be covered under FCM. Because organizing a business exhibition, we don't have any RCM related to that. Then provided training at his municipal office, outward, provided training at his Mumbai office to employees of Asiana Interiors, a proprietorship concern of Rajasthan, which was not registered under GST. For training, we don't have any exemption, so it will be taxable and it will be covered under FCM. Then recovery agent services provided to a car dealer, again outward, and it will be taxable under FCM. Legal services availed, inward, legal services availed for office purpose from individual advocate located in Gujarat. Check their turnover during previous year 1.8 crores. Therefore, it will be taxable and it will cover under RCM. Then sponsored his business in a cricket match organized by Mumbai Cricket Association Maharashtra, wherein he paid. He paid means it is a inward. He paid an amount of 1,50,000 to the association. So whether it will be covered under taxable or exempted. Is this Mumbai Cricket Association Maharashtra recognized sports body? No. National Sports Federation, Inter-University Sports Board, Paralympic Committee, Central Civil Services Cultural and Sports Board, Indian Olympic Association, Panchayat Sports Board. Nowhere it is. So due to that reason it will be taxable. And in case of sponsorship services, supplier should be other than body corporate. Yes, supplier is other than body corporate. And recipient should be body corporate or firm. Recipient is an individual. Therefore it is FCM or RCM? FCM. Because two conditions should be satisfied. Supplier should be other than body corporate, yes, and recipient should be body corporate or firm, then only RCM, but here recipient is not body corporate or firm, therefore it will be FCM. Then rates are given, all inward, outward, exclusive, all necessary conditions. All the above are intrastate wherever the information for determining place of supply is not provided. Same way. Now from the beginning we will see. So first one, what is that? Transportation services, but we don't have the information about recipient location. So therefore we will treat it as intra. Second one also we don't have information, so we will treat it as intra. Third one, goods transport agency data is given, unregistered GTA. So transportation services, B2B or B2C? B2B, because transportation agency is in Maharashtra and this person is also in Maharashtra. Therefore, definitely it will be intra. And organizing an event. For organizing an event, what will be the place of supply? Location of event. But we have B2B, B2C. For organizing an event, we need to check B2B, B2C. So TOT, O for organizing an event. So organizing an event for Ramesh Industries registered in Delhi. Where is this person in? Maharashtra. Place of supply Delhi. Therefore, it will be inter. Then training to proprietorship concern which was not registered. Training and performance appraisal, we need to check B2B, B2C, but here it is B2C. So location where the event is held, location of performance. Where is the location of performance? Provided training at his Mumbai office. Where is he located? Maharashtra. Therefore, it will be intra. Recovery agent service provided to car dealer, but we don't have any information about this location. So intra. Legal services, Gujarat. So location of supplier Gujarat, and in case of legal service it is general provisions. Location of recipient Maharashtra. Therefore, it will be inter. Sponsorship service also like organizing an event only. Sponsorship service also like organizing an event only. For organizing an event, where is the location of supplier? Maharashtra. B2B or B2C? B2B. So B2B, not B2C, because recipient is Sagar Chaturvedi registered. Therefore, we need to take place of suppliers, location of recipient, and it will become intra. Got it? So that details we need to write. And first we will take statement number 1, computation of GST payable on outward supplies. First transaction 90,000, intra, CGST, SGST 9%, 9%. Second transaction, that is outward supply, again intra, 1,80,000, CGST, SGST. Then third transaction, organized business exhibition, inter. So 20 lakhs will be IGST. Okay, wow. Clear? Next. Then next we need to take, next outward, provided training, intra, FCM. So 1 lakh into CGST, SGST 9,000, 9,000. What is next outward? Recovery agent services, taxable intra 30,000, CGST, SGST. So therefore, we got the first statement, computation of gross GST payable under FCM. See, once you start reading and writing it there itself, then it is just the application. We need to put it in the answer. So fast it will be, okay. Only notes you need to write. Notes also you write like this, within the table itself. Within the table itself you write the notes. Then second statement, do we have any inward under RCM? Yes, 2 services, GTA services, legal services. So first GTA services, 2 lakhs, and whenever it is GTA service, the rate of GST is what under RCM? 5%. So 2.5%, 2.5%. Then legal services will be inter, that is 1,60,000 into 18%, that is 28,880. So we got the second statement also, RCM. And both of these inward supplies we can take ITZ. Now see, wherever inward is there, can we take ITZ? Yes. And even in case of legal service, can we take ITZ? Yes. And even sponsorship also we can take ITZ. And whatever RCM liability we paid, it will come in ITZ. See this, transportation, legal service, sponsorship also we can take. So we got the ITZ also. Now finally, net GST payable, gross GST payable 36,000, 3,60,000 minus ITZ. What is the ITZ? All the ITZs is within the liability, so we will reduce. And then GST payable under RCM, so 5,000, 5,000, 28,800. So we got the net GST payable. Understood, pa? Everything is in the same format. Only thing, transaction they will change. That's what, when you start doing the questions, you will get. So this is also one RTP question. The previous one I discussed now, that is also one RTP question. Mostly the questions will be like this, okay. Only adjustments will differ. Then look into question number 35. Regal Foundation of Commerce organized a business summit in Surat, Gujarat, in which all the startups were invited to pitch their business ideas. Pandit Jewellers Private Limited, registered in the state of Maharashtra, sponsored the summit. and paid a sponsorship fee of 1,50,000 to Regal Foundation of Commerce. You are required to determine who is the person liable to pay tax if Regal Foundation of Commerce is a body corporate. First, here it is a sponsorship services. Sponsorship services, for this is not there in exemption, it is taxable. And for sponsorship service, what is the condition for RCM? Supplier should be other than body corporate. But here supplier is body corporate because they are only organizing the business summit. Organizer is the supplier. Supplier is other than body corporate is the first condition. But that itself not satisfied. Supplier is body corporate. Therefore, it will be taxable under FCM. So, in this case, the Regal Foundation of Commerce is required to pay tax under forward charge. Second, if Regal Foundation of Commerce is not a body corporate, then if they are not a body corporate, then it will be covered under RCM. Supplier other than body corporate and recipient is body corporate, Pandit Jewels Limited. So, therefore, GST payable under RCM, Pandit Jewels Private Limited is required to pay tax under reverse charge. Question number 36. Examine whether GST is exempted in the following independent cases of supply of services. Apex Facilities provided civil maintenance services for the upkeep of Municipal Corporation of Delhi head office building. Value of supply of goods constitute 20% while providing such maintenance services. We have discussed one exemption in case of composite supply, of services, but provided the value does not exceed 25% is exempted, provided it is under Article 243 GRW of the Constitution. Correct? In this case, it is not given that the Municipal Corporation of Delhi is required to do that activity as per Article 243 GRW. So, should that be given? Definitely that should be given. Only when it is given and they outsource that contract to us, when we provide that supply, then only it is exempted. If you remember the tedious question we discussed, maintenance services of replacement of defunct lights, there clearly it is given this activity is entrusted to them under Article 243W of the Constitution, like that. But where is it here? It's not given here. Even though it is services to government, even though it is supply to government, even though the value does not exceed 25%, the value of goods does not exceed 25% of the total, but the exemption is not available. The exemption is available only in case of the activity which they have to do under Constitution as per Article 243G or W of the Constitution. Nowhere it is given. Due to that reason, is this service provided to them is taxable or exempted? Taxable. Therefore, civil maintenance service are not exempted and hence it will be taxable, because only those services which are under 243W, in this case, services received for upkeep of MCD office are not in relation to function entrusted under Article 243W of Constitution. That's why. Number 2, Messrs. Talreja and Talreja, a firm of advocates, provide legal services to the state government for representation in High Court. Taxable or exempted? Why? Advocate services to government, central government, state government, local authority, government authority or government entity is exempted. So, accordingly, it will be exempted from GST. BLF Mall Noida provides service by way of vehicle parking to general public in the basement of the mall. Why? For this, we don't have any exemption. So, consequently, it will be taxable, not covered under exemption. So, GST payable. Service provided by a private transport operator to Scholar Boys Higher Secondary School by way of transportation of students to and from school. Exempted. Why? Category 1. Transportation of category 1, therefore it will be exempted. Then question number 37. Mr. Mutswamy, an electronic dealer registered in Bengaluru, Karnataka, hired Parivahan Logistics, an unregistered GTA, to deliver the goods at the place of business of customer in Jaipur. Definitely unregistered GTA means it will be RCM. and Parivahan Logistics charged 60,000 for the transportation of goods, which was paid by Mutswamy on 4th January through account pay check. The delivery was also made on the same day. Parivahan Logistics did not raise tax invoice for these services since it was unregistered. In this case, you are required to determine person liable to issue tax invoice. As the supplier is unregistered and the supply is covered under RCM, the recipient should give tax invoice within 30 days from the date of receipt of services. What is the date on which they received the services? 4th January. So 4th January, within 30 days, they need to give invoice in this case. Okay. Clear pa? And who is the person liable to pay GST in this case? RCM Mutswamy, Mr. Mutswamy. So within 30 days from 3rd February. Okay. 3rd February, sorry. 4th January. 4th January means 30 minus 4. So that will be 26. It will be 3rd of February. 3rd of February will be taken as the time limit within 30 days from the date of receipt of services. They need to, because in January we have 31 days now. So 4th January, 30 days will be 3rd of February. Okay. Correct only. And time limit for issuance of invoice we discussed. Time of supply of transportation services. Here invoice is given by supplier to recipient or recipient to supplier? Recipient to supplier. What will be taken as the time of supply in this case? The date on which payment is made, 4th January, or the date on which invoice is issued, whichever is earlier. So date of payment or date of issuance of invoice, assuming that they are giving invoice on 3rd February, that is given. Assuming the tax invoice is issued on the last day on which it should have been issued, means 3rd February, whichever is earlier is what? 4th January will be taken as time of supply. So this question is related to latest provisions of self-invoice and the time of supply related to. One more point also they can check. What is the date on which they can avail ITC? So I will add that point. When they can avail ITC? When they can avail ITC? When they can avail ITC? When? As and when the invoice is issued. When they gave invoice, even though they are paying tax for January, but they gave invoice in February. So therefore, ITC can be availed. ITC can be availed in the month of invoice. In the month of invoice, that is February. Even though payment is made, even though payment of GST is for January. Correct? Time of supply you see here. Time of supply is 4th January only na. Ennappa? Time of supply 4th January means they will pay it for January month. Ana they can take ITC for February month, because February month only they are giving the invoice. So when they can avail ITC, ITC can be availed in the month of invoice, that is February, even though payment of GST is for January. Next, question number 38. Muscat Motors Private Limited, hereinafter referred as MMPL, a dealer of motor vehicles registered in Udaipur, Rajasthan, has given an ex-works contract to Ganesh Traders registered in Ahmedabad, Gujarat for manufacturing 10 units of pickup vans. So Muscat Motors is the dealer, Ganesh Traders is the supplier registered in Ahmedabad for manufacturing 10 units of pickup van. What type of contract it is? Ex-works contract. Ex-works contract means what? The supplier will deliver the goods at their location. Messrs. Ganesh Traders manufacture the vans and handed them over to the transporter on behalf of MMPL on 29th April, and delivery on its part is complete at its factory gate in Ahmedabad. Further, it raised the invoice for all 10 pickup vans on the same day. MMPL has recorded the invoice in its books on the same day. Price of the vans ex-factory was 10 lakh each, excluding GST at 28%. However, the fans were physically received by MMPL at its showroom in Udaipur on 2nd May and the payment was also made on the same day. Now you tell me what will be considered as the date of receipt of goods? 29th April, 2nd May. 29th April. Why? We discussed one point. What is that? When goods are handed over to the transporter, the date on which transporter has received the goods, it is deemed that the registered person has received the goods. Even you have written that in your book also. Okay. So this is called as deemed delivery concept. When the goods are handed over to a third person on the instructions of the registered person, the day on which the third person has received the goods, it is deemed that the registered person has received the goods. Accordingly, in the present case, even though they have actually received the goods on 2nd May, but on 29th April itself the goods are deemed to have been received. So for April month itself ITC can be availed. Got it? Even though they are receiving it physically on 2nd May. Then after the payment, 2 vans got damaged completely in the fire in the showroom in the first week of May. Then what they should do? April they need to take ITC, and for 2 vehicles they need to reverse the ITC because it got damaged. We have a blocked credit point. What is that? As per 17 subsection 5, if any purchased goods are lost, destroyed, written off, etc., then we need to reverse the ITC. And therefore they were written off in the books. Discuss the availability of ITC. See here. So initially on 29th April, full ITC of 28 lakhs. How full ITC of 28 lakhs? How much pa? 10 lakh into 28%. 10 lakh into 28% means 2 lakh 80,000. 2 lakh 80,000 into 10. So what is 2 lakh 80,000 into 10? 28 lakhs can be availed. Thereafter in the month of May, so they have to reverse the ITC for 2 vans. That is 2 lakh 80,000 into 2. 5.6 lakhs they need to reverse. Understood? Then question number 39. So this is related to that point, deemed delivery point. Question number 39. Akarsha Traders, a registered supplier under GST in Uttar Pradesh, had their GST registration cancelled retrospectively with effect from 1st September. Please concentrate, it's a very good question. Their registration got cancelled retrospectively with effect from 1st September of current financial year. The cancellation order was passed on 15th September. At the time of cancellation, the supplier has not availed ITC on certain eligible invoices issued in February and March of the preceding year. So February, March of the preceding year means for which the time limit avail ITC is this year November. But before November itself, the registration got cancelled. Means as on the date of cancellation of registration, the time limit to avail ITC is not expired. That's what they are trying to convey. So preceding financial year for the inward supply of taxable goods on which ITC otherwise was available. Okay, va? So the time limit for availment of ITC, the regular time limit for availment of ITC is not expired as on the date of cancellation of registration. Subsequently, on filing an application for revocation, the cancellation of registration was revoked by the proper officer on 15 December of the current financial year. So when the revocation order was made, 15th December, the firm wishes to file its 3B return for the month of September on 21st December current financial year and wishes to claim ITC on the said invoice of February and March of the preceding financial year. You are required to advise Akarsha Traders. So as per section 16 subsection 6 of CGST Act, in case of cancellation of registration and revocation of cancellation of registration, they can avail the ITC within a regular time limit. What is that regular time limit? 30th November of succeeding financial year or date of filing annual return, whichever is earlier. Assuming that annual return for the previous year is furnished on 31st December of current financial year, means what is the regular time limit? 30th November of the current financial year or 30 days from the Date of revocation order, within 30 days from revocation order. What is the revocation order? 15th December, 15th December, 30 days. That is 14th of January, whichever is later. So that is 14th January of next year is the later date, and by that time they want to take the ITC, definitely it is possible, no issue. So first you need to write the provision and you need to apply that. They can avail the ITC by 30th November or 30 days from the revocation of cancellation, that is 14 January, whichever is later. In the present case, they want to avail the ITC by 21st December, that is within the time limit they can avail the ITC. Is that clear, pa? But condition is what? As on the date of cancellation of registration, the regular time limit for availment of ITC should not be expired. So this with a illustration we have discussed. Okay, same question. Then question number 40, see this is a 10-mark question which they gave on value of supply. Messrs. Consultees Services Private Limited, a company registered under GST in Mumbai, Maharashtra, offers business consultancy, digital marketing and project management services across India. The company recorded the following transactions in October. Consultancy services for market analysis, provided consultancy service for market analysis to XYZ, a registered client in Chennai, Tamil Nadu, for 4,50,000. Additionally, the company paid an amount of 4,500 as professional tax applicable in the state of Maharashtra as per the requirement of local state legislation. The amount of professional tax was recovered separately from XYZ Limited. Now, in this case, what is the transaction value? 4,50,000. And what about that 4,500? To be included or not to be included? To be included. Why? Because it is professional tax. Professional tax, and it is recovered from the recipient. So taxes other than GST, if charged by the supplier to the recipient, should be included in the value. So therefore, this is not including 4,50,000. How you not including 4,50,000? Additionally. So therefore, the value will be 4,54,500. So that should be taken as the value 4,54,500. Actually, what we need to do in this question, first you need to arrive at the value of supply, then whatever is the output tax and the net GST payable. Okay, and here first value we are determining, then we will see the tax. So this is inward or outward? Definitely outward. Definitely outward. First value we determined, then it is outward. Taxable or exempted? Taxable. We don't have any exemption with respect to this, and it is given as interstate. Means what is the type of liability? IGST, and that too it will be covered under FCM. What is extra in this question? Valuation also we need to do. In the previous questions and all, value directly they gave, but in this valuation also you need to do. Then next, digital marketing service for launch event. Conducted digital marketing for an upcoming product launch for Mr. A based in Rajasthan, who is an unregistered person under GST. The agreed fee for the said service is 3 lakhs. Out of the agreed fee, an amount of 25,000 is incurred by Mr. A. The company was liable to pay the same in relation to supply, and the net payment received by the company was 2,75,000. Tell me how much should be taken as the value. First 2,75,000 is the transaction value, and this 25,000 which is incurred by the recipient is on behalf of the supplier. Section 15(2)(b), any amount that the supplier is liable to pay, because the company is liable to pay the same, but which is incurred by the recipient should be included in the value. So how much should be taken as the value in this case? 3 lakhs should be taken as a value. Again, it will be an outward supply and it will be taxable. And what is the nature of supply? Is it given inter like that? No. And below also we don't have any information. All transactions are interstate, outright, full, unless otherwise specified. So here it is interstate only. And the liability will be IGST, and what is it? FCM. We don't have RCM for this digital marketing. Traveling payment for the team. The employees incurred an amount of 50,000 on travel to Kolkata for client project and claimed a reimbursement of the same from the company. As a policy, company charged such expenses from the client on actual basis. Include. Definitely that 50,000 rupees should be taken as the value. Why? See, first the expenditure is incurred by whom? Supplier, and charged it to the recipient. When? Before, at the time of delivery of goods or supply of service, definitely it should be taken into the value. Again, it is outward and taxable, and it will be FCM. So value should be 50,000. Then next, post-supply discount. Post-supply discount was offered to a customer amounting to 50,000 against a supply for which invoice was issued in September. The customer has not reversed the ITC relating to such discount. Not allowed as deduction. Why not allowed as deduction? Post-supply discount is allowed as deduction if the recipient reverses the ITC, proportionate ITC. Here recipient is not reversing the ITC, so no deduction in this case. Just ignore it. Recovery of late payment charges. The company received an amount of 1 lakh as late payment charges for delay in payment of consideration from a client whose service was completed in June. Definitely it should be included in the value. Why it should be included in the value? Interest, late fee or penalty for delay in receipt of consideration. It should be included in the value. How much should be taken? 1 lakh. 1 lakh. So accordingly 1 lakh should be taken as the value in this case. Purchase of car. This is inward. Purchase of car is inward. Purchase of car. A car was purchased in the name of the company for use of the director. The total cost of the car was 10 lakh 50 inclusive of IGST amounting to 1 lakh 50. ITC not available. Why not available? Car is a blocked credit and it is not covered under exceptions. That's why ITC not available. And it is a inward under FCM but no ITC. The company paid insurance for the above new car amounting to 25,000 which includes IGST. Again inward, no ITC. Why? As the car purchased is not eligible for ITC, even on insurance service also ITC not available. Then next, procurement of service. The company received interstate supply of services used for business purpose on which GST paid was 45,000 and the said credit was not restricted. Means can we take ITC? Yes. Directly we can take ITC. The company sponsored a sports event wherein it paid 2 lakh rupees to the event organizer. Remember it is inward and nowhere it is given that it is a recognized sports body, therefore it will be taxable, and it is a company. Consultees Private Limited means it will come under RCM. Can we take ITC? Yes. We can take ITC. Now value is how much? Value is 9,04,500. How value is 9,04,500? We did know all this. 4,54,500, 3,50,000 and this 1 lakh, that is 9,04,500. On that, what is the rate of GST given? Everything is interstate means 18%. So 9,04,500 into 18%, 1,62,810. Okay. Now, what is the ITC available? Here which and all cases ITC available? Car no ITC, insurance no ITC, but procurement of other service 45,000 we can take ITC, sponsorship service also we can take ITC. So total 81,000. What is their gross GST payable? 1,62,810. How much is the input tax credit? 81,000. And is there any GST? Yes. Sponsorship services, this 36,000 we need to pay under RCM. So first 1,62,810 minus 81,000, that is 81,810 plus RCM liability we need to add 36,000, so 1,17,810. Actually they eliminated one effort here, segregating into CGST, SGST, IGST, but instead they have put one effort. What is that? Valuation. We have to determine the value of supply also. Then look into question number 41. The previous question we did is of 10 mark question type. All these from now on is 5 marks questions only. See this. Briefly examine the place of supply in the following independent cases. Miss Shanti, unregistered resident of Gujarat, went to meet her parents at the native place Patna, Bihar, and buy medical insurance policy for her parents from an insurance company of Patna. The location of recipient is in the records of MNT insurance is Patna. You tell me what should be taken as a place of supply. For insurance, do we have any specific provision? No. So general provision. What should be taken? Location of recipient. B2B or B2C? We need to see B2C. So B2C, location of recipient in the records of supplier. What is the location of recipient in the records of supplier? Patna. So that will be taken as the place of supply. Then Lakhan Singh Transports. Actually this question we discussed. It's in practice manual, we discussed this. Lakhan Singh Transports Private Limited, a goods transport agency registered in Noida, Uttar Pradesh, is hired by Ram Trade Links registered in New Delhi to transport its consignments. So transportation of goods, it is in TOT. So we need to check B2B. Yes, it is B2B registered. So therefore location of recipient. What is the location of recipient? New Delhi. Then Mr. Karan, Mumbai, takes a postpaid mobile connection in Mumbai for the service provider Freesia Limited and gives his residential address at Mumbai as the billing address. So in case of postpaid connection, we need to take billing address, that is Mumbai will be taken as the place of supply. Then look into question number 42. Razor Online Private Limited, a company registered under GST in Maharashtra, is a payment aggregator regulated by RBI. It facilitates digital payments for thousands of small merchants and e-commerce platform. Razor Online Service receives customer payments through credit card, debit card, UPI and collects the funds in a escrow account and settles them to the merchants with the RBI prescribed timeline. It charges a normal transaction fee for each payment process. In addition, they will collect payment gateway charges. We discussed this. Sir, up to 2000 rupees. If the processing fee is collected, that is exempted. If it is payment gateway charges, it is taxable. Beyond 2000 rupees per transaction, both payment gateway also taxable, processing charges also taxable. So in this case, payment gateway charges, that is facilitating transaction routing and security authentication, and charges platform usage to online merchants. In the month of May, the following transactions were recorded. Payment settlement. What is the average transaction value? 1500. What is this? Taxable or exempted? Exempted. Why? As the transaction is up to 2000, the settlement charges will be exempted. And next one, 2500 taxable. Then payment gateway charges 1500 taxable. Why? Payment gateway charges always taxable. Compute the GST liability of Razor Online Private Limited. 3 lakhs, 3 lakh 60 and 2 lakh 60. 3 lakhs, 3 lakh 60 and 2 lakh 60, 10 lakh 20. On that 18% will be GST. Is it clear, pa? So we need to write about that point. What is that? If the card transactions through online, so the processing fee, GST on processing fee is exempted, provided the transaction is up to 2000. However, payment gateway charges is not exempted, provided these people are regulated by RBI. If they are not regulated by RBI, everything will be taxable. The 2000 rupees per transaction exemption is not available. Next, question number 43. ABC Insurance Limited, a registered insurer in Maharashtra, is engaged in providing insurance services. During the current financial year, the company entered into following transactions. ABC Insurance Limited enters into a co-insurance agreement. Co-insurance that exclusion from supply we discussed now, co-insurance, that one. ABC Insurance Limited enters into co-insurance agreement with XYZ Insurance, where ABC is the lead insurer. The insured, that is the recipient, Gyati Industries, pays a total premium of 50 lakhs, which is apportioned by the lead insurer, ABC Insurance Limited, between itself and XYZ Insurance in the ratio of 60:40 for the insurance services jointly supplied by them to Gyati Industries. ABC Insurance Limited agrees to discharge the entire GST liability. ABC Insurance agrees to discharge the entire GST liability on the full amount of premium received from Gyati Industries. Now tell me whether the money received by XYZ Insurance is covered under supply or excluded from supply. Excluded from supply, because the lead insurer is paying GST on entire 10 lakhs. Therefore, how much the co-insurer received? 4 lakhs. That 4 lakhs received by the co-insurer, that is XYZ Insurance Limited, is excluded from supply as per section 7 subsection 2 read with schedule 3. Suppose in the same question, what if they gave that ABC Insurance Limited agrees to discharge the GST on the premium retained by them, that is 6 lakhs. Then the 4 lakhs which is received by XYZ Insurance is covered under supply and chargeable to GST in the hands of XYZ Insurance. Okay, pa? That's the answer for this. So we need to write about that. The co-insurer XYZ does not pay GST on its share of premium separately. Then next. So a large industrial plant needs an insurance worth 500 crore. It approaches ABC Insurance Limited. See, in the first case actually 50 lakhs into 40%. 50 lakhs into 40% means 20 lakhs. Correct? I said 10 lakhs. I said 4 lakhs, assuming it is 10 lakhs. So 50 lakhs means 50 lakhs into 40% is what? 20 lakhs. 20 lakhs is excluded from supply provided ABC pay GST on entire 50 lakhs. Second one, a large industrial plant needs an insurance worth 500 crore. It approached ABC Insurance Limited for the same. However, since ABC Insurance Limited is unable to underwrite the entire risk alone, it enters into reinsurance agreement with the reinsurer, PQR Insurance. The total premium charged is 50 lakhs. The insurer ABC pays a reinsurance premium 20 lakhs. So they are giving 20 lakhs to PQR. And this allows ABC Insurance to manage its financial exposure. While paying this amount, PQR Insurance, ABC Insurance deduct a ceding commission of 1 lakh. Means literally how much they gave? Only 19 lakhs. They gave only 19 lakhs. Okay. Which it has charged for the service. It provides PQR Insurance and PQR GST pays GST on the gross insurance premium including ceding commission. Means PQR Insurance company will pay GST on what? 19 or 20? 20. Even though they received 19, but they are paying GST on 20 lakhs. Now this 1 lakh which is received by ABC, covered under supply or excluded from supply? Excluded from supply, because on entire 20 lakhs who is paying? PQR. What if PQR pay GST on 19 lakhs? 1 lakh which is retained by ABC is covered under supply. Okay. Then question number 44. State whether GST payable in the following cases. Service received by Government of India from a pollution consultant in Mumbai. Means pollution consultant in Mumbai is providing services to government. Service pertains to management of pollution control in and around NCR. Consideration paid by Government of India is 12 lakhs, out of which 3 lakh is reimbursed by Delhi government. And here assuming that it is covered under, so here you write down covered under article 243G or W of Constitution. Covered under article 243W of Constitution. Now, what is your answer, pa? You are a pollution consultant. You are providing services to Delhi government, and actually it is an activity entrusted to government under Constitution. So you provided what service it is? Pure service. There is no goods element also. Correct? So taxable or exempted? Exempted. Pure services provided to government in relation to function entrusted to them will be covered under the exemption, and therefore it will be exempted. Okay. Then suppose if this line is not given, then it will be taxable. Okay. So that should be given in the question. Only when it is given in the question, then it will be covered under exemption. Otherwise, it will be taxable. I wrote. So the answer will be exempted. Suppose if this line is not there, then what will be the answer? Taxable. Okay. Why? Because it's not falling under the constitution and the same will be taxable. You understood, pa? Suppose if it is given, then it will be covered under exemption. Idu okay va? Then next. Thereafter, Delhi government 12 lakhs, out of which 3 lakh is reimbursed by Delhi government. What about that? Central government collected 3 lakhs from Delhi government. Interdepartmental services, do you remember that? Interdepartmental services covered under the specific exemptions. So interdepartmental services will be exempted. Whether it is covered under the constitution or not covered under the constitution, interdepartmental services is exempted. That is this point. Number 2, Kerala Industrial Development Corporation gives an industrial plot of land to X Limited on lease, SIDCO. When the exemption we saw, long-term lease of land. Is it lease for more than or equal to 30 years? Yes. One-time salami, that is upfront amount, is 30 lakhs and annual lease rental is 5 lakhs. Such plot is utilized by X for development of industry. You tell me what is your answer, taxable or exempted? You check your book. Exemption for land, one chart we discussed. Renting of immobile property, 51, page number 51. In that page number 51, you can see land, below land second exemption. Below land second exemption. Only, very good, only upfront amount, that 30 lakhs will be exempted, but the annual lease rental 5 lakh is taxable. Then number 3, Skill Bridge Private Limited signs a MOU with National Skill Development Corporation to act as the approved training partner under Pradhan Mantri Kaushal Vikas Yojana for training partner covered under NSDC. Okay. So it conducts training on retail sales associate skills aligned to NSQF level 4 and receives 50 lakh from NSDC for this purpose. However, they are not training body accredited by NSDC. Previously, the exemption was only for training body. I wrote one more point also, training partner. In education services, we discussed that. What's the page number? 47. Page number 47. In that page number 47, we have discussed training partner, that is exempted. So therefore, here they are covered under the exemption, either training body or training partner. Number 4, Sure Life Insurance Limited, a registered general insurance company, contribute 50 lakhs towards motor vehicle insurance fund maintained by Government of India under section 164B of Motor Vehicle Act. This also we discussed. Group insurance fund, Army, Navy, Air Force, Coastal Guard, Central Armed Police Forces, and now extra motor vehicle accident fund, that is covered under the exemption. And even I have given you one chart also to understand that how it will work. So that premium which is collected is exempted. Then look into question number 45. Urban Stay Private Limited is an e-commerce operator facilitating short-term accommodation services through its platform, a notified service under 9(5) of CGST Act. In the month of April, it had the following transaction. Booking charges for homestay provided by unregistered person through the platform. For 9(5) is applicable or not applicable, pa? Accommodation services by unregistered person is covered under 9(5), correct? Accommodation services by unregistered person through e-commerce operator is covered under 9(5). So this will be covered under 9(5). So who will pay GST on the 10 lakhs? This Urban Stay e-commerce operator will pay GST. Second, platform usage fee charged to property owners. That is regular liability, not 9(5). Regular, they are getting some commission on that regular liability. Advertising space sold on the website to brands that is also regular liability. That is not 9(5) liability, that is regular liability. Now we discuss one point. What is that? For payment of GST under 9(5) by e-commerce operator, they have to use only cash ledger. They cannot use input tax credit for payment of that liability. However, with respect to GST payable on commission and other charges, they will pay GST by utilizing credit ledger. So they have some inward supplies per Google ads and marketing services. We don't have any block credit, we can take. Office rent also we can take. Laptop also we can take. IT is available. IT is available. And food and beverages, ITC not available, no ITC. Cloud server subscription, ITC is available. Now, what are the transactions on which they can take ITC? 1 lakh into 18%, 18,000. Then 70,000, you take 1 lakh plus 70,000 plus 1 lakh 20 plus 60. So total how much? 3 lakh 50. 3 lakh 50 into 18%. What is the ITC available to them? 63,000. And here on this 10 lakhs they need to pay how much? 1 lakh 20. For payment of that 1 lakh 20, can they use the 63? No. However, for payment of this 3 lakhs into 18%, this 3 lakhs into 18%, can they use 63,000? Yes. So see this. First ITC 63,000, you understood now? And 9(5) liability will be 1 lakh 20,000. Tax on urban stays owned services 36,000 plus 18,000, that is 54,000. So this 54,000 they can utilize ITC and pay, correct? But this 1 lakh 20 should be paid only through cash ledger. Now what is the excess ITC they have? 63,000 minus 54,000. This 9,000 will be ITC to be carried forward. Understood? So like this they can give a question related to payment of liability through cash ledger. 9(5) liability. Now whether the turnover, taxable turnover exceeds 50 lakhs? No. The taxable turnover did not exceed 50 lakhs. That's the reason why we are not applying that rule 86B. Otherwise here definitely we need to apply rule 86B. Because we have lot of ITC than the liability. Question number 46. Bharuch Dahej Railway Company Limited, a special purpose vehicle, has been tasked with enhancing industrial connectivity in Gujarat by undertaking gauge conversion projects. During the month of December, the following transaction took place. Indian Railways used the converted broad gauge line for passenger and freight operations. BDRL charged Indian Railways 15 lakhs for the infrastructure use under the concession agreement. What is your answer for this 15 lakhs? There is a SPV, we discussed one chart. There is a SPV, that SPV transferred the infrastructure to the Indian Railways, for which Indian Railways paid the consideration during the concession period. Whether that money received by Indian Railways, money received by SPV will be taxable or exempted? Exempted. So this 15 lakhs will be exempted. Why it is exempted? Services provided by SPV to Indian Railways by way of allowing Indian Railways to use the infrastructure built and owned by SPVs. Then next, Indian Railway carried out maintenance services including track inspection and repair work for the converted line, and the cost of this service was 6 lakhs. This is also exempted. We discuss one more point. Services, maintenance services provided by Indian Railways to SPVs against consideration in the form of maintenance charges is exempted. Correct? And next, BDRCL leased commercial space at one of the railway station to a private logistics company for 8 lakhs. That is not exempted. We did not cover. Indian Railways transported construction materials for BDRCL's ongoing infrastructure project. Is construction material given in the list of notified goods? No. For Indian Railways only notified goods is exempted. So these two transactions will be taxable. Clear pa? So this is on that SPV point. Again, not tested in exam. Possible. Okay. All these are amendments of May, not tested in September exam. So high chances are there for Jan. Next, question number 47. ABC Build Tech Limited, a registered manufacturer of prefabricated steel structures in Karnataka, undertakes the following supplies during March 2026. The company dispatches 3 separate consignment, each worth 48,000, including 12% GST, from its Bengaluru plant to different customers, loading them all in one truck for delivery. Say this. Even though each consignment value does not exceed 50,000, but cumulatively it exceeded 50,000 in one truck, which means for each consignment a separate e-way bill has to be generated by the transporter, and a consolidated e-way bill also should be generated. Hope you remember we made the discussion that although each consignment is below 50, all 3 are loaded in a single truck, and the transporter is required to generate consolidated e-way bill since the total consignment value exceeds 50,000. Then number 2, it sends semi-finished steel trusses worth 15,000, excluding 12% GST, to an unregistered job worker in Karnataka for further fabrication. After job work, the job worker directly dispatches the finished goods to XYZ Constructions Limited, a registered customer located in Andhra Pradesh, on the instruction of ABC Build Tech. So here value does not exceed 50,000. So e-way bill required or not required? Required. Why? Goods sent on job work. As the goods are sent on job work, e-way bill is mandatory for the job work movement. Now, in the case, okay, so after completion of the job work, the finished goods are sent. What about that? Further, the job work dispatches the processed goods on instruction of principal, since it is an interstate movement still under job work. Correct? See, not only onward movement, return movement under job work also e-way bill is mandatory irrespective of the value. So being principal is required to generate e-way bill. Then third, dispatched sandbags and earth filling material exempt from GST worth 2 lakh from Karnataka to Kerala. E-way bill not required. Why? The goods are exempted, so therefore e-way bill not required, but the goods should accompany delivery challan. Then next, that is this question number 48. Say this. Harsha Textiles Private Limited, a registered company in Tamil Nadu, is engaged in manufacture of garments. The company procured the following supplies in November 24. Legal consultancy service from Advocate V. Kumar. Identify the supply on which Harsha Textile is liable to pay under reverse charge, and also determine who shall issue the tax invoice. First one, Advocate service, FCM or RCM? RCM. Who will issue invoice? Supplier or recipient? So self invoice. Correct? Why? Because the supplier is unregistered. And service of GTA, consignment note issued, supplier is registered. Even then they are not opting na. So what is the default option? RCM. Who will give invoice? Supplier. So there is no self invoice. Correct? Next, you can see the answer. First case, there is a self invoice by recipient. Second case, supplier will give. And what is the due date of self invoice? Within 30 days from the date of receipt. That is 3rd November. Within 30 days will be 3rd December. Okay. Next. Third, raw cotton purchased from farmer, supplier is unregistered. Actually, this will be covered under RCM. And supplier is unregistered. So self invoice will be applicable in this case. Okay. You understood? Recipient. Why? Because usually agriculturist is exempted from registration. Their outward supplies, recipient only will pay GST. And what is the time limit within which the invoice to be given? Within 30 days from the date of purchase. Manpower supply service received from SAM Workforce Private Limited. Manpower supply, supplier should be other than body corporate, then only RCM. But supplier is body corporate. Therefore, it will be FCM. Definitely supplier only should give the invoice in this case. Is it clear? Next, purchase of steel shelves from local unregistered trader for office infrastructure. We don't have anything in RCM in this case. So, therefore, it will be FCM. Supplier only should pay GST. So, there is no need to give invoice, self-invoice. Sponsorship service availed from Chennai Sports Club, a registered entity. It will be RCM. But the supplier is registered. So, supplier only will give the invoice. Is it clear, pa? And here, sir, sponsorship availed from Chennai Sports Club. Why it is RCM, sir? Why it is RCM? Supplier is other than body corporate and recipient is body corporate. That's why we are taking it as RCM. So, who will give the invoice? Supplier only will give invoice because the supplier is registered. So, based on self-invoice, they can make a question like this. Because this question they asked in CMA Intermediate recently. For June attempt they have asked, okay, like this. Next. Messrs. Autoglide Motors Limited, an authorized dealer of motor vehicle, purchases automobile. But it's okay na, some 10 minutes extra, only 2 questions. Autoglide Motors Limited, an authorized dealer of motor vehicle, purchases automobiles from manufacturers and sell them to customers. As per the dealership norms, the company is required to maintain demo vehicles at its showroom for test drives and promotional activities. During January, Autoglide Motors purchased 10 sedans from XYZ Automobiles for 50 lakhs, including GST at 28%, for exclusive use as demo vehicle for test drive and customer demonstrations. Additionally, one of the demo vehicle was used for transporting company employees between dealership. The company has capitalized these demo vehicles in its books for 50 lakhs. Books for 50 lakhs. 50 lakhs is including GST. They capitalized it for full 50 lakhs. Full 50 lakhs, which means they cannot, even though they can take ITC, on demo vehicles, but in this case, they capitalized it for full value. As they capitalized the full value of cars, they cannot avail ITC as per 16.3. Is it clear? After 1 year of use, Autoglide sold 5 demo vehicles, which is used for test drives for 15 lakhs. Now, first, whether Autoglide can avail ITC? No. Compute GST payable on sale of such demo vehicles. 18.6 is not applicable because ITC is not available. So, they need to pay GST as per normal transaction value. What is the normal transaction value? 15 lakhs into 28%. First case, they cannot take ITC. Second, on 15 lakhs into 28%, GST payable under 15.1. Now, say this. Compute GST payable on such demo vehicles if depreciation is computed on purchase price excluding GST. Next it will come. So, tell me what is the ITC availed? Sir, 50 lakhs is for how many cars, sir? 10 cars, correct? So, then for 5 cars it is how much? 25 lakhs. And 25 lakhs into what is the rate of GST? 28 divided by 128. So, how much is the ITC availed? 5,46,875 minus after how many years it is used? 1 year. 1 year means how many quarters? 18.6 is applicable because they are availing the ITC and they are selling it. So, therefore, capital goods on which ITC availed is sold, 18.6 will be applicable. So, therefore, ITC availed minus 5% for every quarter. How many quarters? 4 quarters. 4 quarters into 5% means 25%. 5,46,000, sorry, 20%. 5,46,875 minus 20%. 4,37,500 or GST on sale value. What is the sale value? 4,20,000, whichever is higher, 4,37,500 is the GST payable. Understood, Appa? So we discussed one circular on demo vehicles. They can make a question like this for 5 marks. Then last question, Rameshwar Industries is engaged in manufacturing semiconductors in the state of Assam. It makes only intrastate outward supplies. Following data is given. Based on the above information, you need to get the effective date of registration. First, if you are doing business in Assam, that too engaged only in supply of goods, what is the applicable limit? A. MMTN 10 lakhs, U stamp 20 lakhs. In that A is what? Arunachal Pradesh, not Assam. So for Assam, what is the limit? 40 lakhs. See the date on which they exceeded the turnover 40 lakhs. Super, no, they gave all limits 10, 20, 40. So when they cross the threshold limit 40 lakhs, April 28. Now, whether they made application for registration within 30 days? Yes, they made application for registration within 30 days. So what will be taken as the effective date of registration? April 28. So first we need to write what is the applicable threshold limit, and they made application within 30 days. So therefore April 28 will be taken as the effective date of registration. What is the period for which revised tax invoice can be issued? From which date to which date? April 28, 2024 to May 29, 2024. They can give revised tax invoice for the outward supplies. Am I right? So for the outward supplies made between April 15, 2024 to May 29, 2024, they need to give revised tax invoice. And what is the time limit for issuance of revised tax invoice? Within 1 month from the date of certificate of registration. What is date of certificate of registration? May 29, 1 month. When it is 1 month, don't add days, month only you add. That is June 29. June 29, June 29. It is not June 28, it is June 29. Because whenever the data is in month, we need to add only month, don't add the days. So therefore, they have to issue revised tax invoice by June 29, 2024. Got it? Yes, with this we completed successfully. Thank you. And so we completed revised book, Mighty 50. My job is done. And now hereafter, your work will start. What you should do? First, you take practice manual. At the end, there are some questions on comprehensive questions are there. I gave an index on comprehensive questions at the end, and thereafter we have case scenario MCQs. Those two things you complete first. Remaining and all don't read. Go to the end. Comprehensive questions are there. The 10-mark questions, around some 20 questions like that I have given that, and case scenario MCQs around some 30 case scenario MCQs are there. That 30. You finish that. While solving that, if you get doubt, you refer to the revised book. Then I have given you the test series na. The test series you start doing it. So you allocate hereafter maximum some 4 or 5 days only for IDT. Not more than that. That is still exams. So if you are writing one group, you allocate 5 days. If you are writing both groups, you allocate 3 days. Enough. In that 3 days, you try to do this revision and see the test series. If you are writing both groups, just check the question and answer. You will not have time. At least mock test you write. Only that 100 marks mock test alone you write. If you are writing both the groups. If you are writing single group, try to solve all the test series because you have ample time. If you are writing both groups, you don't have time. All questions you just go through. That mock test alone you practice once. Okay? Fine. And with this it will be sufficient, and don't worry about doubts etc. and all. I am available. I will clarify your doubts, and I was supposed to start one batch also. I postponed that batch to Jan after exams, Jan 5th onwards. Until that point of time I am there. Whatever doubts you have, you just put it in Telegram and I will clarify your doubts. Okay? And anything else? That's it. Okay, thank you and all the very best for your exams. Do well. Definitely my prayers are always there for you, and if I have a power to curse you, okay, I will curse you all that you should clear. Okay, so because wishes are not happening, curse is only happening. So therefore I curse you that you all should clear. Okay, and I curse you that you should suffer coming in CA final. Okay, okay, fine, thank you. And a small request, that is, my team was asking me, sir, please collect the review from the students. Done na everyone? Yes pa. Others, those who would have not done, please do. Ena review illana namba mattingranga nama podra effort adnala. Okay, thank you all, take care, bye. Yes, and I have to thank you all for attending all the 4 days, even though it was raining. You are really heroes pa. Hats off to you. Hats off to you. Amazing you are. Because see, there are always students will find reasons to escape. That's what usually. But you are great, and definitely you all will clear. Out of my heart I am telling you, definitely. Na chance illa. Super. Awesome. Keep it up. Thank you. And we will all meet in CA final class. Okay.